push to develop more sustainable aircraft. That is going to be unbelievably expensive. You are going to have to see a replacement at some point in the reasonably near future for the 737 MAX. That narrow body program is going to have to come through at some point. And is Boeing going to be in good enough shape to make that happen? This is an incredibly important company to the United States of America. How important is it going to be to the next administration, I think, is really critical. And I think that's going to be, again, something that people are going to watch out for. What happens post-November to Boeing? New CEO coming in. Dave Calhoun is going to go. It's going to be really interesting to see how those two factors interact.
All right, some very interesting points there, Sheila, from Guy. I mean, number one, he's spot on in terms of what's happened in the auto industry. So far ahead with EVs. Just 2 years ago, and they're killing it now with the $10,000 Seagull from BYD. Also, the election coming up, how key is that to Boeing?
There's so much to unpack in what Guy said. So my counterpoints for you on the Chinese aircraft would be the engines, which is 20% of the value of the aircraft, and the avionics, which is another 15, come from U.S. manufacturers for the COMAC. It's a GE, as well as Honeywell Collins Avionics. So they don't have the brains and the power behind the aircraft, and that's what the key piece in the missing puzzle. The COMAC C919 hasn't been very successful. Their predecessor aircraft, the ARJ, has delivered about 200 aircraft in a decade. That's what Boeing should be doing in 6 months. So they haven't had much success, but never say never. Truly, we believe the next generation aircraft is the engine, is the power behind it, whether it's the MAX, whether it's the COMAC plane or Airbus. So it's the engine manufacturers, Rolls, GE, and Raytheon, that need to really power the next generation aircraft, and we don't think that's till 2035. So I do think in aviation it's a little bit different than the auto industry, given the barriers to entry.
Right. I've heard that from Alan Mulally, in fact. What about the election? I mean, Guy makes a great point. Government support is huge for this company. I guess they both, whether Trump or Biden wins, will have to, as you said, it's too big to fail. They've got to hold up this industry.
Yeah, I think a President Trump would have more implications for the defense sector than the commercial aviation sector. Who knows? It's up for grabs. China clearly thinks Trump is more unpredictable, so they'll hold off messing around with him on the defense side of things. And on commercial aviation, who knows what tariffs he puts in. But Biden has been relatively innocuous to the Chinese relationship when it comes to Boeing, right? And Boeing started taking aircraft. They took 30 aircraft to start the year. So they finally started taking deliveries in January of 24. China needs planes is the bottom line. They're supposed to be taking 350 planes annually because they're 25% of global demand, but they've been taking 125 or so over the last 4 years. So they're undersupplied, so they need planes.
Fascinating stuff here. Have you read Airframe by Michael Crichton?
No, I have not.
I started thinking about this when I read that book like 20 years ago, and it's a fantastic thriller. Part of it's about the relationship between China and the U.S. in terms of avionics. Anyway, I highly recommend it. Sheila, thanks so much for joining us. Sheila Kahyaoglu there from Jefferies. Coming up, we're going to give you the morning calls, and then later, Megan Horniman joins us of Verdant's Capital Advisors around the opening bell. This is Bloomberg.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
We'll have to build a portfolio of interventions. Lifestyle will also play into for some of them, and I think we can help many patients get get down to a weight that they can maintain and live the life they want to live and avoid many comorbidities for the healthcare systems.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything.
Time now for our morning calls. First up, Peel Hunt upgrading Carnival to a buy, saying the company will appeal to more investors as it speeds up its debt for equity swap. TD Cowen raising its price target on e.l.f. Beauty to a new street high of $235, saying the beauty brand can take advantage of opportunities. We'll be back with more. This is Bloomberg.
Arch has laid plenty of groundwork for future revenue, but for now, Mark Messler's most pressing challenge as CFO is conserving capital.
You have to have the short-term discipline to sort of circle the wagons around cash. I mean, cash is oxygen. I know where every ounce of cash is going, and but we also have to be nimble around that as well because things change by the day.
Archer went public in 2021 in a reverse merger with a SPAC, Ken Moelis's Atlas Crest Investments. Through August 2023, the company raised over $1 billion from investors including Stellantis, Boeing, United Airlines, and Cathie Wood's ARK Investment Management.
Does that ARK investment open doors for you to bring in different kinds of institutional money going forward?
It does. I mean, I think there's a lot of credibility that comes in with an investor like ARK. As I think about, my top targeted list of investors over the next 2 to 3 years, an investment like that gives us some credibility and gives us a little bit of staying power as I go in and talk to other investors.
With the SPAC pipe now closed, Archer's facing a new phase of raising capital.
I know the folks who aren't willing to invest right now may have large pockets of investment in the future. So I want to be in front of them. I'm wanting to show them progress. I want to create credibility with them that we are marching towards our goals of commercialization.
Good morning from our world headquarters in New York. I'm Manus Krennic.
And I'm Danny Berger. Let's set your agenda.
Bloomberg Brief delivers the market news, data, and analysis you need live every weekday at 5 a.m. Eastern. Bloomberg. Context changes everything. Get your fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything.
To the open, I'm Matt Miller. Moments away from the start of trading, and we do see futures down across the board. Not huge moves. In fact, NASDAQ 100 futures are basically unchanged, but the S&P futures, the E-minis are down 0.25%. Russell 2000 futures are down 0.75%. One of the stocks that we're watching very closely at the open, and one that I really want to talk about today, is Intel. The CEO, Pat Gelsinger, taking a shot at NVIDIA CEO Jensen Huang as he fights for a top spot in, well, really chip production as well as artificial intelligence. Ed Ludlow joins us for more. He's the anchor of Bloomberg Tech, which you can watch live at 11 o'clock Eastern Time. Ed, is Intel really catching up to NVIDIA in terms of its AI accelerators?
it is not presently catching up in terms of products in the real world or revenue that reflects that product in the real world. And actually, this line from Pat Gelsinger overnight, particularly invoking Moore's Law, is pretty consistent with the story he's tried to tell since he came back to Intel as CEO. Moore's Law, a historic reference to the law developed by one of Intel's co-founders, is that the number of transistors on an integrated circuit doubles every year without any additional cost of production. In other words, you can fit more technology into it and thus it performs better. Jensen Huang, who is the CEO of NVIDIA, has cast doubt that the legacy names in the context of making high-performance GPU and CPU can actually do that. So this was fighting talk from him. Intel did demonstrate their latest generation data center chip, which is Xeon 6, and they touted all these great performance benchmarks that show it's better than their current generation of gear. But the financials just don't prove that, right? AMD is going to grow 10% this year at a top-line perspective. NVIDIA's sales are doubling, and Intel is not anywhere near that. Their sales will be less in fiscal 24 than they were 3 years ago. They're going in the wrong direction if you use revenue as a guide.
Some analysts saying that the first quarter pull through not really going through to the rest of the year. Specific to the second quarter, sales could decline as much as 2%. Profitability could drop by 20%. Apparently, they're having to use a lot of their promotions to draw customers into their stores. So there's demand uncertainty. On the other hand, the analyst over at Citi is saying that they are navigating a tough environment well, but the results, this guidance, just not quite enough for a stock that's up more than 30% over the last 12 months into today, Matt.
Wow. Well, that's interesting indeed. Abigail, thanks very much for that. Let's turn now to crypto. Core Scientific receiving an all-cash bid by cloud computing provider CoreWeave for $575 a share as the Bitcoin miner seeks to expand its AI data center capacity. This is truly fascinating. Obviously, Bitcoin miners have a ton of computing power and usually access to a ton of energy, so I guess they can do AI with that too. Isabel Lee is here with more. Isabel?
Hey, Matt, this is definitely interesting and lots of moving parts here. So we have Core Scientific, lots of core here, surging around 30% with each stock around $6.03 a piece. So that's already above the $5.75 offer. So the all-cash bid for Core Scientific was made on Monday, and this offer represents around a 55% premium of the 3-month volume-weighted average price of Core Scientific. So the market cap of Core Scientific is around $866 million. And this is where it gets interesting, because earlier today, we just got news that Core Scientific signed a 12-year contract with CoreWeave, and this is to deliver around 200 megawatts of its operations in a bid to pivot away from Bitcoin mining, because we've seen kind of a wavering down and a tepid demand when it comes to Bitcoin mining. Bitcoin's price is actually now up around 69,000. So Core Scientific said it will modify multiple sites to CoreWeave's NVIDIA GPUs, and this will kick off in the second half of the year, and it will become operational, at least that's the goal, by the first half of 2025. And if that happens, the revenue is expected to generate around $3.5 billion. But lots of moving parts here, because why would you announce a deal and have Bloomberg exclusively reporting that CoreWeave made an offer to Core Scientific? So definitely something we will be watching throughout the day.
I want to just tell you that I bought my first Bitcoin for $800, and I bought my second Bitcoin for $600.
Good for you.
And unfortunately, that's all the Bitcoin I ever bought. I wish it had been more. Isabel Lee, thanks very much. I should also say that I spent it and lost it. Let's turn to software. GitLab's revenue forecast came in weaker than expected. However, analysts still find the results encouraging. Katie Greifeld is here with more on Can we even say GitLab? I thought that was, you can't say Git. In the UK, it's like a bad word. I'll just tell you that.
Luckily, we are in the United States of America, and we're talking about GitLab. It's, of course, a software company. You take a look at shares, they can't really decide what to do, and it seems like Wall Street a little bit mixed on this report as well. Let's get into some of the numbers, because there was a lot of good news in this report last night. Adjusted earnings coming in at 3 cents a share in the first quarter. Wall Street had actually been expecting a loss of 4 cents a share, so obviously a beat there. You take a look at revenue too, $169.2 million, topping estimates as well. And you spoke about guidance. I mean, you take a look at the adjusted EPS guidance, 34 cents to 37 cents per share for fiscal 2025. That's actually well above their previous range. So you take a look at shares, they were down in the pre-market, then they were higher, and now they're just about flat right now. You take a look at what the sell side is saying, and there is a theme out there that maybe the adoption of the new AI features over at GitLab, maybe that's not exactly benefiting revenue yet, but in any case, this is a company that needs some good news, because going into yesterday's close, shares were lower by about 25%.
All right. Katie G, thank you very much for that. Katie Greifeld will be along in just about 25 minutes to take you through the 10 o'clock hour. Megan Horniman joins us right now, CIO at Verdance Capital Advisors, weighing in on the market. She wrote, equity and bond markets staged an impressive turnaround in May after a dismal April performance, despite mixed economic and inflation data, which further pushed out expectations for Federal Reserve rate cuts this year. She joins us now, and Megan, it seems like, you know, inflation isn't getting really to target anytime soon, even if we see it not as bad as it has been, but the economic data looks softer. Is that a reason to be optimistic that the Fed still is going to cut rates this year?
No, I think you have to be a little bit more realistic as well. When you look at the inflation data, like you mentioned, we are getting better. It is improving, but we're not anywhere near that 2% target. They said that we don't have to get to the 2% target before they'll cut rates, but there still is signs of that sticky inflation that's out there. We're going to get more information this week, whether it's through the ISM Services Index tomorrow. That has shown sticky inflation, and then we'll get the pressures from earnings later this week when we get the employment report. These are things that's showing inflation. The easy part of it's been done, but now the hard work needs to be done. So I think the economy is weakening, but be careful thinking that just because the economy is weakening that the Fed's going to come in and save the day like they have in the past. They've made it very clear that they will sacrifice the economy in order to get inflation to where it needs to be.
Do they still feel that way? Because when we see a drop in spending, when we see, you know, a miss on non-farm payrolls, and we have another reading coming up on Friday, it starts to feel like Jerome Powell and company could cut a little bit.
Yeah, I think it's still on the table at some point this year, but I don't think there's any rush for them to have to do it. Let's be serious. I mean, the retail sales have been slowing. The consumer is squeezed. We know that. The consumer overspent for way too long. They're now looking at credit card debt that's very high. A slowdown in the consumer is one of the things that we had forecasted this year. But when you look at some of the other indicators like the employment situation, it is slowing. The creation of jobs is slowing, but the employment rate is still very low. So these are things they're going to have to take into consideration. It is very, very easy to reignite inflation if you get too soft. And we saw that happen at the end of last year when Jerome Powell decided to tell the market that, hey, yeah, there's going to be multiple rate cuts this year. The market was pricing in 6 to 7. That never happened. That was, I think, crazy to think that it would happen. And we saw the economy get a boost in some of the readings in the first couple months of the year. Well, that's what the Fed has to be careful of. They don't want to be in a stop-and-go situation like they were in the 70s and 80s, and they've made that very clear to us.
Okay, so why did we have such a strong May? 2 weeks ago, we were at 53.21 on the S&P 500. Is it just all about earnings expansion and a bet that that continues?
Yeah, I think a lot of it had to do with earnings, for sure. And then I do think if you look at the very end of the month where we had that, you could say soft, I'd say as expected PCE numbers, so there were no surprises there. I think that helped boost the market as well, but it's been all earnings. So what's the catalyst going forward? Eventually, bad news is going to be bad news for the equity market. Whether it's inflation is sticky or that the economy is weakening at a faster pace, neither one of those is good for the equity market.
Is there at least a broadening out to be expected, Megan? I mean, like I was saying, you know, in the middle of May, we had the Magnificent Seven earnings up 48% and the S&P 493 down 2%. So it's very heavily skewed towards just a few companies. Are we going to see that change so that more and more companies are coming out with better earnings, more and more companies are driving higher market caps?
I think it's going to take some time for that, and that's because I think that the rest of the index is still looking at, you know, a weaker economic trajectory. I think you're going to have to see the earnings estimates for the broad S&P 500 come down for 2025. We haven't seen that yet. They basically flatlined, but the economy is slowing. So it's really hard to say you're going to get a lot of participation in other areas of the market if we're looking at a very, very uncertain earnings outlook.
So what do you do right now? What should an investor do, especially one who's all in, as most probably are in this FOMO market?
Yeah, I would look at your portfolios. Make sure you're not overweight to where you want to be versus a benchmark. Take some profits off of the table if that's necessary. Hold on to cash. It is expected that we're going to have some volatility in this market for the rest of this year because there still is a lot of uncertainty about what the Fed's going to do. People are looking at data by data, and I just think that's going to create some opportunities as the economy continues to weaken and we get closer to what we think may have to be a Fed rate cut. We just don't know exactly when that's going to be. So take the opportunities, lighten up where you're overweight, where you've had a lot of profits, hold on to your cash. You're still earning 5%. It's not the end of the world to be sitting on that 5%. And in our view, we don't think the Fed's going to be cutting in some of these expectations, July and September. It's just not realistic. So just sit there, hold, have dry powder, and be ready to put it to work when we get these pullbacks.
By the way, I don't want to draw too many parallels, but we just saw Indian stocks absolutely tank because Modi's party didn't get the landslide victory, at least doesn't look like it, that we were expecting. Now, here in the U.S., we don't expect a landslide, but we do have an election coming up in November. Does it make a difference to investors?
I think that it's a little early at this point for investors to be looking at the election because it is basically neck and neck at this point. We're going to wait until we get some more indication from what their policies are going to be, what they focus on in their first term. We know that both of the candidates are tariffs. You know, Biden just put tariffs. We know that that's always been Trump's ammunition as well. The one thing from a company perspective is if you start to get uncertainty from corporate taxes or tariffs, that's when you start to see CapEx spending pull back until we get more clarity around the election. That's not great for the economy, and it's not great for earnings long term. So I think there is a lot of volatility that we can see going into the election, even with a neck and neck election.
All right, Megan, thanks so much for joining us. Hope to have you back soon. Megan Horniman there, Chief Investment Officer over at Verdance Capital Advisors. Coming up, we're going to talk more about the battle for AI chip leadership.
Every device will become an AI device. Every company will become an AI company. And we see this as the fuel that's driving the semiconductor industry to reach $1 trillion by the end of the decade.
We've got the latest as Intel fires back at NVIDIA. This is Bloomberg.
You actually offer a payout at 7 years to encourage people to explore if they don't find themselves in management position. I mean, what's the thinking?
Yeah.
I mean, like, what's that about?
We're not forcing everybody to be kicked out, right?
But you encourage people to explore.
Exactly. We encourage people to think about their, because sometimes it's easier, even for me, if I don't need to change everything, it's easier.
right? Change is really tough thing for everybody. Should I do this job for next 5 years, 10 years, or should I try a new thing? If I had to think, that is a great opportunity to think about it. We need to think about what kind of talents I can have for the next 5 years, 10 years. What's the best way to contribute to the world?
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show. Weekdays at 9 a.m. Hong Kong time, right here on Bloomberg. Context changes everything.
Now to have 1 billion transistors on a single chip, and even looking to 1 trillion transistors in a single package by the end of the decade. And unlike what Jensen might have you believe, Moore's Law is alive and well.
Intel is pushing back against NVIDIA's claims that traditional processors are running out of steam in the age of artificial intelligence. For more, Ed Ludlow, co-host of Bloomberg Technology, joins us from San Francisco. And, you know, Ed, I think you made a very important point when we spoke about 10 minutes ago in that the main thing that Gelsinger is selling, you know, these Gaudi 3 packages, which they say are going to be twice as fast in some ways as the package that you can get from NVIDIA right now. It's not here yet. And people aren't shelling out for it. So he can tell us that it's super fast and has so many transistors, but until people are buying it, it's not going to matter to investors.
Yeah, the state of play in the AI accelerator market right now is that Intel will probably do $500 million worth of sales in this fiscal year. AMD will do $4 billion, which is what they above what they previously guided, and NVIDIA will do $40 billion. You know, and it just gives you a sense of like the distance now between NVIDIA and Intel in this market for AI accelerators. Pat Gelsinger's story that he's tried to tell is about returning Intel to a technology leadership position. In other words, having the cutting edge of both production and product. And, you know, it was an interesting retort that he gave to Jensen Huang's idea, which is kind of the legacy chip names aren't keeping up. Moore's Law is that the number of transistors on an integrated circuit double basically every year without any additional impact to the cost of production. But that was a law that was established by Gordon Moore, one of the Intel co-founders, in 1965. The point being, you're absolutely right. Like, we see what the end goal of Intel is. It's just that right now, the market position and the sales picture doesn't put them there. It puts them pretty firmly in last place.
Nonetheless, Intel has massive support from the U.S. government, investing tens of billions of dollars in the great state of Ohio. And, you know, are they poised? Do some investors see them poised to, over the longer term, 5 to 10 years, eventually catch up or maybe even overtake an NVIDIA or an AMD?
Well, Intel has the unique position that it actually manufactures semiconductors, right? So if you think about NVIDIA and its H100, H200, and upcoming Blackwell series, it depends on TSMC, a contract manufacturer, to produce them for them. Intel controls its own fabs, so it controls its own fate in that respect in catching up on the technology leadership position. But it also has a potential viable business in making semiconductors for others. And the support of government subsidy, not just in the United States, but Europe as well, could see them achieve that if they are able to onshore the industries into the Western world. But the point and the frustration of investors, you show the year-to-date chart, down 40%, NVIDIA up 132%. At its core is that Intel has nothing to show for that right now. No big-name customer, but no tangible sales read through either.
In terms of the stock, I mean, this has given Intel a little bit of a pop. As you pointed out, I mean, it's 1%, right? It's an important event. What are the outlooks? What's the prospect for an Intel, for a Qualcomm, for an AMD in the face of the giant that is the Goliath that is NVIDIA?
Well, the one thing that they all agree on, whether it's Pat Gelsinger or Lisa Su of AMD or Jensen, is that the addressable market, particularly for data center chips in the context of AI, is going to be massive. You know, AMD's is $400 billion by, I think, 2027. Intel's talking about $1 trillion industry by the end of the decade. And the one thing that I hear from those CEOs, and indeed the investors I speak to, is that choice is important. You know, choice is the mother of innovation, and it will make for a more competitive marketplace. So there is room for all of them. But again, the story continues to be from Intel, bear with us. We see what the end goal is, we just aren't there yet.
All right, Ed, thanks very much. Very much looking forward to your program in just about an hour's time out of San Francisco. Ed Ludlow hosts Bloomberg Technology with Caroline Hyde. For some of the price action this morning in sectors, let's get over to Bloomberg's Abigail Doolittle. Abigail?
So we're looking at a small decline for the S&P 500 right now, Matt, down about 0.2%. Not surprisingly, then more sectors than not are lower. So it's a broad-based decline, as small as it is. The worst sector, energy, down 2.2%, in line with oil. Apparently, traders still not liking the idea that OPEC Plus does have plans at some point to take those production halts off. Materials also down significantly, down 1% to the upside. We have consumer staples certainly not being helped out by Bath & Body Works, although that's probably not a staple, more of a discretionary, and that sector is to the downside slightly. Real estate, industrials, healthcare. Let's take a look at a little bit of a one-off sector, which is the banking sector here in the U.S. KBW Bank's down about 0.5%, perhaps because we do have yields down. I think it's for a third day in a row. That's certainly not helping. European banks down too, and we had an interesting headline coming out not so long ago, Matt. The ECB is demanding more CRE loan provisions from some German banks. So we do have two German banks down, including Deutsche Bank down 2.1%. Really a reaction to that headline. They have, I believe, about 7% exposure of their loans to CRE. So some tightening down there and some negative bearish action for banks here in the U.S. and over in Europe.
All right, Abigail, thanks very much. Abigail Doolittle looking at the banks for us. Just 23 minutes into the trade. Coming up, the market-moving events that you need to be watching today and this week. That's next in our trading diary. This is Bloomberg.
the world of business. 2 times a day at 1 p.m. and 5 p.m. Eastern Time, hosts Joe Matthew and Keely Lines deliver news, insight, and analysis from and about politics' biggest power players.
The president has been clear that is non-negotiable.
I mean, this is going to be an ugly, ugly year.
Balance of Power, live around the world twice a day at 1 and 5 Eastern. Only on Bloomberg TV and radio. Context changes everything.
Now for our trading diary, what you need to be watching this week. JOLTS data coming out, as well as factory orders and durable goods at the top of the hour, so watch for those in just 4 minutes' time. Tomorrow, we're going to get the ISM services data, as well as PMIs from ISM. Thursday, an ECB decision, and Christine Lagarde will hold a news conference that we will bring you live right here on Bloomberg Television. Plus, we'll get another round of jobless claims, and then finally on Friday, the all-important non-farm payrolls. This was a countdown to the open. This is Bloomberg.
You are also an owner, I should have pointed out, of 3 major sports teams.
That's right.
Right? And you're the first woman, as I understand it, the first woman to own 3 major, have a stake in 3 major sports teams. Is that right?
Yes, and we'll say African American.
You were approached by the owner then of the, I guess, the Washington Wizards and the Washington Caps about maybe buying the Washington Mystics, which is the women's basketball team. And what did you say?
Well, first of all, it was Abe Pollin. He did come to me and Susan O'Malley, and they said, Abe Pollin says, look, I want you to be the face of the Washington Mystics. And I said, what do you mean be the face of? He says, I want you to buy this team. His health was failing. And I have to tell you, and a lot of women can understand this, we never get these opportunities. So that was the first thing that struck me, and I was flattered. I was really flattered. I said, well, Abe, what are the financials on this? And he handed them to me. He says, well, they're not making money. But I was still intrigued about team ownership.
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question.
Great question.
That's a question I get all night.
Bloomberg, top experts, great questions.
All right, we are 30 minutes into the U.S. trading day on this Tuesday, June 4th. Here are the top stories we're following. Just getting started. Our first guest says that it's hard to fade the Magnificent Seven and that maybe, just maybe, the tech rally is just getting started. Serious Air Therapy. Hyperice unveiled the Normatec Elite today, an air compression therapy device for athletes and individuals alike. Hyperice Chief Innovation Officer Gilad Jacobs, he joins to talk about the recovery and wellness economy. And And a channel check on regional banks. Citizens Financial Group Chairman and CEO Bruce Bonson, he joins to discuss commercial real estate concerns, their push into private banking, and the NYC market opportunity. I'm Katie Greifeld in New York. Welcome to Bloomberg Markets. You take a look at markets right now. It's an interesting story. If you take a look at the S&P 500, currently lower by about 0.1%. You have the NASDAQ 100 also down about 0.1%, and the 10-year yield, it's falling right now, currently lower by about 6 basis points, down to 4.32%. One of the things putting a bid into the bond market is the U.S. April job openings data that just dropped. We learned that in April, U.S. job openings fell to 8.059 million. The estimate had been for 8.335 million there. So maybe some good news for the Fed. Let's go to Bloomberg's Liz McCormick, who joins us now with more insight. I'm taking a look at the 10-year yield. I'm taking a look at the 2-year yield, and we are falling right now in reaction, Liz.
Yeah, Katie, this JOLTS number, like you mentioned, was below consensus. It was even below some of the numbers that from people that were already below consensus. So I think the bond market, we've had kind of a string of data that has kind of revived the hopes of how much the Fed will cut this year. And we know the JOLTS data is something Fed officials look at keenly. It's more forward-looking than some of the other data. And yeah, yields were down to come into the day, and they're falling more off this. So I think, like you see now, fully priced for a cut in November, and, over 70% chance for one more. And for a while, we were kind of swiping away even one in recent weeks. So I think this data kind of leads to, of course, we have Friday, coming with the main jobs data, and tomorrow we have ISM services, which people are focused on. But I think the JOLTS data coming in below consensus was taken as a welcome thing for the bond market.
Yeah, definitely. And like you said, there's still a lot of economic data left this week to chew on. And really all that matters, it feels like, yes, we got good news on JOLTS, but what's really going to matter is that Friday NFP report. When it comes to the Fed, though, does that really move the needle that much, or is inflation still just too high to actually cut rates right now?
Well, I think inflation is too high for them now, but I think they have started to kind of, besides the kind of hawkish stance that we've seen lately, they're clearly concerned about the economy. They're trying to pull off, not having a recession and getting inflation down. So they're watching. I think Chairman Powell had said, I'll be concerned if there's kind of like undue or unexpected weakening in the economy. So they're watching. They don't want things falling off a cliff, but they, like you say, Katie, they do want some more softening in the labor market because they want inflation to come down more. So I don't know if it'll change the Fed much. We're going to get their new dot plot next week, right? They were at 3 cuts. Many people think they'll go down to 2. But I think you're right that they're not going to completely change their calculus, but they'll be happy to see softening in the jobs data if we see it on Friday.
All right, Liz, it's great to see you. Really appreciate your insight there. That is Bloomberg's Liz McCormick. And let's turn now to India's election, because Modi is claiming victory, saying on X that Indians voted for his alliance for an unprecedented 3rd time. Now, Bloomberg reporting shows that his ruling BJP party set to lose their majority, with the race now on to align allies to form a government. Damian Sassower, Bloomberg Intelligence, joins us now with more details. So Modi still, of course, trying to take a victory lap here, but I think it goes without saying this was much, much closer than anyone expected.
Absolutely, absolutely. Out of the 543 seats in Parliament, the BJP party, that is Narendra Modi's party, the incumbency, is only expected to take 290 seats, so certainly well below what we've seen in the past from his party, 350 seats on average over the last 2. So, what does this mean for the economy is really the question. This is an economy of 1.4 billion people growing at 7 to 8% per year in GDP. The verdict is still out. I don't think you can expect much in terms of change, but in terms of the structural reforms, the ability for the BJP to pass through land and labor reforms that are so necessary for the economy to continue growing, it's going to be a little bit more challenging from that perspective, Katie.
Well, talk us through what we're seeing in the markets, because it has been pretty dramatic. I mean, the Nifty 50 index down about 6% at one point, its worst day in more than 4 years. What does that tell you?
Well, I mean, it's where you're seeing the weakness, right? You're seeing it in some of the majors like Adani. You're seeing it. Let's be clear. Indian equities have done really, really well. So you're kind of playing with the house's money a little bit there. And the currency, the Indian rupee relative to the dollar, again, one of those currencies that have done really, really well. And certainly from the fixed income side, we know the story there. IGBs, Indian government bonds, are being added to many of the global fixed income indices here at Bloomberg, at JP Morgan, et cetera. So you're seeing this natural structural bid for the bonds there as well. But to your point, the overnight action, down 6% in equities, I think up 10 bips on the 10-year yield in India. Yeah, these are kind of some pretty big moves. But again, as I mentioned, and it's the same thing you're seeing in places like Mexico, one of the other few countries, over the past 3 years since the pandemic, where you've seen the currency actually appreciate versus the dollar. You're playing with the house's money here. So I don't think the pain is going to spread that too far into the emerging market complex.
Yeah, and I mean, it's a good reminder that it's not just India when it comes to some surprise results this week. We also had Mexico as well. Damien, I know you've had a long morning anchoring along Tom Keene on radio, so I'll let you go. Our big thanks, of course, to Damien Sassower of Bloomberg Intelligence. Now, joining us now on these markets, I'm pleased to say we have Jason Trennard. He is the chairman of Strategic Research Partners. And I wanted to start with tech, but maybe actually we should start with politics, because as I was just talking about with Damien, you had Mexico, you had India this week, and we are hurtling towards our own election here in the States coming up in November. How do you expect that to impact these equity markets over the next few months?
Well, it's a great question. It's not only, as you pointed out, not only an election here, but actually national elections for 40% of the world's population and a very good portion of the world's equity market. So the biggest, I think the biggest potential impact on the equity markets is that incumbents want to get reelected, and then incumbents grease the skids either through fiscal means or through regulatory policy to help themselves get elected. And that's what we're expecting here in the States, and it's why, even though there are some signs that the economy is slowing, I'd be careful about pulling too hard on that string, because I think there are other levers that the administration, the Biden administration, can use and will use as we head into November.
That's really interesting. So whether or not Biden actually wins, just the fact that he's trying to get reelected maybe is a bullish setup for this equity market.
It could be, certainly, especially with bond yields falling, right? I think it would be more problematic if bond yields were increasing. I do think this level of spending is unsustainable. I think it's dangerous, but there's a little bit of kind of, people worry about that after the election is over. But I think for now, it's going to keep the economy a little bit stronger than it ordinarily would be. We're running budget deficits right now that are about 7% of GDP. We've never done that with an unemployment rate below 7%. Now the unemployment rate's below 4%. So all administrations, Republican and Democrat, do this to get reelected. I think the Biden administration is kind of taking this to an art form, certainly in terms of their willingness to use these tools to try to get reelected.
Jason, it's a really good point that when it comes to the fiscal trajectory, may be looking a bit untenable at the moment. I don't think a lot of people would disagree with you there. Let's talk about the monetary side of things, because, of course, one of the questions out there is when will the Fed deliver its first cut, that it probably doesn't want to have the appearance of being political. But how much of a consideration do you think that actually is for Powell at this point?
It's a great question. It's hard to know. I think just to the extent to which there is virtually no coordination between fiscal and monetary policy, it would strike me that there's probably, Chairman Powell is probably not really at great risk of seeming overly political, I think, at this point. My own opinion is the Fed should probably stand pat, but my own opinion doesn't matter. I think the Fed wants to ease this year, and I think it's very likely they will ease. And I tend to believe what the consensus believes, that September is the most likely time they would do that. Certainly, as we know, the Fed has a dual mandate. Inflation's too high. The cumulative effects of inflation are still impacting people. But there are some signs, as we saw with the JOLTS data, that the employment picture is probably weakening a bit. And that would probably give them enough of a justification to ease. But again, I would be careful. I think the chances of another wave of inflation in 2025 are actually quite high, in my opinion, if we don't stay the course on monetary policy.
Yeah, and of course, we're going to get more info about the labor market on Friday, whether the edge is truly coming off or whether we're reading too much into this JOLTS data. I do want to talk about tech because I thought this line from your notes was really interesting, that maybe, just maybe, the tech rally is getting started. A lot of people say, you look at valuations, you look at how far we've come, and things are looking pretty stretched right now, but it sounds like you're taking the other side of that.
Yeah, I mean, it's just a reminder that what you quoted came from a piece where we tried to compare today's market to what we saw in the late 90s, and in many ways, I would say there are more differences than similarities. I remember that market quite well, and there were a lot of signs of excessive, almost manic buying of equities at that point. We don't have quite the same thing to the same extent this time around. We haven't seen the IPO market, for instance, is pretty moribund. You've seen some stock splits, but not a lot of stock splits. So there is a chance. We took a look at Cisco in the late 90s versus NVIDIA today. It's probably one of the best proxies, I think, probably a pretty good comparison. And if you kind of overlaid those charts upon one another, it would suggest that maybe NVIDIA has a long way to go. And in the late 90s, as we know, ultimately we wound up paying peak multiples on peak earnings. And right now, I agree with you, multiples are stretched, but there's also probably a lack of publicly traded equities out there in comparison to bonds.
Well, Jason, if you're looking for a stock split, of course, we have NVIDIA's 10-for-1 stock split coming up next week. But I definitely take your point that overall, we're not seeing a ton there. IPOs have been kind of non-existent. That's only a slight exaggeration. When it comes to the late 90s comparisons, though, I mean, a lot of people will say, you think about what was going on in the late 90s, early 2000s, and it was the internet. A lot of people have compared AI to the internet, that maybe we're in a similar moment. But can you actually invest around that? Do you feel comfortable doing that?
Well, I think I feel comfortable investing in the raw materials, let's say, of AI, because I do think it's real. It's very clear that every company out there is trying to figure out how they're going to use AI and how it will benefit them. I think that's clear. Who will ultimately be the winners in that, I think, is a lot less clear. And so I think about Bill Gates's admonition and said, people tend to overestimate the impact of technology over the next year, but tend to underestimate it over the next 10 years. And I think that's a little bit what's maybe happening right now. So I'm kind of more, NVIDIA as an example, in my opinion, it's a really hard stock to fade here because it is essentially, again, this is the infrastructure part of AI that is going to be used, whether it's profitable or not. We'll find out later on who winds up using the technology most effectively, but for right now, it seems very clear that people are going to be using the technology.
All right, Jason, really enjoyed this conversation. We covered a lot, so I really appreciate your time. Our thanks to Jason Trennert of Strategas Research Partners. Now, coming up, recovery innovator Hyperice revealing its latest creation. We'll be speaking to Gilad Jacobs. He is Normatec founder and Hyperice Chief Innovation Officer next. This is Bloomberg.
In a multi-trillion-dollar industry, there's a lot of ground to cover.
Bitcoin ETFs rubbing elbows with the big dogs.
This frenzy has engulfed the entire world.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
Good morning. This is Bloomberg Surveillance.
This is Bloomberg Daybreak Europe.
You're watching The China Show.
This is Bloomberg Technology.
This is the countdown to the close.
Welcome to Balance of Power. This is Bloomberg.
This is Bloomberg.
Let's talk air therapy. The sports recovery company Hyperice unveiling its latest product. We're talking about the Normatec Elite. It is a full leg compression boot system. It's designed to improve blood circulation and help you get you back on your feet more quickly. And joining us now for an exclusive interview, I am thrilled to say we have Gilad Jacobs. He is Normatec founder and also the Hyperice Chief Innovation Officer. It's great to see you in person.
Hey, Katie, how's it going?
Great. So let's talk about this new product. I am very familiar with Normatec. Have used it many times. I ran in college. But in any case, this new product, the Normatec Elite, announced today. Who is this for? Is this for professionals or is this for, individuals to buy and put in their homes?
Well, the easy answer is really just everyone, right? So we started at the top with the best athletes in the world, and that really informed a lot of our decision making in terms of how to create a product that worked. And because we're all built the same, it works on you whether you're someone in the NBA, a weekend warrior, or somebody who just wants to feel better after a long shift on their feet all day.
If you're a television anchor, wearing high heels, I get it. So how much is this actually listed for? $999, correct?
Yeah, the new Normatec Elites are $999, and we did some incredible things with this technology. We actually eliminated the box and the hose that generates the compression to go into boots, and we were able to integrate it right into the leg boots themselves. So completely wireless, and it's just really elevates the experience and makes something that was really good even that much better.
So theoretically, much more mobile. I can actually travel with this probably more easily than I could with that hose mechanism.
Yeah, traveling really wasn't an issue beforehand, but just eliminating that aspect of it, even just the clicking in and needing to kind of press the start button over here, really makes a big difference. And it's just been really cool to get all this great feedback from the athletes that have used it in the run-up to the launch in terms of how much more they're integrating it into their existing daily routine.
Well, let's talk about the customer base a little bit more, because you talk about athletes, you talk about individuals. What segment are you actually focusing on? Where are you putting the most muscle into right now?
So we divide the market into a couple different areas. First and foremost, we have to make sure that our core, original core, I should say, the best athletes in the world. So we're talking NBA, NFL, NHL, every league and athletes in there are using the Normatec and Hyperice products. But then you step down to the collegiate level, and then everybody else who are really kind of, if you look at the market as a pyramid, really kind of from the bottom 25% up, we're focusing on. So bringing technology, making it more accessible from both a financial perspective, bringing our costs down over the years. What started originally as a $4,500 Normatec device is now coming in under $1,000. With even more technology packed into it is something that we're really proud of and something that we work really hard on every day.
Well, you touched on something that I've been wondering about is, how much of a focus is selling to universities, for example, getting those types of deals and contracts when it comes to schools, colleges, universities, but also potentially gyms, for example?
Yeah, we have a lot of different areas that we focus on. So we have great relationships with the colleges and universities and Olympic teams and whatnot. But being able to work then with the next layer down, people who are going to the gyms and accessing it. For us, it was never about just making the best product that only a few could use. We wanted it to be something that everybody, democratize, if you will, the technology for recovery and make it something that everyone can really enjoy and get benefit from.
Well, I do want to talk also about the price tag, because nearly $1,000. I mean, there's a lot of people who would say, there's no way I'm going to buy that. That is just too expensive. You think about the economic environment we're in right now, high inflation, of course, maybe the labor market weakening a little bit. How has that impacted your customer base? Are you seeing any noticeable softening when it comes to your sales?
Not right now, not at all. I think a lot of people, as we always hear during these times, really like to focus on their body and their health, their wellness during this period of time. When you actually break it down to the cost per session of a Normatec, we're talking about $3 or $4. And you compare that to what it's like to have to go get a massage, and not only the time suck, even though massage feels great, once you're done, you're done. And you can have this thing will last for years. We do unbelievable accelerated life testing with the product, and the product has been in the field now for 15 plus years in one generation or another. So we've been able to get really great feedback over the years and put that into the next generation of equipment.
Well, to that point, who are you competing with? Is it other products when it comes specifically to these compression sleeves? Are you competing against masseuses?
Not competing against masseuses. We call it a welcome adjunct to all the things that are going on. We really like to focus in from a competition perspective on education. So a lot of people don't know that recovery is a thing. You say recovery to someone years ago and they would say, oh, what's wrong with you? Did you have an ACL repair, ankle sprain? Recovery as a means of performance has been this new category that has really developed. You look at all these athletes, everyone's trying to push the pace legally. So we're trying to do things, whether it's coaching and whether it's gear and whether it's nutrition. What's that next frontier outside of training that you can do? What never made sense to me is that we're so proactive about those elements that go into the training and the conditioning, but we're so passive about the recovery. So being able to focus on the recovery is something that athletes really are latching onto.
And I mean, it's a great point, too, when you talk about pushing the limits in a legal manner. You think about the development of super shoes, for example, when it comes to running. That obviously has led to some big breakthroughs there. But I want to talk a little bit more about Hyperice's broader business, because there's also the Hypervolt, which is basically a massage gun. And you think about the competitive landscape there. Theragun, for example, is popular as well. How do you compete there?
Sure. So Hyperice and Hypervolt specifically with the massage gun category really created the first consumer massage tool. The percussion technology is unbelievable, especially when you work in adjunct with some of these other technologies that we come out with. From a competition standpoint, we spend a lot of time focusing in on how to make the best product from the ground up. The quietness, the working with the best athletes in the world to get their feedback, to put it into the product. Really, the best athletes in the world, their DNA is inside every product that we have. And I think it's a testament to how much they use it and how well it works.
I remember some of the first generation massage guns. They were so loud. Sounded like a real gun.
Pretty loud. They weren't originally designed for home consumer use, and that was one thing that Hyperice was able to do, is focus in on the consumer tech perspective. What's really exciting is, even though that's how things started, where we're going in the next 18 to 24 months from a product pipeline, it's something that I've never been a part of. It is unbelievable. We are so excited about what's coming down the pike, and really excited to start to share as things get ready for launch.
We'll definitely keep in touch. So enjoyed this conversation. Our thanks, of course, to Gilad Jacobs of Normatec and of Hyperice. Now, still ahead, we're going to take a look at the companies making the most social buzz today in our Social Climber segment. Up next, this is Bloomberg.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television. Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything. Get your fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything.
All right, it's time now for Social Climbers. A look at the stocks making waves on social media this morning. And first up, Bath & Body Works, smelling like roses, rather, after posting its first quarter earnings that beat estimates. However, the CEO of the fragrance and body care retailer cites demand uncertainty and the likelihood of worsening sales ahead as consumers pull back on spending. Makes sense. Next up, Spotify hitting a sour note for some users. The Swedish music streaming service announcing it will raise the price of its premium subscriptions. Spotify, of course, has been trying to boost its margins by cutting its marketing budget and announcing layoffs. And of course, you can follow all the latest company buzz on TREN Go on your Bloomberg terminal. Now, coming up, more warnings around the commercial real estate industry. We'll discuss those concerns with Bruce Von Saun. He is Citizens Financial Group CEO and Chairman. He joins us next. This is Bloomberg.
The linear business is not going anywhere. The sports business is moving and is going to figure itself out between digital and linear. It's an unbelievably healthy market. They all have to be in it. They all want to be, every single one of the players want to be in it because of the audience. We have two assets in the sports business that don't have are year-long, don't have a season. I don't believe prices are going down. You're going to figure out the bifurcation of the rights and give things up, not give things up.
How long do you think it is before Netflix actually jumps into sports?
You know, they're in sports right now, but they just do the shoulder programming.
Yeah.
I think their point of view, and you'll ask Ted tomorrow, is we build up we don't want to be in the bidding of rights and then not have any long tail. So I'm not sure. They did bid on Formula One, but ESPN got it. So I think that was a smaller package, meaning smaller economics. So we'll see.
Good morning from our world headquarters in New York. I'm Menace Credit.
And I'm Danny Berger. Let's set your agenda.
Bloomberg Brief delivers the market news, data, and analysis you need live every weekday at 5 a.m. Eastern. Bloomberg. Context changes everything.
one factor that we haven't talked about yet, which I don't think is a financial stability risk, but it's nonetheless a risk to the U.S. economy and presumably to the European economy, is commercial real estate. We expect there to be big losses in the commercial real estate sector. We think we've studied it very carefully, that most banks seem like they are well positioned to handle those losses.
And that, of course, was Minneapolis Fed President Neel Kashkari speaking in London last Tuesday. And let's talk a little bit more about the CRE market and, of course, regional banks in general, because we're joined now by Citizens Financial CEO Bruce Van Saun. Citizens, of course, one of the largest retail banks in the U.S. Bruce, great to have you on set with me.
My pleasure.
So we'll start with CRE. We're not going to spend the whole time there, but you said last week that actually there's still a lot of uncertainty in the CRE market. Where is that uncertainty right now?
Yeah, I'd say we're still waiting to see more transactional activity. So the indications of value are not clear at this point. And you know, I'd say rates moving down would actually help create potentially more financings and more transactions. But office is really the space that everybody's focused on. The rest of commercial real estate, you shouldn't just generalize that all commercial real estate is an issue, because multifamily's in reasonably good shape, and industrial and warehouses in good shape, retail's in pretty good shape. It's really just that office segment that folks are most focused on.
And I hear that from investors all the time, too, that there's plenty of opportunity when it comes to CRE, but office still a little shaky there. But you went where I wanted to go, and that is the Fed, because this is a Fed that would certainly like to cut rates, but the data just doesn't back it up there. So if we are truly in a higher for longer interest rate environment, what does that mean for CRE, and what does that mean for regional banks as a whole?
Yeah, I think it, in general, it would be beneficial for CRE borrowers if rates came down. But I think banks have an ability to work with the borrowers to try to extend loans if they're still good credits. And sometimes the bank will take a charge off on part of the loan, and the borrower will put in some equity, so you can kind of re-underwrite the loan. So it's just a long workout process that we're going through in 24. I think it'll extend through all of 25. We're geared up for that. But anyway, the good news is most banks, most of the super regionals have a small percentage of their loan book in commercial real estate. We have plenty of capital, plenty of reserves to handle it. And we'll really try to focus mainly on our offensive agenda from here.
And we're going to get to that. I do want to meditate on higher for longer a little bit more, because you think about the effect that that has had on money market funds, for example. Money markets offering 5% and above, that's really attractive for a lot of people. And I'm wondering, when it comes to competing with cash, how has that looked on the deposit side?
Yeah, so I'd say most of the money that was going to migrate into those more favorable investment alternatives has already happened. So if you look back over the last 4 or 5 quarters, you're seeing that migration really slow to a crawl. So that's good. If the Fed doesn't raise rates again, we've probably seen the worst of it. So I think banks have generally position themselves now for this higher for longer environment. So we're relatively neutral. If the Fed goes higher or the Fed goes lower, it won't have a big impact on net interest income. I think the bigger impacts from rates moving down will obviously first off help some borrowers, but it'll spur more capital markets activity. You've got a lot of money in private equity land that's been sitting on the sidelines, ready to go to work. And so, you know, that'll be a good day when the Fed decides that they've basically conquered the inflation beast, and they can start to bring rates back down.
And certainly the Fed would like to reach that point as well. But it does sound like what you're saying is that another hike would certainly be disruptive.
Yes, I don't really see that. I think that's a very low probability case at this point. So I think what the Fed is saying is, let's just keep rates here. The patient is taking the medicine okay. We don't need to increase the dosage, but eventually we'll be in a position where we can come down.
So that's the Fed picture, the macroeconomic picture. Let's talk about where you are playing offense. I want to talk about your efforts in private banking in particular. How has that push been going?
It's been great, really. So we stepped into a void when First Republic went down.
JP Morgan bought the bank, but a lot of the talent didn't want to fit into that model at JP Morgan, so a bunch came over to us. We have teams now in Boston, New York, Florida, and 3 teams in California, and they're off to a great start. They're getting a lot of receptivity from previous clients who value the service and offerings and advice that they get from those bankers, and we also have our own ability to attract new customers. So we hit $2.5 billion in deposits at the end of the first quarter. We're growing about slightly over $1 billion a quarter in deposits, so we're opening a lot of new accounts. We're also acquiring some wealth advisors, so we did a lift out of a wealth team in San Francisco. We just announced Friday another team coming in from Boston, so we want to have more choice to the customers in terms of wealth options.
Well, there's a lot to dig into there. I do want to start with, it sounds like you're hiring from your rivals to really fuel this expansion. Yeah, so this is a fairly sizable bet for us. We kind of led 150 people, world-class talent, came in on a day in June, and we've got probably another 70 people we've hired since then, so 220 people, and in a choppy environment where the expenses were going to show up day one and the revenues and the customers were going to come in gradually over time. So we made that investment last year. That was a loss for us, but then this year we expect to break even in the second half of the year, and then next year we should be significantly accretive, so it should boost our bottom line by about 5%. And how important is the New York market? How much opportunity do you see specifically in New York City? Yeah, so the New York strategy is more broad than just the private bank, but we went out a couple years back. We bought HSBC's East Coast branches. We bought a bank in New Jersey called Investors Bank. We now have 200 branches in the greater New York area, about a number 10 deposit market share, 1 million new customers. So you can start to see here in New York all of our green signage. And we're, I think, making a great mark on the city and raising our brand visibility. And we're obviously advertising on TV. You can see some of our spots. We're partner with the New York Roadrunners. So you're going to be to see the Citizens Queens 10K in a couple of weeks here. So great opportunities for us to bring our style of banking to New York City. You're also doing TV interviews, which I certainly appreciate. But you mentioned, you just rattled off a whole list of acquisitions that you've done. And it's interesting, if you take a look at the landscape right now, you've had PNC, for example, talking about the need to do bigger M&A, to get bigger through M&A. And is that your strategy as well? Would you say that you're pursuing a growth by acquisition strategy? No,
not necessarily. So I think what's interesting is all banks have different forks in the road that they can pursue. I think right now we're describing ourselves as kind of a three-legged stool where we have a transformed consumer bank, we have the best positioned commercial bank, and now we have the opportunity to build the premier bank-owned wealth platform and private bank. And so, I think we have enough there to build a great sustainable franchise. We're focused on that. If opportunities arise down the road to potentially do acquisitions, we'll be prepared.
Well, Bruce, really enjoyed this conversation. Hope to stay in touch, of course, as you progress further on those efforts. Our thanks, of course, to Bruce Monson of Citizens Financial Group. Meanwhile, let's get a check on these markets. We're going to do that with Bloomberg's Abigail Doolittle.
Let's start with yields today, Katie, because we're looking at a trend for the 10-year yield. And in fact, speaking of commercial real estate, based on some of the sources that I speak to, this kind of a relief in yields can be felt pretty quickly within a week or 2 weeks. But you can see over the last 4 days alone, down 25 basis points. I would argue that this has more to do with a little bit of a haven bid with economic uncertainty out there as opposed to timing around the Fed cutting particularly. One thing you would expect it to do is to give stocks a lift. We're not seeing that so much, although let's change the board and see if maybe their stocks are a little bit higher than they were the last time I looked. The S&P 500 still down about 0.2%. We've been talking about the divergence with the Dow. The Dow generally underperforming. Today, there's a little bit of a reversal of that. That Dow up about 0.1%. Crude oil down for another day, down 1.7%. Investors, traders, perhaps not liking the fact that OPEC Plus has started to talk about how they are going to, at some time, take away the production cuts. And then silver down 4.1%. I believe this is the worst day in more than a month. I'm not exactly sure what is behind this. We have a little bit of dollar strength, but I don't think enough to royal silver like this. This may point to the idea of a little bit of a risk-off feeling, because silver often trades more like a stock as opposed to a haven. And then finally, if we take a look at the S&P 500 and what it's been doing year to date, or actually out of the October lows, you can see this nice rally. We've looked at this chart before. It's important to relook at these charts to see what's going on. This is this year's range. The S&P 500 right now just slightly higher, but take a look at this RSI momentum falling, suggesting that we may see the S&P 500 fall back into the range. We don't know that yet, but we'll continue to check in on this chart for the next big directional swing for stocks, Katie.
All right, Abigail, really appreciate that update. Our thanks, of course, to Abigail Doolittle. Now, coming up, a victory for Claudia Sheinbaum, sparking a second session of losses for Mexico investors. Maria Fernanda Bosmosky of the Atlantic Council joins us next to explain. This is Bloomberg.
The names that move markets are on Bloomberg.
How worried are you about the U.S. election? It's for the American people to decide what they want with their politics, with their government, with their future. But obviously, we are all concerned about it because the United States is the largest economy, the largest defense country in the world, and has been a beacon of democracy with all its upside and downside. We cannot interfere with their choice. It's their choice, and that's the beauty of democracy. But we have to be extremely attentive and anticipate, just as we do with inflation. You know, we do scenarios. What if, what if, what if? Then what do we do? Where I sit now in Frankfurt, head of the ECB, I think that we have to be strong as Europeans and not assume that we can rely on whoever our friends are around the world, because these things change over the course of time, as we have seen.
Bloomberg. Context changes everything. The top names in business are on Bloomberg.
They're kind of predicting a soft landing, and you see that in both stock prices, which are kind of high, credit spreads, which are kind of low, markets, which are kind of wide open. That's all good. Doesn't tell you what the future is going to be. But I think there are a lot of inflationary forces in front of us that, you know, may keep it a little bit higher than people expect. My view is whatever the world is pricing in for a soft landing, I think it's probably half that. I think the chance of something going wrong is higher than people think.
Bloomberg. Context changes everything.
right, it's time now for our Wall Street Week Daily Conversation, and a landslide victory for Claudia Sheinbaum in Mexico is certainly worrying investors. The Mexican peso sinking for a second session over concerns that the ruling party could increase state control of the economy. Joining us now, I'm pleased to say we have Maria Fernanda Basmosky. She is Deputy Director of the Atlantic Council Latin American Center, along with Wall Street Week's David Weston. And David, it has been a very busy week when it comes to political elections right now.
Exactly. It's pretty dramatic news out of India and now out of Mexico as well. So, Maria Fernanda, thank you so much for being with us. You know, we are Bloomberg, so we tend to focus on economy, finance, things like that. Talk about what we think we know about some of the policies of Ms. Sheinbaum as she takes over, and specifically start with trade. I mean, that trade across the southern border of the United States is terribly important. USMCA is up for renewal, I think, in summer of 26. What do we expect out of a Sheinbaum administration?
Thanks, David, for having me. Claudia Sheinbaum is president-elect of Mexico, and during the campaign, we didn't really hear from her so much on what would be her foreign policy priorities. I would say we didn't really hear from her on the economy either. But I will say that she presents herself as a more pro-market friendly, more business friendly candidate or politician president than her predecessor ever did. I think that she really understands the nuances. Some of the things that she has said since her victory on Sunday are, I would say, hopeful. I would say that even though we saw how the markets have been reacting, we've seen the peso go down quite a bit at levels that we haven't seen since 2020 when the pandemic started, or even 2008, the financial crisis. We have heard her say that, for example, on energy, that Mexico will start to implement some of that energy transition. She's a climate scientist by training. She understands what's at stake here with the climate, with the environment. Mexico has a lot of issues with access to water. I do think that we are going to start to see over the next few months, as she starts to distance herself a little from her predecessor, we're going to see some encouraging signs on how she sees business, on how she sees foreign investment in Mexico.
And I'm glad, of course, you brought up the market reaction, because it has been really stunning to watch, particularly in the currency market. But it's interesting. Of course, you authored in May a paper with some of your colleagues writing out basically two major recommendations that you had for Mexico's next president. You wrote that ideally the administration would reimagine a more efficient U.S.-Mexico border, particularly for commercial truckers. Also to unlock more trade and investment when you think about concepts such as nearshoring. When you think about the Sheinbaum administration, do you think that either of
I do think so. I think that her team and she understand just how important trade is for the country. With regards to the border, we found at the Atlantic Council that just a 10-minute wait reduction at the U.S.-Mexico southern border would mean up to $312 million commercial that would go both ways. That's a big number for only 10-minute wait reduction. If we were to implement technologies at the U.S.-Mexico border that would allow for more efficient trade and commerce, that's huge. Imagine the impact that would have, spillover effects on the communities in the border. With respect to trade, we do have the USMCA that's up for review in 2026, the sunset clause. All three parties, the United States, Mexico, and Canada, have to come to the table and they have to say whether the agreement is working for them or it isn't. And in this specific, the USMCA, the sunset clause review, I think that how Mexico approaches those conversations is just going to be consequential, hugely consequential for North America writ large, and for the nearshoring that you're talking about as well.
Maria Fernandez, talk to us about foreign direct investment. That's been increasing in Mexico in part because of the friend-shoring or near-shoring that's going on as people come out of China. If, in fact, President Sheinbaum wants to really be more pro-business, pro-investment, what would she need to do, and particularly when it comes to predictability of the laws? Because, as I recall, her predecessor, when he first came in, sort of shook people up by canceling some contracts. And what about the infrastructure supporting investment?
I would say that a lot of the levels of investment that we're seeing in Mexico during this administration have been, to be honest, in spite of the government. Mexico is just very privileged with its geographic position where it is, right next to the United States, right? But also Mexico is very competitive vis-a-vis China. And so as well, from a geopolitical point of view, the United States-China tensions that have been developing over years now have really benefited Mexico. So those investment levels have come, I would say, again, in spite of the current administration's policies. Claudia Sheinbaum has acknowledged, I think to a degree, she doesn't want to overtly go against what her predecessor has said, but she understands that you need to have a rule of law, you need to have judicial certainty. Investors need to come to Mexico and they need to know that the rules apply the same for everyone, foreign or national companies. On this point, Claudia Sheinbaum has hinted that that national companies would be favored over foreign investors on energy, for example. They're still going to be to a certain degree funneling funds to Pemex, which is the state-owned oil refinery, which has a lot of inefficiencies. It doesn't really produce as much as it should. So I think that she understands that as well. She understands the need for developing infrastructure, especially in the southern part of Mexico.
Let's talk about the U.S. side of things, because, of course, we're about to go through our own presidential election coming up in November. And a lot of the things that we're talking about when it comes to the border, for example, when it comes to nearshoring, it also depends on the U.S. administration. And it's early and it's speculative, but how might Claudia Sheinbaum interact with another Trump administration?
Yes, I love that we're asking that question. A lot has been said about the fact that she's a woman. If I may, I'll also mention she's a mother. She knows how to deal with tantrums and meltdowns. I think that she has said it repeatedly that they are going to have a good working relationship, whether it be with a Biden 2.0 or a Trump 2.0. And yes, the United States election here is ramping up. Immigration, trade, Mexico are going to be hot issues. They're going to be at the top of the agenda. And we're going to see how the president-elect will deal with that starting in October. She comes into office on October 1st, just a few weeks before the election here in the United States. But at the end of the day, Mexico needs the United States, but the United States needs Mexico, whether that be from an immigration point of view, from a trade point of view, security, all the major issues. They need each other. They need to work together.
All right, really appreciate your time and that context. Our thanks, of course, to Maria Fernanda Bosmosky of the Atlantic Council. And David, who else do we have coming up?
Well, I think we'll deal with the other big election, right? The India election, which is still up in the air even as we speak. We're going to be talking with the former central bank governor of India, Rajam, who's now at the Booth School out of Chicago, try to figure out what exactly the ramifications for the Indian economy and their financial markets will be because of this election.
All right, really looking forward to that conversation. Another very timely conversation. And on that note, what you're seeing right now is a live shot of Indian Prime Minister Modi about to address his party from the BJP headquarters in New Delhi. This is Bloomberg.
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question.
Great question.
Best question I get all night.
Bloomberg. Top experts. Great questions.
People ask me all the time, what is the key to being a really good investor? And I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
Go figure out how to get exposure to hyperscalers, which we think will be the biggest winner in what AI and data storage will do for the world.
In a multi-trillion-dollar industry, there's a lot of ground to cover.
Bitcoin ETFs rubbing elbows with the big dogs.
This frenzy has engulfed the entire world.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg. It's Jobs Day, and Bloomberg has the report under surveillance.
We are seeing the labor market come into better balance.
That foundation for the economy is solid.
This Friday, Jonathan, Lisa, Anne-Marie, and Mike will bring you crucial data and expert analysis at terminal speed.
This is not a labor market that's slowing down or grinding to a halt.
That's why everyone is looking at wages.
Payrolls report, 8:30 Eastern Time.
The May Jobs Report, Friday on Bloomberg.
Let's take a quick look at some stocks hitting highs today, and we start with Walmart, hitting a 52-week high on news that its Sam's Club chain will sell more local goods like ghee and hot sauce this fall. The move, of course, intended to attract new members and better compete with Costco. Nvidia also hitting highs today. The CEO says the company is working on the certification process for Samsung's memory chips. It's the final step before Samsung can start supplying Nvidia with an essential AI training component. You can see we were at a high, but now we're down 0.2%, 0.1%. We'll continue to follow that one. Take a look at the broader market right now, and we are lower on the day. On the S&P 500, currently off about 0.2%. Briefly got to positive territory or just about, but that quickly faded. Same too on the NASDAQ 100, currently lower by about 0.2%. And that bond market rally continuing after that JOLTS data, currently down about 4 basis points. Coming up, Accel partner Arun Matthew, he joins Bloomberg Technology next, but that does it for Bloomberg Markets. I'm Katie Greifeld, and this is Bloomberg.
Operating in a very volatile environment. So JetBlue has a very large presence here in New York, and there are air traffic control challenges. And so we've had to overinvest in hiring excess crew members and building flexibility into our planning process. And so over time, we hope to wean some of those investments back as the operating environment around us stabilizes.
We made the decision early on that we were only going to invest internally on key differentiating technologies, and clearly the powertrain is the key differentiating technology. So our investment is a recurring investment. The powertrain team, the battery team, which is part of it, the engine team, electric engine team, which is part of it. And we also have a lot of non-recurring costs with the other components because we're not developing those internally. We're using the existing aerospace defense supplier base for most of the other components.
We invest a lot in the offices, that you feel home, that you can actually be at your best yourself, and people work very differently. We take a lot of input from the sports world, actually, the athlete spirit, right? Building a sports team that can perform at the best, but also talking a lot about the explorer spirit. How can we really tap into new things, continue being disruptive? We have 80 different nationalities at On. It's very important to have a diverse team because we have a very diverse landscape of customers.
Good morning. This is Bloomberg Surveillance.
This is Bloomberg Daybreak Europe.
You're watching The China Show.
This is Bloomberg Technology.
This is the countdown to the close.
Welcome to Balance of Power. This is Bloomberg. From the heart of where innovation, money, and power collide in Silicon Valley and beyond, this is Bloomberg Technology with Caroline Hyde and Ed Ludlow.
Bloomberg's world headquarters in New York.
And I'm Ed Ludlow in San Francisco. This is Bloomberg Technology.
Coming up, the competition for AI chip dominance. It heats up as Intel takes aim at NVIDIA. Details to come.
Plus, we'll bring you the latest updates from Paramount's annual meeting, which kicked off this morning.
And Tesla shares, they drop on reports that Elon Musk has shifted thousands of AI chips to XAI over the vehicle maker. But first, let's check in on the broader market context. And look, jobs market cooling. Those JOLTS numbers really putting pressure on certainly the stock market, but the bond market is currently seeing money move in at the moment. Yields go lower, some 3 basis points, as maybe we see space for the Federal Reserve to be able to cut later into the year. Now remember, we've got the all-important jobs data on Friday as well to digest. Interesting that even though we've got money going into the bond market, we're not seeing that optimism around technology stocks right now. We're off by some 0.3%, and we're digging into the individual names that are perhaps dragging us a little bit lower. But look, we've been seeing all-time highs hit time and time again, maybe a bit of profit-taking currently being digested. We're looking at, though, a macro picture that goes global for a moment. This is a political story, complete upending of what many had anticipated happening in the Indian election. And for now, the rupee is down versus the US dollar significantly on what has been a shock coming from a political stage where Modi does not seem to be having the majority that was anticipated. More on that throughout the show. Let's move on to happening in the world of crypto. A little bit more risk on sentiment coming from Bitcoin at the moment. We're up 0.8%, 0.9%, let's call it. At one point, Ed, we eclipsed the $70,000 handle. This, as we see perhaps more money moving into some of the ETF products. And, well, maybe some of that meme frenzy from yesterday helped some of the tailwinds. But what are you seeing on the micro?
Let's go back to that Tesla story for a minute. CNBC reporting that Elon Musk directed NVIDIA to divert 12,000 H100s or AI chips that had been destined for Tesla to his other companies, X and XAI. Tesla shares now basically flat. They've been lower. I think everyone's trying to make sense of what that means for the kind of Tesla pledge to achieve full self-driving, because that is principally what the AI accelerators are being used for in the Tesla case. We'll get more on that later in the hour. Back to our top story, which is the battleground and the market for AI accelerators. Intel and NVIDIA are both now sort of modestly lower. Intel have been higher. Pat Gelsinger on stage at Computex. A lot of headlines coming out of Computex. Here is what Intel CEO Pat Gelsinger had to say about that market for AI chips.
Every device will become an AI device. Every company will become an AI company. And we see this as the fuel that's driving the semiconductor industry to reach $1 trillion by the end of the decade.
The other thing that he said, Bloomberg's Ian King, is that Moore's law is very much alive, a reference to the white paper in 1965 by one of Intel's co-founders, that the number of transistors on an integrated circuit will double every year without sort of adding costs to the production process. But what he was really doing was pushing back against Jensen Huang of NVIDIA and saying, we're going to catch up. We're going to do this.
Yeah, I mean, he's arguing his case, right? He's saying, look, we can still do it. He's trying to make the case that Intel is still relevant and can have a central role in what's going on and can capture some of this massive amount of spending. But at the moment, all of that money is going to NVIDIA. Over $100 billion of revenue projected for that data center unit this year. Intel's data center unit is going sideways at best.
And I think what they have to compete on, yes, we're hearing yet once again annual upgrades to the offerings of semiconductors, Ian, but it's the full package that you get with NVIDIA, even if it is expensive.
Yeah, I mean, what Jensen has already decided is, look, hey, I've got about 4 big customers, the big hyperscalers, but guess what? I really need to broaden that audience. So he's networking, as you mentioned, full servers, basically supercomputers, and he's put everything together already so that pretty much anybody can adopt it. So anybody that's trying to crash his party, like Pat Gelsinger, like Lisa Su of AMD, has to come to the table with everything, including the software, and that's a massive amount of effort that's required. They've got the resources, but he's got the lead.
He does, and at the moment it feels as though everyone else is slightly snapping around his heels. Where is ultimately, for now, all the value attributed to data centers? Can any of it be sort of thought to be being brought, this $1 trillion market that Pat Gelsinger talks of, how much is that going to be allocated to PC?
Well, that was the show, the sort of sideline of the show was, oh, hey, look, we all love the accelerators, but guess what? Your PC is going to get cool again. It's going to get interesting again. We had Qualcomm, Christian Amon there. We had Lisa Su of AMD talking about it. So they're all talking about revitalizing this thing that we all carry around and all use all day. At the moment, you know, I saw some demos yesterday. They were okay. You know, I think we need to see a lot more on the software side before we can get fully excited about this being a new dawn for a product we've seen for a long time.
I get all of the stories, particularly in Intel's case. Pat has been saying, I will return Intel to a position of technology leadership. And the problem is that presently, revenues and sales don't match that story. So Intel basically $500 million this year for AI accelerators, AMD $4 billion, which is slightly better than they previously forecast, and NVIDIA, let's just call it $40 billion. And that's the state of play.
Yeah, I mean, the number's probably close to 100 at this point. If you look at the estimates, it's absolutely enormous. But yeah, back to Pat, exactly what you say, which is he's got all of these audiences he has to serve. He has his internal audience. He has to motivate his engineers. He has to get his customers excited about what he's going to offer. But at the same time, if he promises too much and makes too bullish an attitude, investors are going to get excited and think, oh, hey, we're going to see a big upside on earnings, and he can't deliver that at the moment. So.
Ian King breaking down what is the ongoing fight amid AI semiconductors. Brilliant to have you taking on Taiwan. Let's move over and think what this means for market capitalizations, the fight that goes on there. Ipek Oskodeshkaya is with us, senior market analyst over at Swissquote. Ipek, it's great to have you back on the show. And there has been a tussle at the top. Market valuations just keep on being allocated to NVIDIA. Is that the right step?
Well, I think that NVIDIA is making the headlines and they're doing a great job. Not only that they are making huge progress on their numbers, they do make enormous forecasts and they beat them by very comfortable margins quarter after quarter, but they come very regularly with new updates, with new promises, with a new idea of, for example, creating an ecosystem, offering hardware, software, and services. So they are making the AI a full environment where everybody could be interested and everybody will find what they're looking for. So in this sense, NVIDIA looks like it's still a step ahead of the other competitors. And in terms of PE ratio, what we see is that even though the prices are going higher, well, the PE ratio is not going that high because, well, the earnings actually do follow up.
Ipek, let me show you this chart, and it's a busy one, so I'll explain what it is that we're looking at. If you think about it, big picture, NVIDIA is just a few percentage points away from exceeding Apple's market cap, from having a market cap greater than Canada's equity market, and 10% or so would take it beyond Microsoft to be the world's most valuable company. Is that justified to your mind?
Well, I can't really tell you this is justified, but today, with the AI revolution, NVIDIA has been catapulted to that place of the leader of this market, and the leader is in its revolution. So this is not something that happens every year. This is once in a decade or once in a few decade thing. If AI is the next big thing after internet, then NVIDIA has got a huge opportunity, a huge potential to increase its business. And now we are reading the reports that NVIDIA is not selling chips. It is now selling an environment. It is selling a dream, and it is actually selling us a new life, a new way of doing things. And now we are just at the beginning, and people know that the opportunities are simply huge. So yes, as Apple has become one of the world's most valuable companies because, well, they just got this iPhone in our hands, well, NVIDIA could very well become the next big thing by, well, putting AI in our, well, devices and make our lives completely different from what it was before.
I really like that you've referenced Apple there, ultimately because the market capitalizations are vying with each other. But in our Tech News Daily, there's a great thought leadership piece there, ultimately, that Apple did this. Previously, it won out by having a sort of closed wall ecosystem, whereas Google went to say, hey, everyone can play in our garden, whereas we're seeing that sort of playing out with NVIDIA versus the likes of, well, of course, the other competitors that we've heard for, whether it be Intel working with all the other particular players out there, EPEC. I'm interested in not just the analogy between Apple, what's happening in China. I know you've had some thought leadership there from your own on whether we should, or if you can, invest in Chinese AI. They might win out too.
Well, actually, we think that Chinese technology and AI-related companies are intriguing because we know that in this context of technology war, Chinese government is putting a lot of weight behind its technology and AI companies. And China does have this pool of very big technology companies that have been once very popular, that still is in China, and that have a proven track record, and that are right now trading at extremely low valuations compared to talking about a P ratio of around 10 to 20 for the big Chinese technology stocks compared to 6 to 6 for NVIDIA and hundreds for AMD, for example. So in this context, they're cheap and interesting. Now, one risk is the geopolitical and political risk. I'm going to put that aside. But one other risk right now is the fact that these technology companies in China are in a fierce competition against each other. And they are mostly focused on expanding their market share rather than maximizing their profits. This is something that keeps investors a little bit reluctant regarding the Chinese technology stocks. But this is temporary because ultimately one or a few of these technology stocks are going to be the winners of this AI revolution in China. And that day, as an investor, well, you want to be in that elevator.
We started this program with Pat Gelsinger's belief that Moore's Law is intact, that they will regain a foothold in the market. Is the addressable market big enough to have AMD, Intel, and NVIDIA all offering into the same thing?
Well, I think the market is huge. The opportunities are huge. But what's going to matter is not only how fast and how efficient the chips are, but it's also how well the service and the ecosystem and the environment that these companies are going to offer. And it looks like NVIDIA has, well, a very good understanding of this 360-degree offering. So it's not going to be about chips only, but it's going to be about who is going to offer the best service to, like, the most of the companies on the face of this earth, not only to big technology companies, but to companies across most sectors. So I think that in this sense, yes, there is demand for a lot of chips because the AI revolution is happening and we are all concerned with it. But the real winners are, I think, going to be not the best ones in terms of their products, but also the ones that are going to be offering all the environment and the universe with it.
Ipek Oskar-Deshkaya, Senior Market Analyst over at Swissquote. Thank you very much. Now, coming up on the program, Paramount's annual meeting is underway. We're going to bring you those details next. Kara, what are you looking at?
Just go back to chips for a moment, because we've had on the show before, Ed, CoreWeave's CEO. Look, it's a private company, cloud computing provider, ultimately trying to win out and offering data center capacity for AI. They're making a deal. They're going to spend about $1 billion to acquire a Bitcoin miner, Core Scientific, for $5.75 per share. As you can see, we go higher on Core Scientific today, up 34%. From New York and San Francisco, this is Bloomberg Technology.
I'm Alex Rodriguez. I'm a former New York Yankee and played professional baseball for over 20 years. Almost that entire time, I was thinking about business.
And I'm Jason Kelly. I've been a business journalist at Bloomberg for more than 2 decades. And across my career, I've covered everything from the Olympics to Wall Street.
From Bloomberg, this is The Deal. Each week, you'll hear us in conversation with business icons.
This show will explore deal-making across sports, media, and entertainment.
This is very fancy for a podcast.
If I knew what it was going to be, I'd put everything I had into it.
I get asked more about our relationship than I do my wife. And you know what I'm saying?
This is a show where we talk with big-time athletes and executives about the wins, the losses, and lessons learned along the way.
This show is called The Deal.
The Deal?
The Deal.
The Deal.
That deal.
The Deal.
Huge deal.
Who dug this up? One of y'all's in trouble.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
This is Bloomberg.
Paramount having its annual general meeting today. That's after the reporting that keeps coming from Skydance Media's plan, we understand, to offer $23 a share to investors. For the latest, one bringing Geetha Raghunathan, of course, of Bloomberg Intelligence. And Geetha, we think about the promises made from these new leaders, 3 co-CEOs, interim CEOs, it feels, talking about streaming partnerships, cost-cutting. Any of that matter if there's potentially a deal on the table?
Not really, Caroline. And you know, this has really been the story of Paramount for so many months now, because the fundamentals are pretty weak. Those have been completely overshadowed by these ongoing M&A talks. I mean, Skydance has now been in this M&A mix for many, many months. I would say almost 8-9 months. They had almost a 30-day exclusive negotiating period, which expired in early May. There was another offer from Sony, which was on the table. I think that the speculation that Sony is still interested, that's obviously dying. And we still kind of have the upgraded Skydance offer for Paramount, but we do require that final sign-off from the controlling shareholder, Sherry Redstone. Yes, they did have the annual shareholder meeting, as you just pointed out, and obviously they outlined a lot of strategic initiatives. Again, as you said, I don't think any of it matters right now, because you still have the potential of this huge deal kind of coming through.
So, Geetha, in your own research, you published this morning saying, final act in Paramount M&A saga as Skydance poised for takeover, dramatic television movie voice. Are you sure it's the final act?
I'm not, and that's why I said it's not over until it's actually over, because we've seen this movie now so many times, Ed, with Paramount, right? Skydance has been in, they've been out, they were prepared to walk away from the whole thing, and then of course you had Sony, and then you have some additional wrinkles now, because we have, Hollywood financier Stephen Paul, who is rumored to be offering a $3 billion stake for, the National Amusements, so Sherry Redstone's controlling stake in Paramount. So who knows? It's just been a whole roller coaster with Paramount for the past so many months now. So again, very hard to say. Too many twists and turns in this drama.
And with some key players. And ultimately, it comes down to Sherry Redstone and whether she prioritizes herself or in any way some of the non-voting shareholders here, many of them being value investors rather than growth investors. I think of John Rogers from Ariel Investors, who's joined the show before, to talk about his frustration that the premium goes to the voting holder rather than himself, well, rather than long-term investors in the non-voting shares. What do you think needs to be articulated for the future of this business? Is there a future of streaming for Paramount more broadly?
I mean, that is a great question, Caroline. And I think that is the question that, that's the burning question right now. I mean, yes, with the merger with Skydance, Paramount will still very much remain a public company. It's not like the Sony deal where the company would just kind of disappear. But the question is, do mergers really do anything? Do they mean anything? I mean, we've seen this over and over again, even with Viacom, the Viacom-CBS combination, which resulted in Paramount, we've seen a destruction of something like about 60% valuation. It was over 30 billion market cap when they kind of recombined in 2019. Today, it's close to 10 billion. So again, none of these mergers have really worked. You look at Warner Brothers Discovery, again, a fiasco there. You again look at Disney, Fox. All of these mergers have kind of really struggled. And so the question is, do mergers really solve the fundamental value? I mean, there is so much of pressure, secular pressure in the linear TV ecosystem. So again, that's a question that remains to be answered, and we'll have to see how that kind of plays out.
Keith Aranganathan of Bloomberg Intelligence, really appreciate the analysis. Thank you. Now, coming up, Elon Musk's XAI or AI exaggeration. More of the company's chip procurement plans next. Carrie.
Meanwhile, let's just go over to Germany for a moment. Deutsche Telekom shares getting sold to the tune of 2.5 billion euros. Germany, the nation itself, is offloading some of its stake in this key telecom provider over in Germany. Basically, Germany as a country is trying to get some more money to hand, trying to invest in other areas, such as its rail services. This is Bloomberg Technology.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything.
We'll have to build a portfolio of interventions. Lifestyle will also play into for some of them, and I think we can help many patients get down to a weight that they can maintain and live the life they want to live and avoid many comorbidities for the healthcare systems.
Morning from our world headquarters in New York, I'm Manus Krennic.
And I'm Danny Berger. Let's set your agenda.
Bloomberg Brief delivers the market news, data, and analysis you need live every weekday at 5 a.m. Eastern. Bloomberg. Context changes everything.
Time now for Talking Tech. First up, Christie's hackers who stole client data have failed to upload any of that information to the dark web. Now, the hacking group known as Ransom Hub threatened for over a week to release the stolen files on Monday, but there are no signs that has occurred. The criminals said Christie's had ceased communications after they had attempted to reach a, quote, reasonable resolution. Sticking on cyber, a cyber attack on Change Healthcare is putting pressure on Washington. Congress and the Biden administration are stepping up efforts to better protect highly sensitive data from falling into the wrong hands. Up to a third of Americans are said to have had their private information exposed from the hack, and it's cost United Health up to $1.6 billion in profits this year. And meanwhile, major hospitals in London, they've been thrown into chaos. According to the BBC, a cyber attack on hospitals partnered with pathology services provider Synovus caused operations to be cancelled, patients to be diverted, and deliveries to be rerouted. According to the Health Service Journal, the system was victim to a ransomware attack. Ed.
Okay, let's get back to that other big story. Elon Musk, according to reports, ordering and... let's be honest, in Muskian style, may have exaggerated its procurement of AI chips for use at Tesla and X. More, Bloomberg's Craig Judell joins us, this time from Detroit, his spiritual home. Some breaking news. Musk has taken to X, you'll be surprised to hear, explaining that reports around him directing the shift of H100s that were destined from Tesla to X or XAI were for a very logical reason. Tesla had nowhere to put them. Craig.
Yeah, it maybe stands to some reason, Ed, because you reported just in the last few weeks that Tesla was running behind on building data centers. They're standing these up in Buffalo and in Austin, Texas, where they have their big factory. But this is a case still of an indication within NVIDIA that they're sort of looking askance at some of the things that Musk has been saying about a really important aspect of Tesla's business. This is, after all, sort of where he's steering this company, is to self-driving and AI, and really trying to play up that aspect of what Tesla's working on as the fundamental car business really is struggling for the company. So for him to have to address a report like this in the midst of a slowdown in EV demand and this big pivot that he's making toward AI and self-driving development, it's not particularly reassuring if you're a shareholder.
Particularly as we look towards June the 13th and that all-important shareholder vote, where Elon Musk seems to be threatening that, look, if you're not going to give me my payday that you promised me several years ago, well, maybe there's more interesting things to be done with AI at different companies than Tesla.
Yeah, this reinforces that ultimatum that he gave back in January, that he wanted to essentially take his AI and robotics work elsewhere. And we've already seen indications that, he's sort of willing to follow through on that threat that, if I don't control something like 25% of Tesla, I want to work on this stuff at some of my other companies. And with any other CEO, that would maybe not necessarily be taken seriously. It would potentially be viewed as a veiled threat. But this is, after all, someone who runs 6 companies and has been standing up an AI company, an XAI, that is closely tied to X, formerly known as Twitter, and does have a significant amount of work that it's trying to do with large language models and essentially trying to build X up into a company that was worth the investment that he and some of his fellow stakeholders made in what was formerly Twitter.
About $44 billion, but a few years ago. Craig Trudell, thank you so much. Breaking it down. Coming up, we'll dive deeper back into NVIDIA and that global race for AI chips. That's next. This is Bloomberg Technology.
Arch has laid plenty of groundwork for future revenue, but for now, Mark Messler's most pressing challenge as CFO is conserving capital.
You have to have the short-term discipline to sort of circle the wagons around cash. I mean, cash is oxygen. I know where every ounce of cash is going, but we also have to be nimble around that as well, because things change by the day.
Archer went public in 2021 in a reverse merger with a SPAC, Ken Moelis's Atlas Crest Investments. Through August 2023, the company raised over $1 billion from investors including Stellantis, Boeing, United Airlines, and Cathie Wood's ARK Investment Management.
Does that ARK investment open doors for you to bring in different kinds of institutional money going forward?
It does. I mean, I think there's a lot of credibility that comes in with an investor like ARK. As I think about, my top targeted list of investors over the next 2 to 3 years, an investment like that gives us some credibility and gives us a little bit of staying power as I go in and talk to other investors.
With the SPAC pipe now closed, Archer's facing a new phase of raising capital.
I know the folks who aren't willing to invest right now may have large pockets of investment in the future. So I want to be in front of them. I'm wanting to show them progress. I want to create credibility with them that we are marching towards our goals of commercialization.
Fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything.
Welcome back to Bloomberg Technology. I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco. A very quick check-in on the markets. We got some economic data which has basically reinforced the idea that the Federal Reserve will have room to cut rates in the United States this year, and that's got a lot of people doing the math on their technology holdings and valuations. NASDAQ 100 tech-heavy index, a little bit softer. The SOX, or Philadelphia Semiconductor Index, is more markedly lower, down 1.2%. In fact, only 1 out of the 30 names is modestly in the green, and a big part of that story is kind of what's going on over in Taiwan at Computex. The main names that we're looking at throughout the show are Intel and NVIDIA. Actually, Intel opened a little bit higher in the session. You can see it's now lower 0.4%. NVIDIA softer by 0.5%. And things are heating up a little bit between those names. Listen to Pat Gelsinger speaking overnight.
We look now to have 1 billion transistors on a single chip, and even looking to 1 trillion transistors in a single package by the end of the decade. And unlike what Jensen might have you believe, Moore's Law is alive and well.
Mr. Gelsinger calling out his industry friend and rival, Mr. Huang, at Computex. Mr. Huang, also the other keynote speaker. Take a quick look again at Apple. I put that in there because earlier in the show we talked about this idea that NVIDIA, which is lower, and Apple a little bit modestly lower, is just a few percent away from overtaking Apple, 5% or so. And next week's a big week, right, Karen, because we have WWDC, where we think we're going to get the AI story finally from Apple and how it's going to work on my iPhone and iOS.
Goldman Sachs saying, look, reiterating that buy yesterday on the optimism around WWDC, but has been a real improvement in Apple's market capitalization of late. Let's just dig into it all with Bloomberg's Jess Menton, Bloomberg intelligence analyst Anurag Rana. And Jess, I want to go to you first in terms of the context here. Apple was having a pretty horrific 2024. Now it's broken back to basically flat on the year, and there seems to be this hope that it can get its AI narrative in gear.
That's right. So we just saw Apple on Monday actually close even for the year after it did hit an all-time high back in December. So it actually entered a correction, technically 10% off of that high back in March. But then coming into the second quarter, we have seen that stock recover pretty tremendously. If you look at its April 19th low, it's up about 18% in that span. And some of the conversations I was having with portfolio managers coming into the second quarter because of the big run we saw in NVIDIA stock in the first quarter. And then when you pair that against Apple relative to the S&P 500, that was one of its worst quarters this century coming out of the dot-com bust, whether or not there were going to be positions where people were kind of flipping some of the Mag 7 stocks there. So you're starting to see a little bit of that. But again, if you look at the top 6 stocks there, if you take out Tesla because of the volatility, you still see a record concentration there, about 30% in the S&P 500. But you are starting to see more optimism in Apple's stock recovering. And again, a lot of that has to do not just because we've talked a lot about that record buyback historic program that they had announced about a month ago, but then also some of the easing tensions that you would think some of the problems they would have had in China, Caroline.
Anurag, Apple ended last week with its 3rd successive weekly gain. From the Bloomberg intelligence perspective on Apple, how much are we just treading water to WWDC, and how much are you hoping to learn?
Yeah, I think it is the change in sentiment on Apple because of all we have heard about different things Mark has reported on what could happen on WWDC, especially a potential partnership with OpenAI and maybe even Google. So I think, it is a very important event for Apple, probably the most important WWDC in a long time, because it'll give us some direction in which way the phones can, grow either in the second half or next year. Because so far what we have seen, and again, sentiment aside, the numbers have not gone up, in the last 2 years or so. Numbers only been going downwards when it comes to Apple.
Jess, throughout the year, you've done some fantastic charting of Apple, charticles, chart-focused work, and we always used to refer to Apple as kind of the most important weighting name on the S&P 500. Now NVIDIA's kind of like, oh, this is a macro-level event. Everyone, quick, pay attention to NVIDIA. How has your day-to-day changed in relation to how you cover those two names?
Well, I still feel, especially when I'm speaking with my sources, that they do care about Apple because it's one of those names, even though we saw it struggle at the start of the year, because, again, with its buyback programs and the fundamentals, and then, of course, its cash flow behind the company for longer-term portfolio managers, that obviously is still going to be a key holding in there. So it's more of the shorter-term expectations there. But if you look from a hedge fund perspective, Goldman Sachs prime brokerage data, where they analyze data from hedge funds, they actually, coming into the second quarter, they started trimming their exposure to some of these big technology stocks, but they were actually looking at more different types of AI plays like utilities. So we've seen that particular group, especially since mid-April, really take off. And some of that, a lot of times people think of it as low volatility, dividend type paying stocks, and more of kind of maybe a safe haven. But this seems to be more of a play of a peak in rates, but then also a little bit of that AI play there. But again, if you're looking at NVIDIA, coming into today, it was only about 5% away from trying to catch up to Apple's market cap there. But then also Apple not too far away from $3 trillion again. So if it does cross, that'll be the first time since January since it's done so, Ed.
And just sticking on the Apple theme, and there was some reporting from other outlets such as The Information talking about how maybe we could have seen a deal for offering Apple TV Plus to China, of all places. And Jess just mentioned this, the perhaps easing of tensions or people trying to understand how the China-US relationship impacts Apple. What are you expected to hear on that in the future, Anurag?
Yeah, so from China is concerned, I think more than these, the TV and the other things, I think the rebound in iPhones, what we heard in the last couple of weeks is far more promising and encouraging, because there has been a big debate whether China is a structural problem for Apple or it's a cyclical problem. And the latest data, indicates, at least for now, that Apple's seeing a bounce back and people going back and buying the iPhone instead of, this particular argument that people don't want to buy Apple products right now. So that's, I think, a bigger driver for the change in sentiment when it comes to China.
Bloomberg's Jess Menton and Bloomberg Intelligence analyst Anurag Rana. Terrific to catch up with you both. Thank you very much. Now, coming up, we're going to be joined by Arun Matthew, partner at Excel, for his outlook on cybersecurity investing. That's coming up next. This is Bloomberg Technology.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Every single thing I've done, it's almost as if somebody has said it can't be done. I mean, I remember I was in a factory and I said, I want to go in the night shift. And they said, no, we don't put women in the night shift. I said, how will I be a successful production manager or personal manager of a factory if I never went into a night shift and knew how a third of my people worked? So in some ways it has fueled some of my determination. It's fueled some of my, okay, I'm going to show this is possible, a sense of I'm going to go get on and do it. It also gives me courage because I feel sometimes I'm not just doing it for me, I'm doing it for everyone else who comes after me. And I always tell them who ask for advice saying, put your hand up for the most difficult job. Put your hand up for things that are challenging. You know, go in there and lean into things that are difficult, that are challenging, because that's what gives you the greatest credibility, respect, reputation.
It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, The China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, The China Show. Weekdays at 9 a.m. Hong Kong time, right here on Bloomberg. Context changes everything.
It's time for Talking Tech, and first up, Cisco plans to invest $1 billion in startups that are working on what it calls, quote, secure and reliable AI services as part of a push to be a bigger player in AI. The company says it's already committed about $200 million of the money and is making investments in the likes of Mistral AI and Scale AI. Plus, the Washington-based lobbying group J.A. Green, known for its tech-heavy client roster, including Palantir and SpaceX, is raising $100 million for a new VC fund alongside investment firm Anzu Partners, which will aim to back tech startups that support national security. And Hackloot, the London-based firm that's provided advice to companies and buyout firms for nearly 30 years, is now building a presence in Silicon Valley as a startup investor. The investment arm of the firm has raised its first VC fund, surpassing a target of $50 million. Caroline.
Nice VC roundup there. Let's stick with venture capital. Time for VC Spotlight. Arun Matthew is with us. And he's a partner at Accel, of course. He's usually based in SF. He's jetted over here to New York as Tech Week is upon us. But you're the focus of cybersecurity investments. You've got a lot of early money, early checks into some of the key companies we think of when we associate with Accel. 1Password, Better Cloud, Corelight. Look, we've just had a whole swathe of news of cyber issues today, whether it be Christie's, whether it be hospitals in London being affected. Are companies getting that they need to invest in their cyber right now?
I think they are, but it's a hard problem. You know, we've been investing in cyber for almost 30 of the 40 years that Accel has been around. We've invested in 75 companies, over $2 billion across those 75 companies, 40 active investments across every major category of cyber. So we have a pretty good view of what's happening in the cyber landscape, but the threats are getting more and more extreme and more severe. And so it's a bit of a cat and mouse game. Yeah. You level up, you try to defend yourself, hackers level up as well. And so there's this dynamic between hackers and defending against it that's just really difficult.
Artificial intelligence making everyone level up?
It is, and it's being used on both sides of the game, on both the hacker side and on the defense side. But I do think that we are in a promising early stages of AI and the application of AI across a number of dimensions, particularly in cyber. And so we're really excited about what AI can do on the defense side in particular.
Arun, we've talked a lot about the idea that the generative AI tools available to play defense are equally as available to the threat actors, right? Those that are posing a threat from a cybersecurity perspective. With that in mind, what's the strategy, seed through to growth stage in where you guys deploy capital?
Well, for a lot of our companies, they serve companies of all types, enterprises in particular, have gotten the message that cyber is extremely important for them, and they're investing heavily. We're also investing behind companies that are attacking or that are in the mid-market and the longer tail of SMBs. A lot of cyber companies address these companies through what's called the MSP channel, the Managed Service Provider channel. And so we're investors in a company called Blackpoint Cyber that addresses these companies that are sort of underserved. And so whether you're a growth company or you're an early stage startup, cyber is critical. Many of these companies are hiring security talent and CISOs at the very inception of their journeys. And it's a problem that's being felt across the industry.
A lot of what I hear from founders, CEOs, could be a company or startup of any size, is that they probably didn't think as much about their software and hardware infrastructure as they should have done because of the pandemic, right? They had a flexible working policy. They had to change sometimes to being fully remote. And that, in some cases, can make them vulnerable. Is there an opportunity for you guys in that?
Absolutely. The concept of where you sit. 20 years ago, you used to go into an office, use a company-issued machine, a company-issued device.
I still do every day, Arun. Every day, 5 days a week, most days of the year. Keep going.
A large percentage of knowledge workers today are working from home. And they're never going back into the office. And so how do you protect across their personal devices and their enterprise, their laptop issued through work? And so we're seeing a number of solutions such as 1Password that are being deployed across every device, across every login, across every application to ensure full coverage. And I think that's where the world is moving, that security has to protect you in your personal and your professional life, not just one phase or dimension of it.
I asked you at the start whether companies are getting with the program, but ultimately this is about me, you, the consumer, our kids eventually realizing that to have two-factor authentication, if not better, is the consumer getting with the program?
I think they're getting there, but I think they're getting there a little slower. There's always a little bit of a delay in terms of the consumer understanding it, but these hacks are getting, as you said at the beginning, more and more severe. They're getting more and more public. And so whether it's Ticketmaster or a number of consumer applications, I think people are starting to get the message.
Arun, where is the innovation in cybersecurity technology happening?
I see it happening across a number of dimensions. The zeitgeist, tech media, VCs, we're all talking about AI. But AI is only applicable if you have good data. And so we're seeing a number of opportunities in data security in particular. Understanding the provenance of the data, the quality of the data, where that data goes. Understanding that is really critical to having a robust security strategy. So we're investing pretty heavily there. If you look at a lot of these hacks, identity is the core of identity-based vulnerabilities are the core of why these hacks are happening for the vast majority of these cyber attacks. And so we're investing pretty heavily in identity. The MSP channel, as I mentioned earlier, is a big opportunity to make sure that security is democratized for everyone. And I think the last one, we invested in CrowdStrike in 2013. It was an early investment for us. Endpoint was in its nascency then, but it's really exploded. A lot of the themes that we just talked about of having devices, mobile phones, laptops at home and at work are really important, and CrowdStrike protects those things. Of other categories, an opportunity as well.
Excel partner, Arun Matthew, terrific to have you on the program. Thank you very much.
Thanks for
coming up on the show. We're actually going to talk about New York Tech Week, Hippo, Bloomberg Technology.
You actually offer a payout at 7 years to encourage people to explore if they don't find themselves in management position? I mean, what's the thinking?
Yeah.
I mean, like, what's that about?
We're not forcing everybody to be kicked out, right?
But you encourage people to explore.
Exactly. We encourage people to think about their, because sometimes it's easier, even for me, if I don't need to change everything, it's easier, right? Change is really tough thing for everybody. Should I do this job for next 5 years, 10 years, or should I try a new thing? If I had to think, that is a great opportunity to think about it. We need to think about what kind of talents I can have for the next 5 years, 10 years. What's the best way to contribute to the world?
Politics to the world of business. 2 times a day at 1 p.m. and 5 p.m. Eastern Time, hosts Joe Matthew and Keely Lines deliver news, insight, and analysis from and about politics' biggest power players.
The president has been clear that is non-negotiable.
I mean, this is going to be an ugly, ugly year.
Balance of Power, live around the world twice a day at 1 and 5 Eastern. Only on Bloomberg TV and radio. Context changes everything.
Going viral and trending across social media and search, India's national elections. Voting chain coverage sits high up on Google real-time and daily search trends globally as tallies signal that Prime Minister Narendra Modi's ruling party was struggling to win a majority of seats. The race was also being discussed on X and LinkedIn as Modi vowed to carry on as Prime Minister, but he and his ruling party will likely be forced to rely on allies and other parties to form a government. In markets, India's stock market plummeted, erasing $386 billion in market value. Modi had appealed to India's 1.4 billion people with a package of business-friendly policies. His BJP party was leading in 240 seats, short of the 272 needed to form a government and well behind the 303 it won in the 2019 election. Karen.
Big market impact. Meanwhile, let's turn our attention back to New York Tech Week. It's officially kicked off right here in the Big Apple, Ed. And look, industry titans are here, startups gathering throughout the week for events, for panels, for conversations, for the odd party. Now, all week long on Bloomberg Technology, we're going to be speaking with those founders, with those investors and executives to talk about the ecosystem here in New York City and look, why they choose to make it home. I'm pleased to now say we've got Ben Lair, as managing partner at Hippo, of course, long-time focus of VC, of media, of digital built here in New York. But you've been writing some checks, and not all of the companies are New York City based. What is your view on allocating capital here, Ben?
Yeah, well, thanks for having me. We are longtime New York believers. I grew up in New York. We started the fund in New York. Everyone employed by the fund is here, and we've been investing in this ecosystem for a long time, far before it was cool. More than half the checks we write are to New York founders, but in many ways the world has gotten smaller, and obviously with COVID and then sort of the move to everyone getting comfortable Zooming for 3/4 of their life, we find ourselves investing in people all over the place, but we really do. We think we have our sort of strongest competitive advantage investing here in New York, and our community is centered here.
Ben, one might always say, oh, I can see media being here, fintech being here, but you've been allocating money to Calden Biotech, which is I think, Brooklyn-based company. You're doing Footprint, which is all about, the onboarding of people and knowing KYC. What is working here from an industry vertical perspective?
Yeah, so, when we started investing in New York 15 years ago, it really was a consumer market. And so a ton happening in media, a lot happening in commerce and sort of commerce adjacent markets. That has changed. And so I think it really started with Google and Facebook and sort of big tech building large offices here back in 2013, 2014, that you saw the market start to shift and you saw sort of real edge talent come into the New York ecosystem. That has only continued. And so I really believe today you can build any kind of company in New York. There is all different sorts of talent here. And, you know, I think anything that New York sort of decides it wants to be great at, it ultimately finds a way to be great at. And so there's pockets of value all over the place. And, you know, I will always think, or at least so far in my career, I have always thought that New York is the perfect place to build a company.
Ben, how strong and how important are the base of academic institutions out on the East Coast for you?
Well, I think that the Ivies and sort of like the large, you know, there's a bunch of undergraduate institutions and graduate schools sort of throughout the Northeast that send a ton of students to New York. And so I think that those are incredibly important. Interestingly now, I think last year, more Stanford Business School students came to New York than to San Francisco for the first time ever. And so it's not just the New York schools that matriculate here, but that's really important. Obviously, you have Columbia and NYU and Cornell's Tech School and lots of sort of schools within the city, which is great. But New York is a feeder for all different kinds of institutions throughout the country at this point.
If there are three main advantages or three biggest draws for New York City, what are they, Ben?
Well, I think it's you know, in many ways, New York is the center of the sort of economic world. I mean, this is the number one place that business is done globally, and certainly in the United States. So that's one. Two, New York is a really diverse and interesting place with just like, it's a fascinating place to live. And so lots of interesting, fascinating, smart people want to be here, which is really appealing. And three, Lyra Hippo is here. So come on. I mean, what can I say?
I like that last one, Ben. Got to shout out the food, many other things that are here. But aside from that, look, we can put all, like, you know, rainbows and butterflies around New York, but not all of it has upside. It's expensive to live. It's sometimes, you know, we get a bit hard around the edges when we live here, Ben. But what, from your perspective, are you starting to see in terms of the ferocity of competition to allocate money here? Is it hard to allocate checks right now? Are you getting beaten out of them?
Yeah, so this is a different market than it was when we started investing. There was a handful of sort of institutional firms that were deploying into early stage venture when we got started. Today, you have a ton of emerging managers. You have a handful of funds that look like us that are really sort of true New York committed long-term institutions. And you now have a bunch of large multi-stage firms, many of which are sort of West Coast based, that have built satellite offices here. And so there's many more options in terms of where founders can go to raise money. I still think that there are not a ton of really high quality, truly New York focused funds that sort of have their best talent here and have the kind of vibrant communities that, you know, that we do and some peers do. But there's way more talent these days. There's just more talented folks who are starting businesses and growing businesses.
Ben,
and so,
got to wrap it up there, I'm afraid, Brendan.
I'm sorry.
We thank you so much of Lyra Hippo. This is Bloomberg Technology.
In a multi-trillion-dollar industry, there's a lot of ground to cover.
Bitcoin ETFs rubbing elbows with the big dogs.
This frenzy has engulfed the entire world.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
Good morning. This is Bloomberg Surveillance.
This is Bloomberg Daybreak Europe.
You're watching The China Show.
This is Bloomberg Technology.
This is the countdown to the close.
Welcome to Balance of Power.
This is Bloomberg.
Morning. This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television.
Live from Bloomberg's World Headquarters in New York, I'm Shonali Basak.
And I'm Tim Stenovec. Welcome to Bloomberg Crypto. A look at the people, transactions, and technology shaping the world of decentralized finance.
And in just a moment, Tim, we're going to have a live exclusive interview in studio with Galaxy Digital's Mike Novogratz. We're going to discuss everything from Bitcoin to Ethereum to lending.
Plus, later, we'll be joined by Coinbase's head of protocols and the creator of Base, Jesse Pollock. As investors await potential Ether ETFs, we discuss Base and how the real future may lie more with on-chain technology.
And a multi-million-dollar loan backed by a violin that was once owned by Russian Empress Catherine the Great. We're going to discuss how the loan is a sign on how Galaxy Digital is broadening its lending business to wealthy clients. And now we are joined by Galaxy Digital founder and CEO Mike Novogratz. And let's just start with the simple things. Let's start with Bitcoin in the crypto world, because we are flirting with that $70,000 level. And you sit here, we have been around this space for a while now. Is there more upside risk or downside risk as you see it now in the crypto world?
Listen, I think we're getting skewed to the upside. I mean, just the fact that we're here at a crypto show and Bloomberg shows how long we've come since 2015, 16, 17. But we kind of got to the finish line. And when I say that, DC has finally agreed in principle that crypto legislation has to happen, that it should be bipartisan. We still have a couple holdouts, but the last few weeks have been unbelievably positive in pushing the Democrats forward, seeing this. They don't want it to be a political issue. And so that which was a headwind is becoming a tailwind. It's not a full tailwind yet. We have governments that can't stop spending money, and so that just is so powerful for the Bitcoin narrative. And then all of a sudden you hear, wait a minute, the state of Wisconsin's pension fund bought $140 million of Bitcoin? And so as we get more pension funds in, more institutions in, there's not a lot of sellers.
So the question we know you hate then, where do we end the year?
Listen, if we take out the 73,000 in the next week or so, we're going to end the year at 100,000, somewhere around there, or even higher. Markets work, they create ranges, and when the top of the range breaks, you have a nice extension. And so, the bottom of that range it started around 40, so 40 to 70, the 70 goes to 100. And so that's a good enough target.
Okay, we saw spot Bitcoin ETFs already get approved this year, and we've seen a lot of inflows there. So it makes me wonder what the next catalyst is for Bitcoin to actually break 73 and get to your year-end target of 100,000.
Yeah, so I had the same question asked to me, 5 weeks ago, and I said, I don't think it will unless we get one of two things happen. More regulatory clarity, which I thought was a low probability at that point, and or the Fed starting to move. We're getting the regulatory clarity. And even though it's not perfect, we got enough that people now realize this is coming. And why is that important? What does it mean? So if SAB 121, this arcane accounting bill, in time gets overturned, it allows Bank of New York and State Street and others to get into custody. If the infrastructure bill, if the FIT 21 bill gets approved, it allows Goldman Sachs and Citibank and all these other people to start doing sales and trading. And so as you bring those institutions in, huge money follows.
The Biden White House said it would veto that overturning.
The Biden White House vetoed the SAB 21, and then they said they wouldn't veto. And so they were talking. This was really sad what happened, because Donald Trump stole the show. He basically came out and said, "I'm your crypto president." The same day Biden had said he was going to veto this thing. Why would a sitting president, talk about vetoing a arcane accounting rule? And so that turned the whole crypto community into Trump's corner. And it almost was like a purity test. People said, if you don't vote for Trump, you're not a crypto person. And finally, the Democrats heard. And so real quickly, 9 Democratic senators voted not to support that accounting rule against Elizabeth Warren's wishes, against the SEC's
I'm going to steal Tim's question here. He asks all our guests this. I'm going to ask you, at the end of the day, who would be better for Bitcoin? Who would be better for crypto, Trump or Biden?
Listen, what is so clear to me is it's the wrong question. What is good for our industry is a bipartisan support of bills. Otherwise, you're going to be student body left, student body right. Listen, these elections are going to swing back and forth for a while. And so crypto shouldn't be partisan. The short answer is right now Trump would, because he says, I'm crypto president, I'm going to do all this stuff. But that's a short-term way of looking at things. What we've done a really great job of, and shout out to Brian Armstrong and lots of people in the industry, our own Tyler, we've got our own lobbyist in DC, is educating people on both sides. And there are tons of Democrats that are for good crypto legislation now.
So many people who are pouring money into elections right now and into lobbying from the crypto community. What's the scale? How much influence do they really have? As someone, frankly, Mike, who's a traditional way donor as well as a crypto donor.
The scale has gotten big. That's why the Democrats woke up. There's been about $150 million, on its way to $250 million in these crypto super PACs. That's not all crypto money. What happened was, when the Democrats kept saying we don't like crypto, and again, it was a very small group. It was Elizabeth Warren who said, I want to have an anti-crypto army. The way politics work in DC is every senator doesn't know every issue. They look to the leader of that committee. So Elizabeth really was running crypto for the Democrats, and she hates crypto. So all that money started to look like Republican money, even though it was supposed to be bipartisan, and focused on really key races. Sherrod Brown's race, John Tester's race.
What would you say to someone watching right now who might say, you know what, the SEC and lawmakers, it's their job to protect people from getting involved in things that could hurt them? And there are some people out there who say, well, there are a lot of people out there who say, I don't want to touch crypto because I've seen how volatile it can be, and I don't think it's something that, mom and pop folks should have in their portfolios. I see you laughing, Mike.
Well, because quite frankly, anyone who bought Bitcoin, with the exception of 1 or 2 people that bought it over 70,000, has made money. Like if you bought Bitcoin and held it like most Bitcoiners do, you're in the money. So they're protecting them against making money. That makes no sense. Listen, there have been frauds. There have been lots of, shenanigans in this crypto space, and those need to be prosecuted. And they were. They were prosecuted. They were pushed out of the system. Sam Bankman-Fried's in jail. Other people will go to jail. And so I'm not saying this was a lily-white industry in any space, but this idea that we got to protect somebody from this new technology that cuts out the middleman, that allows people to transact directly instead of paying a fee, is just wrong thought of.
Okay, we don't have a ton of time, but I do want to get to one question on Ethereum before we take a little break. If we do see ETFs for Ethereum approved in the coming months, which many people think we will see, what are your thoughts on sort of excitement in terms of inflows, given that you can already get exposure to crypto through ETFs and spot Bitcoin ETFs? Will we see the same type of enthusiasm?
Well, listen, we're going to see enthusiasm. What was so unique about the Bitcoin ETF, it was the first time in lots of ways that the US federal government said, crypto's okay. You're okay to do crypto. Even though Gary Gensler didn't want to say it, he said it. And the government said it. Larry Fink said it. Larry Fink is the largest asset manager runs the largest asset management company in the world. And so the credentialization of Bitcoin and crypto, that was kind of limit up. This is a second step towards that. So it's great for the Ethereum community. It won't have the exact same impact, but it'll have a big impact. Right? All of these ecosystems are about bringing new people into the ecosystem, into the circus tent, right? And so this is an easier way for lots of people to participate in the Ethereum community. And so it's nothing but a net positive.
We're going to talk a lot more about Ethereum in the next block. Galaxy Digital founder and CEO Mike Novogratz sticking with us. And coming up next, we're going to have also joining us Coinbase's Jesse Pollock to discuss Base and the Ethereum network.
And Galaxy Digital just turned a 300-year-old violin into an NFT. We're going to discuss.
And to access all the latest data and news on crypto, check out CRYP Go on the terminal. This is Bloomberg.
The names that move markets are on Bloomberg.
How worried are you about the U.S. election? It's for the American people to decide what they want with their politics, with their government, with their future. But obviously, we are all concerned about it because the United States is the largest economy, the largest defense country in the world, and has been a beacon of democracy with all its upside and downside. We cannot interfere with their choice. It's their choice, and that's the beauty of democracy. But we have to be extremely attentive and anticipate, just as we do with inflation. You know, we do scenarios. What if, what if, what if? Then what do we do? Where I sit now in Frankfurt, head of the ECB, I think that we have to be strong as Europeans and not assume that we can rely on whoever our friends are around the world, because these things change over the course of time, as we have seen.
Bloomberg. Context changes everything. Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question.
Great question.
Best question I get all night.
Bloomberg. Top experts. Great questions. The top names in business are on Bloomberg.
They're kind of predicting a soft landing, and you see that in both stock price, which are kind of high, credit spreads, which are kind of low, markets, which are kind of wide open. That's all good. Doesn't tell you what the future is going to be. But I think there are a lot of inflationary forces in front of us that, you know, may keep it a little bit higher than people expect. My view is whatever the world is pricing in for a soft landing, I think it's probably half that. I think the chance of something going wrong is higher than people think.
Bloomberg. Context changes everything. Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg. Context changes everything.
The promise of technology and the promise of technology, especially in the context of like multi-generational planning, in the context of retirement planning, in the context of like the planning of your financial life, is really interesting and really impactful for people. And so we're really of the belief that opportunity in crypto really is for everyone.
In the advent of the Ethereum ETF, 21 Shares President Ophelia Snyder on the show last week. And a new low-cost Layer 2 blockchain called Base is becoming a major building block for popular apps in finance and social media. Coinbase head of protocols Jesse Pollock created the Base layer and joins us, as well as Mike Novogratz, who sticks with us for this conversation. And Jesse, I think, you know, you can look at a lot of different ways here on how people are using Base, but I want to hear from you, the data. What does it show in terms of how big Base is actually getting for Coinbase?
Yeah, so Coinbase has always been the most trusted and easiest way for people to access crypto. And I think what we're seeing with Base is the same thing is happening. So in Q1, we saw 8 times more developers start to build on Base, and we're seeing really rapid growth of the number of users who are also transacting on Base. And like you mentioned, they're doing all sorts of things, from payments to commerce to music to gaming. We're really seeing the next generation of the internet be built on-chain on Base.
Jesse, give us an idea of what you're seeing in terms of adoption. I understand developers are building on Base right now, but what numbers can you share with us that show that this stuff is actually being adopted by a wider public?
Yeah, so as we reported in Q1 earnings, we're seeing millions of people start to transact on Base. We really still think it's early in the overall adoption, and we're really looking at this similar to the internet era, where over the next few years, we're going to see people go from pretty much doing nothing on chain to doing more and more of their daily life on chain every single day.
Jesse, let me ask you a question. So the $64,000 question really is, what changes in the regulatory framework need to be made before Base can issue its own token, its own L2 token that gets to trade, where the users start to be able to generate their own value and keep value by being a user, right? So we have this whole crypto ecosystem that's been outside of the regulatory framework. You guys are, well, you're often fighting with the SEC, but you're operating as a listed company with regulatory guardrails. What has to happen?
Yeah, so as we've said from the beginning, we have no plans to issue a token for Base. And I think what we're seeing in the broader regulatory environment in the United States is that it's just too unclear for entrepreneurs. And I talk with builders every single day, and what we're seeing pretty consistently is that builders are having to spend more money on lawyers and regulatory guidance than they are to spend on engineering. And that sort of overhead for startups in a country that has historically been known for innovation is really, really bad. And we think that if we don't get that regulatory clarity that we've been pushing for, we're going to see innovation leave the United States and go over shores.
Right. But I guess we had the Fit 21 bill pass, at least the House. It's not in the Senate yet, but the Senate's going to come with their own view. Would something as important as that then allow you guys to say, hey, because there's a tremendous amount of potential shareholder value, locked up in what you guys are doing, and so.
Absolutely, and we're really excited about the shareholder value that Base is starting to generate. As you've seen, it's starting to generate really significant revenue for the business. I think in terms of the regulatory framework, we've seen progress with Fit 21. We've seen progress with state frameworks like the DUNA in Wyoming, and we're really excited to see that mature, and we're confident that as those frameworks mature, we're going to see more innovation from Base and from the broader on-chain economy.
Hey, Jesse, what about the whole issue around staking with the SEC? If there is a larger question around the staking businesses, what does it mean for Ethereum, and what does it mean for the Ethereum network's potential to really grow in a significant way?
Yeah, so we've been obviously working with the SEC on this for a long time. We do not believe that Ethereum is a security, and I think that the regulatory and the courts are starting to clarify that as well. And so what we're seeing for Ethereum is that it's really the beginning of a global on-chain economy. It's creating a new next generation of the internet that's letting creators, that's letting builders do better than they otherwise would have. And so what we're really pushing for is more regulatory clarity in the United States so that innovation can keep happening and we can keep building this future together.
Jesse, one thing that struck me also is that you have the exchange itself, but when you look at Base, beyond the ability for people to build on it, how does it make money at the end of the day? Does it add any financial value to Coinbase, and does it charge anything of the people who are using it or plan to?
So the really powerful thing about Base is that it's a new technology platform. And kind of like the internet transformed the world in the early 2000s, we expect Base and other chains to transform the world in the 2020s and bring about the new on-chain era. And the way that happens is by making it faster and cheaper and easier for everyone to build new things. And when people build those new things, we're going to see an incredible wave of new applications that users are going to use and that they're going to pay for. And Base is the application platform, kind of like AWS, that enables that. So as more applications are built, Base is going to generate more revenue. And as more applications are built, Coinbase is going to be the front door that lets users access those applications. And that combination, kind of both being the platform and being the front door, is incredibly valuable. And it's something that we think is going to generate a massive amount of value for our customers and a massive amount of value for the business in the next few years.
Jesse, what would you say to somebody who's watching right now saying, wait a second, if we're talking about this being built on Coinbase's ecosystem, I'm kind of getting flashbacks to the 90s era of this walled garden of AOL and the idea that, Coinbase could be the owner of this platform, and that would concern some folks. What would you say to critics out there who say, you know what, I want this to be actually more open, and I want to build on something not associated with any company?
Yeah, well, I think this is one really important thing about Base. Coinbase is incubating Base, but Base is an open, global, on-chain economy that's going to increase innovation, creativity, and freedom. And the only way that happens is if Base is decentralized. That's why we built Base as an Ethereum layer 2, so we can inherit the decentralization of Ethereum. And that's why, from the beginning, we've been incredibly dedicated and committed to making Base as a technology platform decentralized. And so what we're seeing is that hundreds of thousands of users, tens of thousands of builders all around the world are recognizing that decentralization and choosing to make Base their home because they believe that they want to be a part of the biggest economy that's going to ever be built.
But Jesse, isn't that kind of a half step until you guys can launch a token? Because when you launch a token, it really can be decentralized. But until then, it's not really decentralized.
There's a couple different components of decentralization. On the technical decentralization front, we're making really great progress. Base started as what is called a stage 0 rollup, which is a kind of an early stage of decentralization, but we're in process and very close to moving to being a stage 1 rollup. And what that means is we're going to have a really strong level of decentralization that gives guarantees around censorship resistance, give guarantees around having an open platform for builders that let them actually build with confidence. And so that's what we're most focused on. We're focused on making the technology decentralized so everyone can build on Base and know that it's going to be there forever and they're going to have the same access to it forever as well.
Mike, you have a lot of questions about a potential Base token. Would you be a buyer?
Yeah. It's interesting, right? I mean, hats off to these guys. They've done a great job. The way this ecosystem works is the more people that build, they usually then get more of the tokens, and the tokens go up because they build them. These are communities. Right. And I remember when I really first started trying to talk to people about token ecosystems, I used to use a decentralized version of Uber called Duber. And, then I met Travis later on and was explaining this to him, and he was telling me what it took, and I was like, ooh, that's why Uber got built by him and not by this decentralized community. Maybe now it's time for decentralized stuff. These are really hard things to do, to jumpstart it, to get people using it, and that's where value comes from.
Big thank you to Mike Novogratz and also, of course, to Coinbase's Jesse Pollock. Coming up, why Galaxy Digital just tokenized a $9 million violin from the 18th century. We dive into that right after this. This is Bloomberg.
I'm Alex Rodriguez. I'm a former New York Yankee and played professional baseball for over 20 years. Almost that entire time, I was thinking about business.
And I'm Jason Kelly. I've been a business journalist at Bloomberg for more than 2 decades. And across my career, I've covered everything from the Olympics to Wall Street.
From Bloomberg, this is The Deal. Each week, you'll hear us in conversation with business icons.
This show will explore deal-making across sports, media, and entertainment.
This is very fancy for a podcast.
If I knew what it was going to be, I'd have put everything I had into it.
I get asked more about our relationship than I do my wife. And you know what I'm saying?
This is a show where we talk with big-time athletes and executives about the wins, the losses, and lessons learned along the way.
This show is called The Deal.
The Deal?
The Deal.
The Deal.
That deal.
The Deal.
Huge deal.
Who dug this up? What are y'all in trouble?
People ask me all the time, what is the key to being a really good investor? And I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
Go figure out how to get exposure to hyperscalers, which we think will be the biggest winner in what AI and data storage will do for the world.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything.
This is Bloomberg. In a lot of ways, days, it looks a lot more like a traditional investment bank. Mike Novogratz's Galaxy Digital is broadening its lending business to wealthy clients. And the latest deal is a multi-million-dollar loan backed by a violin once owned by Russian Empress Catherine the Great. Galaxy tokenized the violin in the form of a non-fungible token that was bought last year here by Yatsu of Animoca Brands. We're joined by Mike now to discuss why he did this. And you see the tokenization of the violin. You lent against both the hard asset as well as the tokenized asset. My understanding is by tokenizing it, you are able to kind of lend more here, whereas you need to over-collateralize a lot more on volatile crypto assets. So what is kind of the lending opportunity that this is really giving you, and why do you trust the tokens more?
Well, listen, I mean, some of this, of course, is symbolic, right? Like, it's a $9 million Stradivarius. Catherine the Great played it. And we know tokenization is coming. So we said, let's do something that'll get some eyeballs. Yad is one of the great entrepreneurs. Every time I sit with him, I leave the place and just feel a lot smarter. And he happened to grow up a classical musician. And so he's got a great collection of instruments. And he wants money. So he comes to us for a loan. We're like, okay, we'll take your Stradivarius. This will sit in custody. What's interesting, if these great violins become more valuable if you get the best violinists in the world to play them. Right, the provenance of each violin, from Catherine the Great to maybe it's Josh Bell or whoever who gets to play it, makes it worth money. If it's our collateral, they'd have to come to us and ask it. We have a kind of a two-factor authentication with this token. They can't move it unless both we say it's good and they say it's good. And then we can lend the violin out and whatnot.
What can you tell us about the terms of the loan? Like, why come to you for the loan and not go a more traditional route? Because you can take out loans against assets like this and other places.
Because Yat runs one of the biggest digital asset companies in Hong Kong. And most traditional banks are scared of digital asset collateral. They does not, even though this is physical asset collateral, lots of his net worth is tied up in his stake in Animoca and other digital assets. We actually understand the value of digital assets. And so we have a big business lending dollar cash to clients who have
There's always
digital assets.
this question in digital assets and traditional lending on what can go wrong. So say tomorrow you have Yacht saying, hey, I want to fractionalize my token. And then the value of that token fluctuates. How do you deal with that?
Well, I think, listen, the clear next step for lots of assets like this would be to fractionalize them. And so that's the excitement of the whole thing, right? I don't think we would have done this if this was the end game. But tokenization is coming, and it's going to come in lots of different ways. Republic Crypto, which is a company we have an investment in, today announced they were tokenizing 10% of an EPL team and selling that off to fans. And so I think someone told me this story about bankruptcy once when I was young. It happens really slowly, then really quickly. Tokenization is going to happen really slowly, and that's the phase we're in, and then really quickly. But mark my words, 2, 3, 4 years out, you're going to see so many things tokenized.
Really quickly here, you have like 20 seconds. Is this one step closer to becoming that elusive Goldman Sachs of crypto?
We go to work every day. We have close to 500 employees, and we're trying to figure out how to make a difference in our industry. I don't like calling ourselves the Goldman Sachs of crypto anymore because the crypto industry is really transforming what traditional finance is going to be. Most of our investments these days are moving more towards on-chain.
Right.
And as the on-chain world picks up, the off-chain world is going to slow down.
We got to leave it there, bumping up against the clock. Galaxy Digital's Mike Novogratz. Mike, you've got to come back, but not too soon. I don't want you taking my job. That is it for Bloomberg Crypto. Join us again next week. This is Bloomberg.
You are also an owner, I should have pointed out, of 3 major sports teams.
That's right.
Right? And you're the first woman, as I understand it, the first woman to own 3 major, have a stake in 3 major sports teams. Is that right?
Yes, and we'll say African American.
You were approached by the owner then of the Washington Wizards and the Washington Caps about maybe buying the Washington Mystics, which is the women's basketball team. And what did you say?
Well, first of all, Zay Poland He did come to me and Susan O'Malley, and they said, Abe Polson says, look, I want you to be the face of the Washington Mystics. And I said, what do you mean be the face of? He says, I want you to buy this team. His health was failing. And I have to tell you, and a lot of women can understand this, we never get these opportunities. So that was the first thing that struck me, and I was flattered. I was really flattered. I said, well, Abe, what are the financials on this? And he handed them to me. He says, well, they're not making money. But I was still intrigued about team ownership.
Every single thing I've done, it's almost as if somebody has said it can't be done. I mean, I remember I was in a factory and I said, I want to go in the night shift. And they said, no, we don't put women in the night shift. I said, how will I be a successful production manager or personal manager of a factory if I never went into a night shift and knew how a third of my people worked? So in some ways it has fueled some of my determination. It's fueled some of my, okay, I'm going to show this is possible, a sense of, I'm going to go get on and do it. It also gives me courage because I feel sometimes I'm not just doing it for me, I'm doing it for everyone else who comes after me. And I always tell women who ask me for advice saying, put your hand up for the most difficult job. Put your hand up for things that are challenging. You know, go in there and lean into things that are difficult, that are challenging, because that's what gives you the greatest credibility, respect, reputation.
We'll have to build a portfolio of interventions. Lifestyle will also play into for some of them, and I think we can help many patients get down to a weight that they can maintain and live the life they want to live and avoid many comorbidities for the healthcare systems.
Welcome to Bloomberg Markets. I'm Shonali Bassick. Let's get a check on these markets here because we're looking at an S&P 500 here still in the red for a second day, about 0.3% lower. The NASDAQ 100 also around the same decline. The Philadelphia Semiconductor Index, even a day after NVIDIA hit a new record high, also feeling a decline of more than 1.3% across the index, and a two-year yield seeing a bid hanging nice and low, below 480, even in fact at 477, about 4 basis points lower on the day after another decline we saw on Monday after economic data justified some of a greater probability for a rate decrease by the end of September. We're going to get to some midday movers as well on the equity side because we're still watching NVIDIA and Tesla after Elon Musk reportedly told the chip maker to ship AI chips originally intended for Tesla to his other companies X and XAI. The move would delay Tesla's receipt of over $500 million in processors by months, and Musk has touted Tesla as a potential leader in AI and robotics. And cloud computing provider CoreWeave has offered $5.75 per share to acquire Core Scientific. Core Scientific is pivoting its business strategy from Bitcoin mining to AI operations. CoreWeave last month raised $8.6 billion at a $19 billion valuation. And we think about the sectors here in the S&P 500. Real estate is one of two sectors in positive territory today on the S&P 500. We're going to bring in Uma Moriarty, Center Square Senior Investment Strategist, talking really about the rate impact here. We just saw that massive move down in yields, short-term and long-term. How does that play through real estate markets as you see it, and where will we see the most impact?
Great to be back with you, Shonali. And yes, exactly as you mentioned, right? We've been waiting on lower interest rates in terms of a catalyst for the REIT sector in general. And it does seem like we are seeing several data points, whether it be what we saw last week in terms of the PCE, consumption, savings, et cetera, or even what we've been seeing so far this week in terms of the PMI report that came out yesterday, as well as the job openings report that we saw this morning, all kind of pointing not to necessarily things falling off a cliff, but some cracks appearing in the economy. And I think that's what we're really seeing in terms of the reaction across the rates in terms of lowering rates. We're seeing that across the yield curve. And of course, a sector like real estate, which is so rate sensitive, is really seeing some good upside on the back of that compared to the other areas in the S&P 500. And in terms of, where we see some opportunities, you've spent the last few minutes talking about the impact of AI, chips. Data centers is a great area within the real estate space, especially to really capture some of that demand.
Now, this is such a confusing dynamic, right? Because on one hand, you could see how lower interest rates would, of course, be a boost to the real estate sector. But if you're worried about the strength of the economy or any weakening, wouldn't that be a negative for real estate as well?
Yeah, there is a great balancing act, right? So really looking through underlying fundamentals, understanding what's happening from the perspective of both supply and demand is super important from a real estate perspective. Another area that we're really bullish about is senior housing, right? It's an area where you're seeing demand that is more needs-based, as we are seeing a lot of the population age into senior housing requirements. At the same time, new development of senior housing facilities is effectively non-existent. And so we're seeing some really strong rate growth in the senior housing space. And that's happening at the same time as we're seeing great margin expansion because we are seeing some easing from the labor front, especially. So you're seeing that margin expansion on top of really strong rate growth. So we're seeing strong NOI growth across senior housing. For example, a great name, something that we're really highly convicted on here in Center Square from that perspective is Ventas.
Now, when you think about it, it's interesting because, yes, we are talking about a month of gains, a day of gains in real estate. It is the best performer, as we've been talking about today. On the day, it is the worst performer. In fact, the only performer in the S&P 500 that is still down on the year, down about 5% nearly. And so are people just starting to really buy the dip at this point? Is part of the idea here that the sector may be sold off too far, or are there still losses to be had?
Yeah, that's a great point. And one of the things that's really changed over the course of the last few months here this year is just the market expectation in terms of rate cuts, timing, as well as the degree of rate cuts to be seen this year. If you remember, at the end of last year, we saw a big rally in some of these sectors like real estate because the expectation was that we were going to see more rate cuts and have them happen earlier in the year. That expectation has been reset as the path to lower inflation has been a little bit bumpier to start the year. And so that resetting environment from the perspective of expectations for rate cuts, I think, is really what's been dragging down the REIT sector. That being said, based on the economic data that we're seeing, we still think rate cuts are in play and towards the end of the year, and that's going to be a great catalyst for the REIT space, which is currently trading at a pretty material discount, especially as we think about where we are seeing transactions taking place in the private market for that underlying real estate. And at the same time, from the REITs, you're really getting access to the best quality real estate portfolios that are really out there today. We talked about something like multifamily, for example, right? We've been getting some updates across the multifamily REITs over the last few days, preparing for the industry NAREIT conference that's happening this week. And we are seeing fundamentals holding up a lot better than expected. And these REITs in the multifamily space are trading at a material discount to where we're seeing transactions taking place in the private market. So there's still opportunity here, I think, for investors that are looking to access real estate and get in at a really great price here today across the REIT market.
Now, you look at Fed swaps right now, and they're pricing in through the end of January about 2 rate cuts. Is that enough to ease the pain on the system, given how far and fast rates have risen? And given that we might only see 1 or 2, you have to ask, Uma, where will the rest of the pain still keep being?
Yeah, that's a great point. And one of the things that we've been focusing on here at Center Square is not really only what's happening across the short end of the rate curve in terms of what the Fed might do from a policy rate perspective, but where do we think that the long end of the yield curve will be, right? From a 10-year Treasury perspective, we think that rates are probably going to be in the 4% range for the foreseeable future. And there are some structural issues that are impacting this. I mean, just think about the amount of uncertainty that we're seeing out there in the world. And I think investors are asking to be compensated for investing their capital today, which we haven't seen in a long, long time. And so as we think about where real estate goes from here, we're really focused on that 10-year Treasury yield and what that means for real estate pricing. That being said, I think the REIT market has really been repriced for that 10-year Treasury yield. We're not really seeing the same across the private market. I think that's where some of the pain will continue to be as we see assets across the private market getting repriced into this new reality of debt costs.
Center Square's Uma Moriarty, we thank you so much for walking us through a view on the rate environment here, as well as a hot sector on the day. Now, we're also keeping an eye on India. Indian stocks are down after Narendra Modi vowed to continue as India's prime minister, even after his party lost its majority in parliament. Modi claimed victory for his coalition in a post on X. And here is what Raghuram Rajan, former Reserve Bank of India governor, told Bloomberg earlier.
We have an election. The results have been coming out, and I think it's a splendid result because it tells the government it needs to change course. The old course was unviable, and we can talk about that. Of course, markets seem to be disappointed. We can talk about that also, why markets are reacting negatively. But I think what is happening today is really, in the long run, really good for India because it forces India to choose a different course from the one it has been on, a course which has led to much wider unemployment and distress than needed in the country.
Is this an election result that you see will bring the technocratic and elite South together with a more emotional and historic North? Does it bring the polarity of India together, or do we have a more separate India in 2026?
No, it's actually a win for democracy, and that's good for India because what democracy does is it allows the different paths to essentially express themselves and to negotiate. The problem earlier was India was trending towards a more autocratic country, a country with one leader who had a larger-than-life image. And that, unfortunately, meant that the BJP leadership wasn't listening to the economic news on the ground that people were actually suffering hardship, wasn't listening to the broader sense that, the weaponization of various instruments of the government to put, opposition party leaders in jail was simply not gelling. And it would have taken India down a course which was ruinous in the longer run, maybe in the short run beneficial to the big business groups. And that's why the market is reacting adversely.
Coming up next, we are going to talk about a big merger in play. Boston Beer is reportedly being pitched a merger by cannabis producer Green Thumb. We're going to talk about the details of that next. This is Bloomberg.
You actually offer a payout at 7 years to encourage people to explore if they don't find themselves in management position. I mean, what's the thinking?
Yeah.
I mean, like, what's that about?
We're not forcing everybody to be kicked out, right?
But you encourage people to explore.
Exactly. We encourage people to think about their, because sometimes it's easier, even for me, if I don't need to change everything, it's easier, right? Change is really tough thing for everybody. Should I do this job for next 5 years, 10 years, or should I try a new thing? If I had to think, that is a great opportunity to think about it. We need to think about what kind of talents I can have for the next 5 years, 10 years. What's the best way to contribute to the world?
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials, find people, analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Good morning from our world headquarters in New York. I'm Manus Credit.
And I'm Danny Berger. Let's set your agenda.
Bloomberg Brief delivers the market news, data, and analysis you need live every weekday at 5 a.m. Eastern. Bloomberg. Context changes everything. It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show. Weekdays at 9 a.m. Hong Kong time, right here on Bloomberg. Context changes everything.
It's time now for Stock of the Hour. Boston Beer has been the center of M&A speculation ever since Friday, when there was a report that Suntory was in deal talks with them. And since then, Suntory has denied that report. But today, another report says that cannabis producer Green Thumb has expressed interest in Boston Beer. The Wall Street Journal reporting the CEO of Green Thumb sent a letter to Boston Beer on Sunday to discuss the idea. Green Thumb saying its policy is not to comment on market rumors, but we're going to discuss this idea with Bloomberg's Tiffany Carey. And if you think about this, of course, the idea of Green Thumb versus Suntory is a massively different direction for Boston Beer than you would have thought. Tiffany, what would this really mean for the future of the alcohol industry, let alone for Boston Beer?
Well, I think there's a lot of concern that cannabis is taking market share away from alcohol. Clearly, that's been a concern for a while. Yet we have seen other attempts to merge alcohol and beer businesses that have not gone that well. So this would be really interesting if it did bring something successful around. Obviously, Boston Beer has sort of stuck its foot in the water. It has a product called Teapot in Canada, but to this date, there hasn't really been a successful union of those two worlds, cannabis and alcohol.
Right. That was going to be my next question. I mean, does it signal future product innovation by means of liquid cannabis, by means of drinkable options here?
I think there's a lot of innovation that's been done over the past couple of years. I still hear a lot of reports that people aren't particularly happy with the way some of these cannabis drinks taste. You know, some of them taste a bit bitter. Earthy or grassy is a slightly more kind term to put the way some of them taste. I do think there's a lot of interest in the sort of financial synergies that a cannabis company and an alcohol company could have in terms of distribution routes. And also some of these cannabis companies would really like to list on the major stock exchanges. Potentially a deal like this could help them do that.
Let's talk about Boston Beer for a second, because of course it's still down more than 1.2% on the day. It was down yesterday as well. It surged on the deal news on Friday. Do they need a deal ultimately?
That's not clear, and I think obviously Suntory has approached as well. There seems to be some interest there. People are circling. It sort of remains to be seen whether or not the controlling founder there, Jim Koch, is going to be open to doing deals.
Tiffany, we thank you so much for keeping an eye on this industry. Of course, a fascinating development here for one of America's well-known beverage companies. Now we're going to turn to a different industry. We're going to turn to ETFs. A growing number of stock pickers betting on a small number of lucrative companies across America to outperform broader index funds, defying wisdom on Wall Street that diversification is key. Bloomberg's Katie Greifeld's always poking into the logic of portfolio management. And so you see what investors are doing, and some of the statistics here really struck me in the story, of course, one of the most read on the day.
Yeah, this was a fun story to report and then write, because basically it's go big or go home. And that's what you're seeing increasingly when it comes to the ETF industry. There's two ways to really look at concentration, which I did in this story. And when it comes to equity ETFs that have less than 50 holdings, so a very small portfolio, 88 of those ETFs launched last year. You think about the entire 2010s, the average was 19 new launches with less than 50 holdings. And then if you take a look at the average number of holdings in just new equity ETFs, even beyond that super concentrated measure, the average number of holdings in equity ETFs is around 136. That is the lowest level since about 2010 or so. So portfolios, at least in ETFs, when it comes to equities, they've been getting smaller.
Is this so much of the evolution you're seeing away from mutual funds traditionally to stock picking coming in the ETF wrapper? Because if you think about it, it used to be buy an index fund, let your money sit there and let it ride. We're putting a lot of faith in people in these, in these ETFs.
I do think it's an interesting stat for people who think about ETFs as still being largely passive, largely index-based, because ETFs have been getting very, very active, and this goes to prove that. And you do see a lot of managers, active managers, now coming to the ETF wrapper, and that's been selling. I mean, you take a look at flows into active ETFs for about the past couple years. They've been taking in a record share of overall flows, and they've really been coming at the expense of mutual funds. So it's definitely a continuation of that trend as well.
What does performance look like, and who are some of the best performers in this new world?
Well, when it comes to concentrated equity ETFs, it's pretty interesting. It's basically you can have higher highs and you can have lower lows, and that's exactly what the Bloomberg Intelligence data shows. If you take a look over the past 3 years, 35% of the most concentrated equity ETFs did beat the S&P 500. You take a look at the least concentrated group, and only 17% of them did. That sounds great, but the catch is that when you did miss and you underperformed, it was more painful. The worst performing high concentrated ETFs, they trailed by 20% or so in 2023. That compares to about 10% for the least concentrated fund. So again, it's go big or go home. You have pretty good odds of outperforming, but you also have high odds of having a more painful miss as well.
Kind of also feels like it's at the end of that rally where you had all the big names performing well at once, and now we're finally seeing some market breadth. So we'll see. Anyways, Bloomberg's Katie Greifeld, thank you so very much. Exciting to talk to you about one of your bigger stories this year so far. Now, coming up next, we're going to talk about the stock market rally squeezing out short sellers. We're going to take a look at that next on today's Wall Street Beat. This is Bloomberg.
Fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything. From the world of politics to the world of business. 2 times a day at 1 p.m. and 5 p.m. Eastern Time, hosts Joe Matthew and Keely Lines deliver news, insight, and analysis from and about politics' biggest power players.
The president has been clear that is non-negotiable.
I mean, this is going to be an ugly, ugly year.
Balance of Power, live around the world twice a day at 1 and 5 Eastern, only on Bloomberg TV and radio. Context changes everything. It's Jobs Day, and Bloomberg has the report under surveillance.
We are seeing the labor market come into better balance.
That foundation for the economy is solid.
This Friday, Jonathan, Lisa, Anne-Marie, and Mike will bring you crucial data and expert analysis at terminal speed.
This is not a labor market that's slowing down or grinding to a halt.
Looks like everyone is looking at wages.
Payrolls report, 8:30 Eastern Time.
The May Jobs Report, Friday on Bloomberg.
This is Bloomberg Markets, and I'm Sonali Basak, and it's time now for my favorite beat, the Wall Street beat. Today we're looking at the issues facing short sellers in the industry in today's relentless stock rally, and it is also the big take for Bloomberg. Joining us now is Bloomberg's Denitsa Seikova, who wrote this story, and you really spoke to everyone here, from Jim Chanos to Andrew Left. And are they really all throwing in the towel at this point?
We started looking at the data, and we started looking at the S&P member, and the short interest was down to 2001 lows. We started looking at the number of hedge funds. It's down to 14 constituents according to one of the indices. So we went to the big names. We went to Jim Chanos. He said it's hard to raise capital. It's kind of impossible to raise capital. And you can imagine if Jim Chanos himself is struggling to find money in short selling. A lot of the smaller players probably find it even more difficult. We went to Andrew Left. He called them a dying breed. We reported recently on Carson Block launching his latest fund, and it's a long-only fund. And that reflects a lot of the industry. There are closures, there are moves to long-only funds. So that really focused short-selling funds is really disappearing very fast.
Now, I want to clarify as well, because throwing in the towel, but not completely, even though Andrew Left said that it's a dying breed of short selling, he was also the person who bet against GameStop as it was soaring just a day ago, as he told you guys. So to what extent are people starting to step back from this industry, given that there are still obviously opportunities?
Yeah, for sure. So we have to acknowledge there are a lot of young people coming into it and very passionate about it. They're releasing a lot of reports that had really strong impact on the stocks. But that said, the amount of money you get into those funds is a lot smaller. Talking about Andrew Left, we did that story about him yesterday, but he said his bet is much smaller in size. And I think that's an interesting theme because a lot of the short sellers really struggled in 2021. And there is this kind of sense that there is still a battle with retail traders. So for Andrew Left, he got burned in 2021. He potentially incurred some more losses in May and now, but he continues to bet under those stocks. But the thing is, he has reduced the ammunition he puts in those short bets.
Is there a structural reason at this point that short selling would become more difficult for any reason?
I think on a very simple level, just the relentless 30 trillion stock market rally makes it impossible. It's just like a constant, and obviously people have been talking for so long. Now interest rates are higher, so all those more speculative bubbles and fevers in market will disappear. But that hasn't happened necessarily. Obviously, some of those big retail names saw their shares drop back to pre-pandemic levels, but we haven't seen like a big, massive sell-off in broad market sell-off.
But what about financial watchdogs as well? Are there kind of reasons that would even scare people away from this market that are non-financial? And are there more financial reasons besides this? Are people getting stopped out, essentially? Is this becoming a losing trade?
For sure. People are like, is it really worth all the pressure? The fact that investigators may show up at your door tomorrow and say, well, you're doing something, we're investigating a market manipulation. Andrew Left had a good quote about it. He said, I honestly wish I bought tech stocks and like I didn't want my family to be worried. I would just play golf and be on vacation. So there is the regulators, there is companies suing you, there is retail traders emailing you saying you're shorting their stock. There is just like a constant pressure. There are even government bans. Like if we look at China and South Korea, there have been recent restrictions to short selling. So pretty much any side of the financial market is kind of turned to against them, and you know they're kind of an easy victim, and it's easy to say, oh, it's their fault for a certain sell-offs.
Denitsa, thank you so much. That is a story by Denitsa Seikova and Carmen Reinecke. Short sellers fear extinction in a relentless stock market rally. Check it out on the Bloomberg terminal and on Bloomberg.com. Now, before we let you go, checking in on the markets here, of course, another down day in the S&P 500, as well as those tech-heavy indexes, the NASDAQ 100 and the Philadelphia Semiconductor Index, just a day after NVIDIA hit another record high. But we are seeing a bid still sustained in that 2-year, now at 476. I love watching that yield lower during this show. Everyone is buying bonds, apparently, throughout the day. The 10-year at 432. I'm Sonali Basak. That does it for Bloomberg Markets. Stick with us through the close, and for Balance of Power, this is Bloomberg.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television. From the world of politics to the world of business, this is Balance of Power. Live from Washington, D.C.
President Biden issues an executive order today to keep migrants who cross the border illegally from receiving asylum. Welcome to the fastest show in politics. I'm Joe Matthew in Washington alongside Kayleigh Lines. And it's not the first time, Kayleigh, we have heard this idea of shutting down the border when illegal crossings reach a certain level. We're going to hear from Joe Biden about an hour from now.
Yeah, he's set to speak from the White House in the 2 p.m. hour. And the certain level we're talking about, Joe, is roughly 2,500 crossings per day. We are well above that now. So effectively, as a result of this executive order today, the border will shut down for migrants seeking asylum. And it's already getting some blowback from progressive Democrats, and it's likely to face legal challenges as well.
This is true. We've been down this road before. This is a previously aired proposal, now in the form of an executive order that we did tell you was coming if you were with us here on Balance of Power several weeks ago at this point. But you're right, Kayleigh, he's upsetting in many cases Democrats in the House, already upsetting many Republicans with this. We're going to talk to one of them, Brian Stile from Wisconsin, coming up this hour.
Yeah, we'll be with the congressman in just a few minutes. Plus, we'll get the full details from Bloomberg White House correspondent Josh Wingrove. First, though, as always, we kick it off with a check on the markets with Charlie Pellet up in New York. Hey, Charlie.
Hi, thank you very much, Joe and Kaylee. It is a choppy trading session right now. We have got the Dow higher, right to the numbers. Little change, though, up 2 points. We've got the S&P lower by 11, down 0.2%, while the NASDAQ Composite Index is slumping 31 points, down 0.2%. But the bond market climbed as further signals of labor market cooling reinforce speculation that the Federal Reserve will be able to cut rates this year. 10-year right now, 4.32%, with a 2-year yielding 4.76%. Gold is down 1.1%, 23.24 the ounce. West Texas Intermediate crude oil down 1.3%, 73.25 a barrel. And Bitcoin pushing higher by 2.5%, back above 70,000, 70,766 right now on Bitcoin. Axos Financial, which has lent to properties including former President Donald Trump's flagship New York Tower, plunging today after Hindenburg Research said it was short the stock because of the bank's exposure to problematic commercial real estate loans. Right now, we've got shares of Axos lower by 7.5%. Again, recapping, stocks are trading mixed. S&P, little changed right now, down by about 0.2%, lower by 12 points. The Dow just turning negative, down now by less than 0.1%. Balance of power continues now. Back we go to Washington. Once again, your hosts, Joe Matthew and Kaylee Lyons.
All right, Charlie Pellet with a check on where things stand in the markets around 1 p.m. Eastern time, which means we're just about an hour away from expected remarks from President Joe Biden about the executive order he's issuing today related to the border. It'll be interesting to hear, Joe, how he toes the line between trying to appeal to those critics who have been critical of this administration and its policies toward the border, and then those progressives who may think that this is going too far and potentially alienating a key demographic.
You know, it's kind of like the issue surrounding his policy with Israel, where he's managed to upset people on both ends of the political spectrum here. We're going to hear from the president in less than an hour, assuming he's on time. And we're joined now at the table by Bloomberg White House correspondent Josh Wingrove, who's been far out on this story. This is something that we've been reporting on for a couple of weeks in anticipation of this executive order dropping. Josh, it's great to see you. We're going to be talking with critics all day who are questioning, to begin with, the number. What is this 2,500 number? Why should 2,500 people be allowed to cross the border illegally every day?
The starting point, officials have told us, is that bipartisan bill, and that talked about, or in the negotiations for that, they zeroed in on about 4,000. What they've done here is pick 2,500, which appears to be the net when you take out the people that make appointments, and those are allowed to happen. In other words, asylum claims are still open as of tomorrow if you have an appointment and go to a port of entry. What's closing are the people that simply walk across the border between points of entry. And backing up here, I mean, we have just dealt with this for years. I mean, we dealt with this in Trump's first campaign against Hillary Clinton. Biden, very early in his presidency, proposed an immigration bill, went nowhere. Neither party really, has any interest in it for various reasons. Used to be that the grand bargain was border stuff for immigration stuff. Not so much. And now the bipartisan bill collapsed. Trump had a lot of pressure on to kill it, and Biden has decided to try and do something, even though it is certain to be challenged. The ALU has already said they will challenge it. I will leave it to lawyers to say whether that will be struck down. The Democrats themselves have said that congressional action is the safest path. In other words, they're not willing to bet the farm that this thing will hold up, and that's where we're at.
Well, and even in the release that the White House put out, the statement, they said, we must be clear this cannot achieve the same results as congressional action. So perhaps they're trying to get in front of that narrative. But what we're hearing out of Congress, Josh, is Republicans on the one side essentially critical that he didn't exercise this authority way sooner, that he's waiting to do it until now. On the other side, you have the likes of Senator Alex Padilla, who in a statement today said President Biden has undermined American values with this decision. Is there real winning on this issue for the president?
I guess he's hoping that there's a silent majority in the middle, and we're kind of up in the air right now where Democrats fall. Some border Democrats, Mark Kelly in Arizona, for instance, have come out in favor of this. We'll be looking at 2 o'clock to see who will be there. It doesn't sound like a lot of the swing state senators, the ones that are up. Tammy Baldwin, Wisconsin, for instance, will be there. So it's not just progressives who are mad about it or people that are sort of immigration reform advocates like Senator Padilla, but where will those sort of middle-of-the-road types go? We do in our story have Ann Custer saying that she thinks that this will appeal to sort of moderate swing among voters. In our polls, people are worried about this right now. It is the second top issue, second only to the economy when you ask people to name their single thing. Now, though, when you drill down, it's more Republicans that are worried about it, then followed by that independents, which is the problem. Democrats aren't so worried about it. Biden is basically trying to woo independents. The power he's using is Section 212F. That is what Trump used. Trump got the courts tied up in the courts with it as well. It would be fair to assume Biden will be tied up to some extent in the courts with it. This is essentially a loophole that they're trying to drive a Big Mac truck through to get things going.
Well, it's going to be a fun congressional picnic tonight on the South Lawn, I'm guessing.
It'll be great. And this is 2 days after the Mexican election, by the way.
Well, and that has a lot to do with the timing, we understand. Would Republicans support this if the president set the daily cap at 0?
They might more.
Why not?
Well, I think a lot of Republicans want the issue to campaign on regardless. So if you set the cap at 0, they might find different ways to do it.
But why not set the cap at 0?
Because there's a legal right to asylum claims under international law and under American law, and that is what is probably going to lead to these challenges and may well end up getting struck down. Now, they're trying to get around that with exemptions. For instance, unaccompanied minors, this will not apply to. For instance, people in extreme health certainty, for instance, if you're, parched and at risk of dying of thirst in the desert, you can walk across America, you won't get arrested or whatever.
But outside of legal asylum claims at ports of entry, why not set the cap to 0?
Because they believe that you can make asylum claims as an irregular crosser. You don't necessarily need an appointment. But even the legal pathways they're creating have attracted political blowback. And Biden's whole philosophy is people will wait in line if there's a line that's moving, right? And so they think that if they create these legal pathways, it'll lessen the incentive for people to pay thousands of dollars for some smuggler to drag them across Mexico and put them into the U.S. And so what they're trying to do is sort of short-circuit that now ahead of summer months where things normally rise. And if this year is the same as other years, Biden would be facing rising numbers heading into election, which he doesn't want, and hope that people will sort of go the other route, which is this CBP1 app. Obviously, I roll my eyes if my bank asked me to use an app, let alone trying to, So we'll see. The jury's out, I think, obviously, on whether that will be. Everyone agrees that Congress would have stronger powers here, and so look forward to the next Congress. The odds of one party holding all 3 levers don't seem particularly high. Certainly possible, and so if they are, will this happen? I don't know. Some of the Republicans who were fans of the original bipartisan bill urged their Republican colleagues to take it because they didn't think Democrats would have as much incentive to make a deal. So even if Republicans were to sweep the House, Senate, and presidency in the elections, the odds that they get a comprehensive reform through, I don't know.
Well, we're going to talk to one Republican lawmaker now.
That's right.
Josh Wingrove, Bloomberg White House correspondent. Great reporting. Thank you, so much. We go now live to Capitol Hill, where Republican Congressman Brian Stile of Wisconsin is joining us. He's the chair of the House Administration Committee, also a member of the Financial Services Committee. Congressman, welcome back to Balance of Power on Bloomberg TV and radio. You have been on this program repeatedly in the past, talking about President Biden not exercising authority that he has when it comes to the border. It seems today he is doing so. Does he deserve credit for that?
What he's doing today is woefully insufficient. Joe asked the right question. Why not set it at 0? And it should be noted that this only addresses one of the 3 key buckets of individuals who are entering the country. This is addressing the bucket of individuals who are entering through non-ports of entry. Think about somebody wading across the Rio Grande River and coming in and claiming asylum. We saw about 2.4 million of those individuals last year. This would throttle that down to about 900,000 individuals. It does nothing to address what we call known gotaways. Last year, roughly 600,000 individuals who were observed entering the country, but who got away, and we have no idea who those individuals are. And the third bucket is the 1,500 individuals a day, roughly another 500,000 people per year who are coming through legal ports of entry. And so the action by the president is woefully insufficient to a challenge as large as he has created. He needs to take a series of executive actions, all of which are under his authority, to actually and truly secure the border.
Well, I do know that you want more, Congressman, and I anticipated that you would give us an answer like that. But if this would, in fact, lower crossings, illegal crossings on any level, and it appears to be by thousands, why not do this now and ask for more after?
there's nothing wrong with the president taking this executive action, but I think it's important for the American people to realize that this is woefully insufficient to address the crisis that he has created at the U.S.-Mexico border. The crisis is being felt not just in communities along the border, but being felt in my home state of Wisconsin and across the country. And so the president needs to take a series of executive actions, most importantly, to reinstate stay in Mexico, end the catch and release program, and end the abuse of the parole system, and restart border wall construction immediately. Again, he's taking a small step in the right direction, but woefully insufficient to address the challenge that he has created by allowing the U.S.-Mexico border to remain unsecured.
Well, the way the White House is characterizing this, Congressman, is that to actually adequately address the challenge would require congressional action. They said so in the statement. Of course, the president had agreed to a bipartisan compromise with Senate negotiators earlier this year that quickly died. I know that you're probably going to tell me that the House passed H.R. 2, but considering H.R. 2 was known to be dead on arrival when it passed the House, as it received not a single Democratic vote, and obviously the bipartisan border deal didn't end up going anywhere, should you not try to start fresh, try to find a compromise?
I'd critique a little bit of what you said as it relates to the Senate bill. I think it's important to reflect back on the most recent vote on the Senate bill. They didn't even get all the Democrats on board. That's how broken the bill is that is called, as your term, bipartisan. My view would be the opposition to the bill is bipartisan. Only a fraction of the Democrats even voted for it because it doesn't work. The House-passed bill actually works. It actually secures the U.S.-Mexico border. It was passed now approaching a year ago. The Senate should act on it. If the Senate thinks that they can make amendments to make it better, make adjustments, I'd love to see that vote take place on the Senate floor. I actually think that it would pass in the Senate because it works. And the problem that's been created by this administration is so significant that actually there is a political need to act. Further, the president has a series of executive actions that he could take, over 60 in total, that he could take to substantively secure the U.S.-Mexico border. Again, the four easiest that are at the top of the table is reinstating the stay in Mexico policy, ending catch and release, restart border wall construction, and end abuse of the parole system. But there's a series of actions that he could take. The action he is about to take today, as reported, is woefully insufficient to actually address the crisis that is impacting every community across the country.
Well, it'll be especially insufficient if it's struck down in court, of course, Congressman, and I wonder what your thought is on that. Section 212F of the Immigration and Nationality Act, everyone's suddenly an expert every time this comes up again. We saw this not play well in court for Donald Trump in some cases when he invoked those authorities. If that happens again now, it's kicked back to the other end of Pennsylvania Avenue and we start all over again, to Kayleigh's point, right?
Well, this is in large part where the House-passed border security package is so essential. We make essential reforms to the asylum system to end the abuse of the process. Importantly, what we're seeing right now is when individuals illegally enter the United States, they're often released with a notice to appear. In other words, a court date 3, 4, 5 years out. And at that point, they're released into the country and able to travel freely. What we should do is dramatically accelerate the process that we're reviewing those cases. And again, when they're reviewed, about 98% are ultimately rejected, meaning the vast majority of the individuals coming into the United States illegally are actually making an asylum claim that when adjudicated, when heard by a judge, are found to not be valid. And so we could dramatically increase the rate and scope of how we're processing those claims. Again, the House-passed border security package makes those adjustments to our asylum laws that are essential. If the court chooses to strike this down, which I don't think that they should do, but if they did, all the more reason the Senate should act on the House-passed border security legislation.
Congressman, one of your colleagues in the House, Congresswoman Marjorie Taylor Greene of Georgia, yesterday floated the idea of forcing an impeachment vote against President Biden over this issue of the border. If she succeeded in getting that on the floor, would you vote to impeach the president?
I think we got a big election coming up in November, and the American people are going to be able to have their say as it relates to the disastrous policies being put forward by President Biden. I think we are always better served when the American people are able to make that decision. I'm incredibly concerned with the actions of President Biden day in and day out. But at the end of the day, we're about 6 months away from the election. The American people are going to have their opportunity to have their voice heard.
Interesting, as the primary takes place today in the District of Columbia here in the capital city, Congressman, something is going to happen that's never happened before, as non-citizen residents are allowed to vote in primary elections to have a say in the communities that they live in. More than 500 non-citizen residents registering to vote and have cast their ballots here today. This is an issue that you have strongly opposed and tried to take action against as chair of the admin committee in the House of Representatives. Now that it's happening, what will it mean?
I've held a series of hearings on this exact point. I think it's important for all of your listeners and viewers to realize that today in our nation's capital, non-citizens are legally allowed to vote, in particular municipal elections, for things like city council. This includes individuals working at an embassy. So just to give you a flavor of how ridiculous the law is in our nation's capital, the front door to the country, an individual, say, working at the Russian embassy, residing in D.C. for only 30 days, is eligible to vote in our nation's elections. I'm of the view that U.S. elections should be for U.S. citizens only. We passed a bill here in the House to ban non-citizens from voting here in our nation's capital. The Senate has refused to act on that. I think that they should. And more broadly, we need to make sure that we're ensuring elections across the country are for U.S. citizens only. The fact that our nation's capital today is allowing non-citizens to vote in a primary election for positions like city council is absolutely absurd, and I think we need to change the law.
Congressman, we have just a minute left with you, but to what extent are you concerned about, in your home state of Wisconsin, people who shouldn't be legally allowed to vote attempting to do so?
This is a broader concern that we've had. We had a series of hearings, and what we have seen are non-citizens registered to vote illegally in other locations. In particular, Ohio recently identified a number on their voter rolls. Georgia did a proper check. Pennsylvania identified issues as well. I think at a period of time, we need to dramatically look at whether or not we have non-citizens on the voter rolls in states across the country. We need to make sure that we're protecting the integrity of our elections such that only U.S. citizens vote in our elections. At a period of time when 7 million people have come across the border illegally under President Biden's 3.5 years, where you have cities in jurisdictions like Washington, D.C., not only allowing but encouraging non-citizens to vote, I think it's absolutely imperative that we're making sure we're protecting the integrity of our elections by making sure our elections are for U.S. citizens only.
It's good to have you back, Congressman. Thanks for your insights today. Brian Stile, the Republican from Wisconsin, with us on the fastest show in politics. As we mentioned, less than an hour from now, Joe Biden is set to speak to the executive order on the border. With Kaylee Lyons, I'm Joe Matthew. We'll have much more ahead with our panel. This is Bloomberg.
The top names in business are on Bloomberg.
They're kind of predicting a soft landing, and you see that in both stock price, which are kind of high, credit spreads, which are kind of low, markets, which are kind of wide open. That's all good. Doesn't tell you what the future is going to be. But I think there are a lot of inflationary forces in front of us that, may keep it a little bit higher than people expect. My view is whatever the world is pricing in for a soft landing, I think it's probably half that. I think the chance of something going wrong is higher than people think.
Bloomberg. Context changes everything. In a multi-trillion-dollar industry, there's a lot of ground to cover.
Bitcoin ETFs rubbing elbows with the big dogs.
This frenzy has engulfed the entire world.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
People ask me all the time, what is the key to being a really good investor? And I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
Go figure out how to get exposure to hyperscalers, which we think will be the biggest winner in what AI and data storage will do for the world.
we'll have to build a portfolio of interventions. Lifestyle will also play into for some of them, and I think we can help many patients get down to a weight that they can maintain and live the life they want to live and avoid many comorbidities for the healthcare systems.
Good morning. This is Bloomberg Surveillance.
This is Bloomberg Daybreak Europe.
You're watching The China Show.
This is Bloomberg Technology.
This is the countdown to the close.
Welcome to Balance of Power.
This is Bloomberg.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
It's 1:21 on Wall Street. We do check markets all day long here at Bloomberg. Choppy session, very mixed market. We have got the Dow higher, the S&P, NASDAQ, both in the red right to the numbers because the S&P now lower by 9. Off-session lows down 0.2%. The Dow up 32, up by 0.1%. NASDAQ, the composite index, down 28, drop there of 0.2%. The bond market climbed as signs of labor market cooling reinforce speculation that the Fed will be able to cut rates this year. 10-year, 4.32%. The 2-year, 4.76%. Gold lower by 1%. Spot gold now at $23.26 the ounce. West Texas Intermediate crude oil is down 0.9%, 73.56 for a barrel of WTI. And Bitcoin back above 70,000 right now. Bitcoin up 2.1%, 70,560 on Bitcoin. Boston Beer shares are lower. They use the ticker symbol SAM, as in Sam Adams, one of its flagship products. The stock declining. The CEO of cannabis producer Green Thumb is pitching a deal to merge with Boston Beer. That, according to the Wall Street Journal. Green Thumb, for its part, says it is not commenting on market rumors. Again, we've got shares of Boston Beer down 0.5%. Green Thumb up 3.4%. Beer and weed. I'm Charlie Pellet. That is a Bloomberg Business Flash. Balance of Power continues now. Once again, your hosts, Joe Matthew and Kaylee Lines.
All right, Charlie Pellet with a look at the Tuesday trade. Thank you so much. I'm Kaylee Lines alongside Joe Matthew here in Washington, where we're noting the fact, Joe, that it's not just any Tuesday, it's a primary Tuesday in a number of states.
Happy primary day.
Largely stopped paying attention to primaries as we have our presumptive presidential nominees. That doesn't mean that they're not worthy of at least some analysis, considering we do have primaries in Montana, which is going to be a key state in deciding the balance of the Senate, as well as in New Jersey, where there has been a lot of political intrigue about not just Senator Bob Menendez, who is currently on trial for bribery charges, but his son, who is facing a primary challenger today.
And shares the same first name. So it's interesting that, as we've been hearing from folks on the ground, some of the campaign signs have gone from Menendez to Rob. Because of a difficult association here with what his dad's going through. That's New Jersey's 8th District, Kaylee, and we can look ahead to some of these primaries, but of course it's all against the backdrop of this protest vote that we've been hearing about and watching just about every Tuesday. How many Nikki Haley votes will there be in the Republican primary in a state like New Jersey? That will be part of the story tonight as well.
Absolutely. As we've seen continuously, something in the ballpark of 20% of the Republican primary votes still going to Nikki Haley, even though she suspended her campaign months ago. This will be the first time, though, we get those results after Donald Trump's guilty conviction. And I wonder if it will actually prove to be a tell on as to how many more voters are trying to protest the fact that he's the presumptive nominee.
Really great point. Let's see what the panel thinks about it. Jeannie Shanzano and Rick Davis are with us. Our signature panel, Bloomberg Politics contributors on Bloomberg TV and radio. What's your thought on that, Rick, as we anticipate votes tonight? Could we see an uptick for Nikki Haley following the guilty verdict, or might it look like the opposite?
Yeah, it's a good question. I mean, there's definitely been a rallying around Donald Trump to be expected after the indictment. Republicans, they still want to win elections, and he's the top of the ticket whether they like it or not. And yet, Nikki Haley's been cruising around 20 to 30% of the primary ballot. And in most of these states that have been selecting primary candidates since the presumptive nominee has, sort of taken charge. So this will be interesting. I think it's a bit of a tell. I've never put much credence on primary results as it relates to general election, and there's no real track record that they have an impact. But this is definitely an area that Nikki has now endorsed Donald Trump, and Donald Trump is now a felon. So maybe that boosts her up to the upper 30s, and we have a talking point for Wednesday.
Well, Jeannie, if that indeed does transpire, is that more telling than the mixed polls that we have gotten in the days after the verdict? Because that's real votes being cast.
It is. And, for somebody to go out in a primary where, at least at the top of the ticket in this case, it doesn't matter all too much because, of course, we know who the presumptive nominees are on both sides. It is a tell. Settles in that this is a convicted felon. Say, hey, I'm going to go out there and cast my vote for somebody else. Or to Rick's point, you could see a sort of rally around the Trump effect. And people say this was political persecution. These are all Republicans, for the most part, voting in a primary after all. And it goes in the opposite direction. So wait and see where this pans out. But I think it is a tell in terms of at least where Republicans are in this case. And of course, as you look at the Democratic side, Joe Biden wants to make sure that there is not a lot of, loss to an independent third-party candidate because of what's going on in the Gaza Strip or any other issue. So on both sides, it is sort of an indication as to how at least the base of their party is feeling.
Well, you mentioned the Trump effect in the House, and it brings me to what's happening today, Jeannie. I'd love both of your take on this because we've had a knockdown, drag-out hearing with the Attorney General, Merrick Garland. Everyone knew that would be the case as he testifies before some serious Republican critics here on the Judiciary Committee. This is Jim Jordan's committee. And he came out swinging in his own prepared remarks to try to blunt some of this. But beyond the Robert Hur testimony that the committee wanted to acquire, Joe Biden's testimony with the special counsel, beyond the contempt vote that went nowhere, there's something else going on here. Three members of the committee, this is Freedom Caucus, Andy Biggs, Chip Roy, Tom Massey, sent Merrick Garland a letter stating their concerns about aggressive prosecutions of those who were at the U.S. Capitol on January 6th, the January 6th rioters. And they wanted to talk about the FBI. This is a quote from a letter. The FBI's possible involvement in facilitating the events of January 6th. This is like tinfoil hat time here, Rick, where we're talking about white vans and unmarked officers in the crowd. What does this tell us about the direction we're going in this Republican conference?
Yeah, it's a pretty dark direction that Republicans in the House, especially the Freedom Caucus Republicans, want to take the country. And that is basically creating their own set of facts. And in this case, just because they dream it up means that it should be a fact. And I think Merrick Garland going to the Capitol Hill and saying, no, these things are simply not true. No, Joe Biden is not the reason that Donald Trump got prosecuted in New York at a state level. No, the FBI was involved in January 6th. Here's the thing. If somebody doesn't say no to it, and frankly, I think the Biden administration has done a very poor job of pushing back on fake news that emanates from legitimate institutions like the House of Representatives and people like Donald Trump, then that's going to become true over time. And so I think the fact that the Attorney General is up there fighting the fight for facts is really important. And I don't understand why the Biden administration would not deploy their cabinet in an effort to do the same thing. Because Joe Biden can only get elected if the country is working off the same set of facts about the economy, about the border, about Gaza. And if he allows these fake facts to proliferate, it's going to be very hard for him to find a clear path.
Jeannie, I'd love for you to weigh in on what Rick just said. Has the administration not been forceful enough in pushing back against mis and disinformation?
This is a challenge, I think, for all of us. I look at this very broadly. We are living in a time when it is very, very difficult to break through all the noise that we all hear. And you can watch 2 channels and get the exact opposite take on what is happening. And misinformation, disinformation spreads broadly. And I think it speaks to a reality. And I wish the Biden administration, to Rick's point, would talk about this. This is why leadership matters so much. It is very, very difficult to police all this misinformation and disinformation. And that's why we've got to be able to trust the people we choose to lead us in an honest way. And that is where what's happening today on Capitol Hill is so frustrating, because there is not a scintilla of evidence that anybody in the FBI was behind January 6th. And yet you have elected leaders up there on the Hill asking the question. And so I think, in a way, it's all of our responsibility as Americans when we go to the ballot box to remember that we have to choose people who we feel some modicum of trust in to tell us what is the truth, because this is where we are in this country, in this media environment. So no, I don't think it's all at Joe Biden or the Biden administration's feet. He can use the bully pulpit as best as he can, but this is a problem that every president in the modern era is going to face from now, as long as our media environment remains the way it is. And so it's much bigger than Joe Biden.
Suggesting it may become more difficult, not get easier. It's a great panel. Thanks to both of you, as always, for showing grace with complex issues. Jeannie Sheehan Zaino and Rick Davis, Bloomberg Politics contributors, with us today in Washington. I'm Joe Matthew alongside Kaylee Lyons. It looks like we have potential breaking news, Kaylee, from Israel. We should mention this as it crosses the terminal now.
Yeah, this coming from Matthew Miller, who's a State Department spokesman. He's saying in a briefing now that Israel is ready to implement the ceasefire deal. Remember, this is a deal that was outlined last week, Friday, when President Biden gave remarks from the White House talking about a 3-phase plan. The first phase, of course, being a temporary ceasefire agreement and the exchanging of hostages. Despite Israel, I guess, at least rhetorically pushing back on this, certainly Prime Minister Benjamin Netanyahu has done so in recent days. The State Department is saying, be that as it may, whatever you may be hearing, Israel is ready to implement this if Hamas agrees.
Well, yes, and let's see what form this takes. Obviously, to your points, phase 1 was a 6-week, I believe, ceasefire. Does it go beyond that? Hamas earlier said there would be no deal without a permanent ceasefire and an Israeli withdrawal. So if you put these two headlines together, we could be onto something.
Yeah, and of course, the permanency aspect is what has long been the issue. Right. Hamas looking for that, Israel not wanting to commit to that until Hamas is entirely destroyed. This is what negotiators and mediators have been working so hard on. So we'll keep you updated on that news as we get more. First, though, let's get some more news, world and national news with Amy Morris in the 99.1 Newsroom here in Washington. Hey, Amy.
Hi, Kaylee. Narendra Modi in India vowing to continue as India's prime minister. Even after his party lost its majority in parliament, Modi claiming victory for his coalition in a post on X, calling it a historical feat. Raghuram Rajan is a professor of finance at Chicago Booth School of Business and former head of the Central Bank of India.
It's actually a win for democracy, and that's good for India, because what democracy does is it allows the different parts to essentially express themselves and to negotiate.
Raghuram Rajan is a professor of finance at Chicago Booth School of Business. Attorney General Merrick Garland forcefully rebuking what he describes as unprecedented attacks on the Justice Department, telling Republicans who have sought to hold him in contempt that he won't be intimidated. During a hearing before the House Judiciary Committee, Garland condemned the conspiracy theory pushed by Donald Trump's allies that the department is behind Trump's state court prosecution in New York and that the FBI was authorized to kill Donald Trump.
This is dangerous. It raises the threats of violence against prosecutors and career agents. The allegation is false.
Garland called the unsupported claim an attack on the judicial process itself. Global news 24 hours a day, and whenever you want it with Bloomberg News Now. I'm Amy Morris, and this is Bloomberg.
names that move markets are on Bloomberg.
How worried are you about the U.S. election?
It's for the American people to decide what they want with their politics, with their government, with their future. But obviously, we are all concerned about it because the United States is the largest economy, the largest defense country in the world, and has been a beacon of democracy with all its upside and downside. We cannot interfere with their choice. It's their choice, and that's the beauty of democracy. But we have to be extremely attentive and anticipate, just as we do with inflation. You know, we do scenarios. What if, what if, what if? Then what do we do? Where I sit now in Frankfurt, head of the ECB, I think that we have to be strong as Europeans and not assume that we can rely on whoever our friends are around the world, because these things change over the course of time, as we have seen.
Bloomberg. Context changes everything. Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question. Great question. Best question I get all night.
Bloomberg. Top experts. Great questions.
The linear business is not going anywhere. The sports business is moving is going to figure itself out between digital and linear. It's an unbelievably healthy market. They all have to be in it. They all want to be, every single one of the players want to be in it because of the audience. We have two assets in the sports business that don't have are year-long, don't have a season. I don't believe prices are going down. You're going to figure out the bifurcation of the rights and give things up, not give things up.
How long do you think it is before Netflix actually jumps into sports?
You know, they're in sports right now, but they just do the shoulder programming.
Yeah.
I think their point of view, and you'll ask Ted tomorrow, is we build up we don't want to be in the bidding of rights and then not have any long tail. So I'm not sure. They did bid on Formula One, but ESPN got it. So I think that was a smaller package, meaning smaller economics. So we'll see.
It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show. Weekdays at 9 a.m. Hong Kong time, right here on Bloomberg. Context changes everything. Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg. Context changes everything. From the world of politics to the world of business. 2 times a day at 1 p.m. and 5 p.m. Eastern Time, hosts Joe Matthew and Keely Lines deliver news, insight, and analysis from and about politics' biggest power players.
The president has been clear that is non-negotiable.
I mean, this is going to be an ugly, ugly year.
Balance of Power, live around the world twice a day at 1 and 5 Eastern. Only on Bloomberg TV and radio. Context changes everything.
It's 1:40 on Wall Street. We do check markets all day long here at Bloomberg. A decidedly mixed market on this Tuesday with the Dow Industrials just about the best level of the day right now, up 61 points, up by about 0.2%. The S&P lower now by 0.2%, dropping 9 points, while NASDAQ is down 37, a drop there of 0.2%. Bond market climbed as signs of labor market cooling reinforced speculation that the Fed will be able to cut rates this year. 10-year, 4.31%, 2-year, 4.74%, Gold is down $30 the ounce, down 0.9%, $23.30 right now on spot gold, while West Texas Intermediate crude is down 0.8%, $73.60 for a barrel of WTI. Cannot ignore Bitcoin back above 70,000, 70,400 right now on Bitcoin, up 1.9%. American Airlines is pushing a federal appeals court to overturn a decision invalidating its partnership with JetBlue, saying the ruling would prevent the airline from entering into future joint ventures. Shares of American higher today by 0.3%. JetBlue down now by 0.4%. Again, recapping, Dow Industrials push higher, up 71 points now, up 0.2%, while the S&P is down by 0.1%. Balance of Power continues now. Back we go to Washington. Once again, your hosts, Joe Matthew and Kaylee Lyons.
Charlie Pellet, thank you. Keeping tabs on the markets for us here on Bloomberg TV and radio every day as we talk politics live from Washington. And it all starts at 6:15 p.m. Washington time. That's the annual congressional picnic on the South Lawn of the White House. I'm Joe Matthew alongside Kaylee Lyons. I can only imagine the conversation over hamburgers and hot dogs because that will be less than 4 hours after the president speaks to the American people about this executive order he's dropping today on the border. He's going to be speaking from the East Room, at least according to the schedule, about 20 minutes from now. And Kaylee, as we've learned over the course of this hour, he's upsetting both ends of the political spectrum today with this announcement.
Yeah, of course, Republicans think he is not going far enough. Progressives may think he's going too far with this executive action that essentially, when crossings cross a threshold of 2,500
That's right.
Across the border, will shut down those seeking asylum, at least in some cases. There are carve-outs and exceptions here, and perhaps the exceptions are providing more fuel to the fire who are upset. The thing is, though, Joe, there's something else to consider here politically, and that is the implication this could have for the economy.
Yeah, this is a big deal.
Standard Chartered, Steve Englander, who's a great friend to Bloomberg TV and radio, put out research today that found roughly half of non-farm payrolls growth since October is accounted for by undocumented immigrants, according to his estimates, looking at data from U.S. Immigration Services, the Customs and Border Patrol, and others. He suggests if you take those workers out, job growth may actually be running at a much lower pace of 125,000
Imagine that.
per month.
So then couple the impact that this has had as well on shelter costs and housing immigrants in cities all over the country, not just New York, and the impact could be great. And you wonder if you keep walking this line, does this executive order hasten the first interest rate cut?
It's an excellent question. If it means more softening in the labor market, one could see how that argument could be made. But we want to pose these questions and more now to Rebecca Shih. She is founding executive director of the American Business Immigration Coalition. Rebecca, welcome to Balance of Power. How should we be thinking through the economic ramifications of this executive order today, of not allowing as many migrants to seek asylum in the U.S., something that will start effective immediately? How is this likely to impact the economy?
Thank you so much for having me. Today, the president is moving forward on this executive order to ensure legal and orderly processing and crossing. And this is going to have important impact on both the economy and our communities. I think you just mentioned that, one of the reasons that our markets and economy continue to roar is because, according to the Bureau of Labor Statistics, we have 2.1 million new migrants and new workers in the economy over this last 2.5 years. And this has made sure that jobs, particularly jobs in construction, hospitality, tourism, are filled despite our very tight labor market. And this has meant that, stock market is reaching historic highs, as we have seen, as well as tamping down inflation. And just the last thing I would add is that, we see all the demographics data that average Americans are having, less than replacement rate in terms of births. And this new energy, new entrepreneurships from both new migrants and long-term immigrants already here has been a gift to the economy and to our country.
Well, so as the president speaks to the American people then today, Rebecca, should he also be making an announcement about work permits?
That is something that we're hoping for as the American Business Immigration Coalition. We are a bipartisan group of about 1,400 employers and CEOs across the country. Over this last year, we have been leading a national campaign. We call it Here to Work, actually calling on the administration and the president to issue more work permits for both the new migrants as well as the long-term immigrant contributors. You know, if you think about people that are picking crops, cleaning hotel rooms, emptying bedpans in nursing homes, or even designing semiconductors at our fabrication facilities. They're overrepresented and significantly contributed by immigrants of all skill levels. So having more work permits, legal work permits in the marketplace is a good thing. It's a good thing for employers, is a good thing to protect immigrant workers from exploitation, and it raises wages and depresses inflation for every American consumer. And if nothing else, we've seen that work over this last 2.5 years.
Well, Rebecca, you just said there that you've been pushing the White House and the Biden administration to do more in that effort. Is that effort something they can carry entirely alone? The administration and the White House, when it put out a statement today, talked about how realistically, to get more substantive reform, you need congressional action. What are the limits of what President Biden himself is able to do unilaterally?
Yeah, absolutely. And we've seen the president and particularly Democratic leaders and some Republican leaders as well, you know, notably Senator Langford of Oklahoma, really trying very hard to come together on a bipartisan solution to our borders. I think this bill was brought to the floor several times this year, and then former President Trump intervened and it fell apart. And so then we see today that the president deciding to act unilaterally on executive order around the border. And so similarly, you know, given the gridlock in this Congress, that the executive action on work permits can continue and also be granted for people, particularly people that have been here for decades working. Many of them are married to U.S. citizens. We actually have 1.1 million U.S. citizens in our country who are married to undocumented spouses on average for 16 years. Just kind of bonkers to think about that people with such deep roots in our nation are still unable to have a path to permanence because of our broken immigration system. So I think to your point, ideally, right, things are done on a bipartisan basis by congressional action, but we've just seen this Congress again and again, even on something that both sides have agreed on, like border security, we can't even make any progress. And so as such, we're calling on the president to also do executive action on legal work permits and something that everyday Americans support.
Well, as you call on this president to take action, having referred to the 1,400 CEOs and employers you represent, Rebecca, this is an election year. Who do they trust more with reforming the immigration system, Joe Biden or Donald Trump?
I would say that where we are on the issue has been, sadly a failure of both sides. I mean, we are operating under a menagerie of the alphabet soup for our visa system that was created in 1986. So over nearly 40 years ago was the last time we had a reform to our immigration system. And our economy today, it doesn't look anywhere like how it looked in 1986. And so the politics always keep getting in the way of this issue. And the thing is that just everyday Americans understand that we need to have legal, orderly border crossings and as well as bring people out of the shadow, especially people that have been here working, paying taxes for decades with American family members. Just again and again, for our dreamers, for our mixed status families, it always polls so well. It doesn't change because Americans know that those are the right solutions to fix this super outdated and just honestly beyond frustrating immigration issue.
Rebecca, it's great to have you. Rebecca Shih, founding executive director of the American Business Immigration Coalition. Kaylee, we expect to hear from Joe Biden about 10 minutes from now. He'll be in the East Room of the White House, assuming things are on time. That's not always the case, of course, when it comes to reality. I'll be curious to hear if he takes any questions from reporters or if we get a statement and we're right back out of the room.
Yeah, of course, the questions he could be asked vary far from the border issue. He could be asked about the conviction of Donald Trump, or he could be asked about geopolitics, as there are a number of geopolitical issues in play in the news today.
That's for sure. And we're seeing headlines across the terminal on elections in India, with the official count confirming Prime Minister Modi's bloc can form a government here. He's claiming victory, but short of a majority alone, something that we wanted to discuss with Bloomberg's Enda Curran, who joins us now at the table. The economic implications here are huge. Enda, we heard upon Modi's visit not that long ago to the White House with Joe Biden that this was the future of international investment. That was the conversation at the White House that night, and it was a who's who of CEOs, as you remember, who were at the state dinner. What do the results of this election tell us about that, Ron?
Well, it's definitely a shock, and it just shows you that this is the year of elections. We did expect some policy shock along the way. Now we're getting one out of India. I guess two angles on it, Joe. Domestically, why did it happen? And then what will that mean for India's economy? How will it impact India's own domestic policy program, their welfare spending, their borrowing, and the like? So there's a whole domestic India question that will need to be worked out in the weeks and months ahead. But globally, though, I completely agree. India under Modi had become this kind of a star performer, surging markets, one of the world's fastest growing economies. It had been seen as alternative to China, really capitalizing on the geopolitical fracas between China and the US post-pandemic, setting itself up as an alternative for investment. And as you said, of course, coming here to Washington last year and having that state visit, etc. So it's a big question to where that goes from now, because Modi has said he will form the next government, but he's obviously weakened. So it's going to be a question of what kind of Modi can it be if he does form the next government? What kind of Modi will it be, and how long can he last?
Yeah, how diminished is he as a result of this? But if he can form this alliance kind of coalition, does that give him the same kind of power that a majority in parliament would have, or does it open him to vulnerabilities like what we're seeing in Israel, for example, where you have Netanyahu in power because of a coalition government, but because of competing factions of the coalition, it makes him much more vulnerable domestically? Just how should we be thinking about how this moves forward?
Domestically, he will obviously have to do some horse trading. He will have to bring in certain factions for support, and that will mean divvying up policy whatever way he has to keep those constituencies happy. That's the domestic story. The question does become how will it change India on the global front? And as I'm saying to you, this is a shock. The markets have sold off. It's given investors pause for thought. Looking at India, they thought it was this rock of stability. But nonetheless, you'd have to wonder whether the external political story for India will change that dramatically. They'll want to maintain to be seen as a source for investment. Come here with your money. We remain an alternative to China, cutting bureaucracy and the rest. I don't think that story will change too dramatically.
Well, certainly not as an alternative to China. You put your finger on it. That was the narrative here in Washington. That part doesn't change, is your point, if Modi's face is still in front of the government. Yeah, and you would assume from India's point of view, they don't want that to change. No matter who's in office or who, to your point, Kaylee, or the coalition backing him, they want foreign investment, they want foreign money, they want foreign companies to come there to give them both know-how, capital, and create employment. So it is a headline shock, but it remains to be seen just how it does change. But if you're Apple, this doesn't change your plans to move into India. You would assume not. And Modi in his remarks earlier said he's going to carry on with his reform program. So I think that part of the story shouldn't change. But of course, it remains to be seen what kind of government is formed and if they do change their tune. But that would be a major surprise, I think.
All right, Bloomberg's Enda Curran, thank you so much for reporting on this for us. And it's worth pointing out, Joe, you recall that visit from Narendra Modi here in Washington not too long ago. There were those who were critical of the administration getting cozier with India over concerns about things like human rights. And I wonder to what extent those concerns concerns are what ultimately led to this surprising result today.
It's happening before our eyes, and we'll have a lot more on this in the late edition of Balance of Power. I'll meet you then at 5 o'clock on Bloomberg TV and radio.
In the meantime, President Biden set to speak in just moments. We'll have full coverage of that for you right here on Bloomberg.
This is Bloomberg.
We're operating in a very volatile environment. So JetBlue has a very large presence here in New York, and there are air traffic control challenges. And so we've had to overinvest in hiring excess crew members and building flexibility into our planning process. And so over time, we hope to wean some of those investments back as the operating environment around us stabilizes.
We made the decision early on that we were only going to invest internally on key differentiating technologies, and clearly the powertrain is the key differentiating technology. So our investment is a recurring investment with respect to the powertrain team, the battery team, which is part of it, the engine team, electric engine team, which is part of it. And we also have a lot of non-recurring costs with the other components because we're not developing those internally. We're using the existing aerospace defense supplier base for most of the other components.
We invest a lot in the offices, that you feel home, that you can actually be at your best yourself, and people work very differently. We take a lot of input from the sports world, actually, the athlete spirit, right? Building a sports team that can perform at the best, but also talking a lot about the explorer spirit. How can we really tap into new things, continue being disruptive? We have 80 different nationalities at On. It's very important to have a diverse team because we have a very diverse landscape of customers.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything. Is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenevec on Bloomberg Radio.
And a very good afternoon, everybody, live on radio, TV, YouTube, Bloomberg Originals. This is Bloomberg Business Week for this Tuesday, June 4th. I'm Carol Masser along with Tim Stenevec. Let's get to the setup on this Tuesday. We are a little over 1 week away from the next FOMC meeting. And on that, jolting the bond market a little bit in expectations when it comes to Fed moves, Tim. Data showing further signs of labor market cooling and giving a bit more fuel to the idea of could we maybe, yes, possibly get a Fed rate cut this year?
Yeah, more on that with Molly Smith in just a moment. Also, a top global story today, a political earthquake in India as Prime Minister Modi's party loses its majority in parliament.
We're going to tell you why you need to care about this.
Yeah, big story, no doubt about it. We've talked about global elections this year, and that is certainly one of the big ones. Speaking of caring our ever-warming environment, get ready to say goodbye to El Nino and hello to La Nina. Bottom line, it's going to be hot, everybody.
All right, I got no good transition for this one, but psychedelic stocks are in focus as an FDA panel reviews a new drug that's based on ecstasy. We check in with Tiffany Carey a little later in the program.
Yeah, really important story there. Plus, one more thing, one major Wall Street bank boosting parental leave. We're going to dig into the details a little bit later this hour. First up, though, let's get to the markets, the trade, and your big stories. Here is Charlie Pellet.
Thank you very much. Here's what's going on. We got the Dow very close to session highs right now, right to the numbers, up 87, a gain of 0.2%. S&P, though, in the red, lower by 7, down by about 0.1%. The NASDAQ Composite Index down 34, drop there of 0.2%. The bond market climbed as signs of labor market cooling reinforced speculation. The Fed will be able to cut rates this year. 10-year, 4.32%. 2-year, 4.75%. Spot gold down 0.9%, 23.29 the ounce, while West Texas Intermediate crude oil down 0.8%, 73.64 barrel on WTI. Bitcoin holding above 70,000, 70,681 right now on Bitcoin, up by about 2.3%. Sources tell Bloomberg CoreWeave, which is a closely held cloud computing provider, is offered to acquire Core Scientific for about $1 billion. Core Scientific shares surging by 41.1%. Recapping, stocks are mixed. S&P lower, S&P down now by about 0.2%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, got it, Charlie. Thank you so much. It's big week for U.S. economic data, incredibly so on the labor front. This morning we found out that U.S. job openings fell in the month of April to the lowest level in over 3 years, consistent, Tim, with a gradual slowdown in the labor market.
Yeah, the Bureau of Labor Statistics Job Openings and Labor Turnover Survey, also known as JOLTS, showed available positions decreased to 8.06 million from a downwardly revised 8.36 million reading in the prior month. The figure below all estimates in a Bloomberg survey of economists. All right. With more, we got Bloomberg News economics editor Molly Smith, who's here in the Bloomberg studio. Molly, we're both just so excited to talk to you.
I could sense that.
You're eager. But look, we did get a little bit of a reset when it came to the bond market. Finally, some very Fed-friendly news coming from the jobs market.
Yeah, I think, sometimes there's always so many caveats with these reports that it's like you get one reaction with the headline number and then it's like, oh, wait, let's dig beneath the surface and maybe this isn't as good as we think it is. That didn't really happen today. I mean, this was really categorically showing a broad slowdown in labor demand really across all industries and still showing hiring is still relatively slow. Layoffs are still historically low, so that's great news. And the quits rate, which is still really low, and that's great news for the Fed officials who are like, when quits were really high and people are just like leaving their jobs left and right, getting these bigger pay raises. That's not happening as much now. So this is all good news on the inflation
front. Good news
front.
for the Fed. But
for the Fed.
For the Fed.
But if you are somebody who's looking for a job, not so great.
All right, but wait, perspective. So we're not seeing a ton of firings, maybe a slowdown in hiring. The job market's still considered strong.
Absolutely, yes. And I mean, as we're going to get probably more evidence of on Friday with the main jobs report for the month of May, that you're still going to get a payrolls number. The estimate right now is close to 200,000 and an unemployment rate still under 4%. That's hardly a weak labor market.
Okay, what's a return to normal levels for JOLTS? Like, if we're talking pre-pandemic here, what would be like a typical number that we'd want to see?
I mean, more probably in the 7 million or under range, and now we're down to 8. Remember, this number peaked 2 years ago above 12 million, so has come down pretty remarkably. And again, the unemployment rate's still staying pretty low.
All right, that's the perspective we needed. We're cutting it short because we're waiting for President Biden, and we want to get to another top story. But Molly, thank you so much. So appreciate it. Bloomberg News economics editor Molly Smith. We'll have her back really, really soon. So that is the big news, certainly here in the U.S. But let's get to some big political news, Tim, outside the United States.
Yeah, the surprising outcome is Prime Minister Narendra Modi's party lost its majority in parliament. Modi must now rely on allies to form a government for the first time since he stormed to power. That was a decade ago. India's stocks had their worst day in more than 4 years, Carol, as the closer than expected results came in. We've talked about this being a big year for global elections. This one, certainly among them.
All right, so let's get to it. Bloomberg News senior editor Bobby Ghosh is here in studio. Bobby, by the way, previously covering foreign affairs special focus on the Middle East and the wider Islamic world. He was Time Magazine's Baghdad bureau chief prior to joining Bloomberg. He is really a go-to for us on so many things impacting global affairs. So great to have you here with us and help us put some perspective. Before voting kicked off on April 19th, the Prime Minister boldly predicted that his alliance would win a whopping 400 seats. What happened? And for those who know very little or maybe even nothing about politics in India, why is this so striking?
Well, it's striking because this is a figure, Narendra Modi, who has dominated the Indian political landscape like no politician going back a couple of generations. For 10 years, he's been front and center of Indian politics. He sort of commanded an aura of invincibility, and his party, which is very, very good at messaging, very disciplined at messaging, conveyed that message ahead of this election. And this election was not just a referendum of his party, it was very much about him. The entire messaging of the election was around vote for Modi, even though this is a parliamentary election. So if you can imagine, the closest American sort of comparison would be if in the midterms the Republicans went out to all their voters in the Senate and in the Congress, but their message was vote for Trump.
Right.
Not for me, vote for Trump. That was the kind of messaging that went into this election. And so this is a personal failure on the part of Modi. They'd set the bar very, very high, 400 seats. They've gotten, the bare minimum to get a majority is 272. The party by itself looks more likely to get 240. Now, it has allies, and it can form a coalition, so it's very likely it'll remain in government. Modi may remain prime minister, but his personal prestige has taken a real battering.
Modi already spinning this as a victory.
Yeah.
I'm wondering, though, sort of playing not even Monday morning quarterback at this point, where did the pollsters go wrong? Why did we see the exit polling show such a stark difference to the vote tally? Explain.
Well, I think some real deep investigations are going to have to be done into that exit polling. The numbers are so, I mean, we've
That's
become
why this
used
was
to
so
it, right?
shocking.
Yeah, we've become used to it in recent years. All over the world, people tell pollsters one thing, and then when they go to vote, they do something else.
Right.
This is a problem in this country just as much as in others. But the gap between what the exit polls are showing and what the results now seem to be indicating, I haven't seen a gap that wide in any major election anywhere in the world. So something has gone terribly amiss. This is not simply, I would suggest, not simply a case of people telling pollsters one thing and doing something else. I think something more structural might be, there may be more structural problems here.
Structural, but not like something, I don't know. Who knows? Okay.
Yeah,
So
as I said, a deep investigation is called for, and then we'll comment on that when it happens.
I want to get your comments though on voters feeling left out of India's growth, the growing inequality, pervasive joblessness, rising labor costs. Feels very, very similar. What is this a vote against though? Is it a vote against Modi the personality, or a vote against, listen, I don't feel so good?
Well, for one thing, there's a strong anti-incumbency vote, right? This party has been in power for a long time. People would like to see the other side get a try. That's just human nature. That happens with democratic elections all over the world. But the other thing is that Modi's message of economic success has left out huge numbers of Indians. This is the world's most populous country. And a lot of Modi's messaging is, look at how many billionaires we've created in the last 10 years, or in the time that I've been in power. 800 million Indians still depend on highly subsidized handouts from the government, from food, and that cohort of people, that's a lot of people, were not included in this message of look how many billionaires we've created. And a lot of the votes, as the patterns that we are seeing is that he seems to have lost sort of a momentum in rural parts of the country. Farmers, those are the poorest of the poor in India tend to come from the rural heartland states, where for a long time Modi was dominant, the BJP was dominant. Their message was vote for us and all boats will rise. You will rise up from this menial labor you're doing in the farm, and you too will have a chance at economic success.
Why isn't it rising up? I don't want to go trickle down, I feel like, but why isn't it spreading out?
Well, that's the nature of so much of India's economic growth over the last many years, is that it has not been a growth that has included everybody. India's growth has come from the problem of unemployment has not been reckoned with in this growth. This is a jobless growth for a large part, for the most part. It is not creating enough jobs. It's a giant country, huge numbers of people, tens of millions of people are coming into working age every year. The economy, even though it's one of the fastest growing economies in the world, is not creating tens of millions of jobs. So there's a square and there's a circle, and these are not going to match.
So continuing with the economic implications of this, we saw the stock market, or we saw Indian stocks, I should say, have their worst day in more than 4 years.
Yep.
Obviously, markets don't like surprises. But I do wonder about the economic implications of this globally, Bobby, and what it means for a country that is trying to transition from developing country to a developed country.
I'm not terribly worried about the Indian economy, I will say this, because so much of Modi's economic policies were built on a platform that the previous government, dominated by Congress Party, laid down those foundations. Now the Congress is back. In terms of economics, in terms of needing investments, there's not a whole lot of sunlight between the BJP and the Congress Party and its allies. There may be some differences in prioritization, but for the large part, they both agree that India needs foreign investment, Indian economy needs reforms, Indian businesses need support, India needs to be creating more jobs, and those jobs have to come primarily from the private sector. There's a lot they have in common in their economic vision, although if you ask them directly, they would deny that furiously. Equally on foreign policy too, this is the same thing. Both countries recognize that India's association, India's ties with the United States are crucial, that India and the United States have a common concern about China's growing influence in the world. India, which borders China, which went into war with China in the early 1960s, feels the heat very closely. I don't expect big changes there. I think a lot of this has been, the election has been to a substantial degree about how the parties regard minorities in the country. The BJP, which is a very Hindu nationalist party, during this election, more than ever before, there was some really strident anti-minority and particularly anti-Muslim speeches from the Prime Minister on down. The Congress Party and its allies come from an older, more secular, more inclusive kind of politics. And I think that is what won out at the end of the day. But more than, again, to come back to where I started, more than anything else, this is the Indian voters voting against Modi rather than voting for anybody.
So, Bobby, is this the beginning of a new chapter in terms of India's political history?
It could very well be. We've seen this movie before. Okay. Coalitions, large, unwieldy coalitions, trying to form a government, sometimes succeeding but not being able to hold together the sum of their parts, and another election coming up in quick succession. Now, if Modi can hold together his coalition partners, and the two main coalition partners are notorious for switching camps. They've done it so many times in recent years that Modi will have gone to bed tonight concerned a little bit about whether he can keep his partners. If he can hold together his coalition, he will continue to be prime minister, but he will no longer have that swagger, and he will have to deal. Momentum is everything in politics, right? He will have to deal with an opposition in parliament that is much stronger than before, but feels like it has the wind in its sails, that will feel more emboldened to press against his policies, to push against whatever he's trying to do, particularly on social issues. And so he will not be able to govern with the confidence and the I use the word again, swagger that he had before.
So, Bobby, if he's not able to govern with the confidence and swagger that he had before, where should we look to for change? Where would you expect to see changes as a result of this election outcome?
Well, a lot of the changes will be more optical than actual, shall we say. I think the fact that the rejection of this politics of bigotry, the politics of identifying and targeting minorities, the politics of sort of a majoritarian view of religion, that India should be Hindu. I think all of that will recede, at least for a while. You know, a great deal is going to depend on what the opposition can do with the momentum that it has.
Right.
Rahul Gandhi, who's leading the opposition coalition, has not been in this place before. He is an untested quantity in this situation. He has run a Congress party that has long been a family fiefdom, and nobody dares to raise a voice against him. He has not had to be conciliatory. He has not had to include lots of different voices in the decision making. As a leader of a coalition, he'll have no choice but to do that.
Well, that's what I was thinking about, because in our reporting, you pointed out more than 20 opposition parties formed a united front against Modi, and I think about, okay, united front against one, but then you have to take those groups, right, and figure out the way forward.
Yeah, so now do you make a play for Modi's allies and try to bring them on your side and try to form a coalition with 24, 25 different parties? Or do you sit back and say, no, we're going to be in opposition, we're going to be a strong opposition, we're going to let Modi dig himself into a hole? This is a very crucial decision that has to be taken first. And then the real practical day-to-day difficulties of herding all these cats together. Right. It's one thing when you have a common goal of defeating Modi. It's quite something else. Now, there's a tradition in Indian politics of people switching sides, and often it's suggested that money changes hands, or at least there are inducements. Come over and join my coalition and I'll give you a ministership, or I will give your party some special consideration. A lot of that horse trading takes place in this exact period immediately after the election. We'll see a lot of that. The BJP has a much bigger, it's been in power so long, it has a much larger war chest than the Congress party. So we'll see.
So don't count them out.
Don't count them out. There will be a lot of effort, but the question will be, politicians first and foremost will be guided by what they sense is the mood of the people. If the politicians on the sort of opposition side feel like the momentum is against Modi, inducements of money or positions may not be sufficient. They will not want to back, or they will not want to join someone they think is a losing side. Politicians always want to be on the winning side first.
Right.
Bobby, I'm wondering from the perspective of the types of companies that we talk about each and every day. Elon Musk was supposed to go to India recently. Tim Cook makes regular visits there. It's like every big tech CEO, you know, in recent years has had a picture with Modi. Apple's trying to do more in India when it comes to production of its devices. What do these leaders have to be thinking about with a change in government like this?
Well, if there is a change in government, and it's a big if still, dealing with Modi and the BJP was relatively easy because it was one party with one coherent economic message. Coalitions can be harder to deal with because you have different economic ideologies within a coalition that includes the far left as well as center parties. The far left may be less accommodating towards foreign investment, but again, I don't expect that to be a serious problem. I think the Indian political spectrum now has moved. The entire spectrum has moved to a place where, with one or two exceptions, there is general acknowledgement that having foreign investment, particularly in areas of technology and in areas where jobs can be created, is a good thing.
Yeah, just at a time when, you know, the world just continues to surprise us. Before you go, we want to ask you, U.S. State Department spokesman Matthew Miller, in a briefing earlier, saying Israel is ready to implement a ceasefire deal. What does a ceasefire have to have in order to put an end to not just this battle, but this war that has existed for a long time?
Well, President Biden's laid out this very ambitious plan of 6 weeks of a temporary truce during which some hostages and some bodies are exchanged from both sides. Then after the 6 weeks, there will be a longer and work towards permanent ceasefire. On paper, this all looks good. The trouble is that his spokesmen say one thing. What we are hearing from Israel and Palestine is completely different. So the Israeli Prime Minister, just in the past 48 hours, came out and said, yeah, I'm not fully on board with that. There are some parts of the Biden announcement, he claimed, that have not yet been revealed. We don't know what those parts are. He's saying that there's no question of a permanent ceasefire until they've destroyed Hamas. So there's still quite a lot of daylight between what we're hearing in Washington and what we're hearing in Jerusalem, and that worries me. There's been too many of these cycles over the last several months where the White House comes out in front of Israel and says, okay, everyone's agreed, and then we go back and find nobody's agreed.
Yeah, exactly. I think we're going to leave it there. Listen, thank you so much. Always appreciate Bobby Ghosh, senior editor, as we said, editor, it feels like, of all things here at Bloomberg News, and we so appreciate his time. We want to switch gears, watching what's going on in geopolitics, but also watching the climate.
Yeah, because it is getting hotter. Bloomberg News reporting today that cities on the front lines of unrelenting high temperatures that are shattering records in 2024. In Thailand, more people have already died from heat this year than in all of 2023. We got with us Bloomberg opinion editor Mark Gongloff. He's a columnist who covers climate change. He's here in the studio. Mark, you write in your column that the record-smashing global heat of the past year has been driven partly by an El Nino weather pattern in the Pacific. The good news is that El Nino is rapidly giving way to the cooler sister, La Nina. Bad news, but good news? Good news, but bad news? Unfortunately, it's the latter.
Yeah, kind of the latter. I mean...
Hold that thought.
Sure.
We're going to come back to you.
Yep.
We are, though, right now going to go to the East Room at the White House and President Biden.
Congress refused to do. Take the necessary steps to secure our border. 4 months ago, after weeks of intense negotiation between my staff and Democrats and Republicans, we came to a clear bipartisan deal. It was the strongest border security agreement in decades. But then, Republicans in Congress, not all, but walked away from it. Why? Because Donald Trump told them to. He told the Republicans, it has been published widely by many of you, that he didn't want to fix the issue. He wanted to use it to attack me. That's what he wanted to do. It was a cynical and an extremely cynical political move, and a complete disservice to the American people who are looking for us to not to weaponize the border, but to fix it. Today, I'm joined by a bipartisan group of governors, members of Congress, mayors, law enforcement officials, most of whom live and work along the southern border. They know the border is not a political issue to be weaponized. The responsibility we have to share to do something about it. They don't have time for the games played in Washington, and neither do the American people. So today, I'm moving past Republican obstruction and using the executive authorities available to me as president to do what I can on my own to address the border. Frankly, I would have preferred to address this issue through a bipartisan legislation, because that's the only way to actually get the kind of system we have now that's broken, fixed, to hire more Border Patrol agents, more asylum officers, more judges. But Republicans have left me no choice. Today, I'm announcing actions to bar migrants who cross our southern border unlawfully from receiving asylum. Migrants will be restricted from receiving asylum at our southern border unless they seek it after entering through an established lawful process. And those who seek to come to the United States legally, for example, by making an appointment and coming to a port of entry, asylum will still be available to them, still available. But if an individual chooses not to use our legal pathways, if they choose to come without permission and against the law, they'll be restricted from receiving asylum and staying in the United States. This action will help us gain control of our border, restore order into the process. This ban will remain in place until the number of people trying to enter illegally is reduced to a level that our system can effectively manage. We'll carry out this order consistent with all our responsibilities under international law, every one of them. In addition to this action, we recently made important reforms in our asylum system, more efficient and more secure reforms. The goal is to deliver decisions on asylum as quickly as possible, The quicker decision means that a migrant is less likely to pay a criminal smuggler thousands of dollars to take him on a dangerous journey, knowing that if in fact they move in the wrong direction, they returned around quickly. And 2 weeks ago, the Department of Justice started a new docket in the immigration courts to address cases where people who've recently crossed the border and they make a decision within 6 months rather than 6 years, because that's what happens now. Additionally, the Department of Homeland Security has proposed new rules to allow federal law enforcement to more quickly remove asylum seekers that have criminal convictions and remove them from the United States. My administration has also recently launched new efforts to go after criminal networks that profit from smuggling migrants to our border and incentivize people to give tips to law enforcement, provide information that brings smugglers to justice. We're also sending additional federal prosecutors to hotspots along the border and prosecute individuals who break our immigration laws. One other critical step that we will be taking, and that has made a huge difference. We continue to work closely with our Mexican neighbors instead of attacking Mexico, and it's worked. We've built a strong partnership of trust between the Mexican President López Obrador, and I'm going to do the same with the Mexican-elect president who I spoke with yesterday. We've chosen to work together with Mexico as an equal partner, and the facts are clear. Due to the arrangements that I've reached with President Obrador, the number of migrants coming and to our shared border unlawfully in recent months has dropped dramatically. But while these steps are important, they're not enough. To truly secure the border, we have to change our laws, and Congress needs to provide the necessary funding to hire 1,500 more border security agents, 100 more immigration judges to help tackle the backlog of cases, more than 2 million of them, 4,300 more asylum officers to make decisions in less than 6 months instead of 6 years, which is what it takes now, and around 100 more high-tech detection machines to significantly increase the ability to screen and stop fentanyl being smuggled into the United States. These investments were one of the primary reasons that the Border Patrol Union endorsed the bipartisan deal in the first place. And these investments are essential, remain essential. As far as I'm concerned, if you're not willing to spend the money to hire more Border Patrol agents, more asylum officers, more judges, more high-tech machinery, you're just not serious about protecting our border. It's as simple as that. I believe that immigration has always been the lifeblood of America. We're constantly renewed by an infusion of people and new talent. The Statue of Liberty is not some relic of American history. It stands for who we are as the United States. So I will never demonize immigrants. I'll never refer to immigrants as poisoning the blood of a country. And further, I'll never separate children from their families at the border. I will not ban people from this country because of their religious beliefs. I will not use the U.S. military to go into neighborhoods all across the country to pull millions of people out of their homes and away from their families, to put detention camps while awaiting deportation, as my predecessor says he will do if he occupies his office again. On my very first day as president, I introduced a comprehensive immigration reform plan to fix our broken system, secure our border, provided pathways for citizenship for dreamers, and a lot more. And I'm still fighting to get that done. But we must face the simple truth. To protect America as a land that welcomes immigrants, we must first secure the border and secure it now. The simple truth is, there is a worldwide migrant crisis. And if the United States doesn't secure our border, there's no limit to the number of people who may try to come here, because there's no better place on the planet than the United States of America. For those who say the steps I've taken are too strict, I say to you that be patient, and goodwill of American people are wearing thin right now. Doing nothing is not an option. We have to act. We must act consistent with both our law and our values as Americans. I'll take these steps today, not to walk away from who we are as Americans, but to make sure we preserve who we are for future generations to come. Today, I've spoken about what we need to do to secure the border. In the weeks ahead, and I mean the weeks ahead, I'll speak to how we can make our immigration system more fair and more just. Let's fix the problem and stop fighting about it. I'm doing my part. We're doing our part. Congressional Republicans should do their part. Thank you very much.
Politics with the war. What was that? I asked her, is Prime Minister Netanyahu playing politics with the war?
I don't think so. He's trying to work out a serious problem he has. Thank you.
All right, that, of course, is the president there at the White House in the East Room taking just one question after those comments being asked about a possible truce, if you will. We mentioned that story earlier with our Bobby Ghosh, but again, noting that Mr. Netanyahu having a very serious problem in terms of working that out. Having said that, the president was in the East Room of the White House. He was there to talk about the worldwide migrant crisis and saying that the United States must secure a border, the U.S.-Mexico border, and so an executive order being put into effect. Also talking about more money for agents at the border. So again, just really bottom line, I feel like, Tim, is just about the securing of that U.S.-Mexico border.
Yeah, the president said that he preferred bipartisan action, but the GOP left no choice. He also said that the goodwill of the American people now is wearing thin. For more, let's go to Washington, D.C., where we find Balance of Power co-host Joe Matthew from our Washington, D.C. bureau. Joe, give us the context for this speech today, because there was a border deal in place just a few months ago, and that did not come to fruition.
That's true, and some of the elements of this executive order are drawn from that compromise. The idea of shutting down the border after a certain number of illegal crossings came from that compromise that never got a vote in the Senate, despite months and months of very difficult negotiating between Democrats and conservative Republicans, like Senator Langford, who the president mentioned earlier today. Never saw the light of day in the Senate. It was considered DOA in the House. So the president says, "You've left me no choice," was his message today. I'll point out, by the way, who was in the East Room for that. New York Governor Kathy Hochul came to Washington for that, and also Tom Suozzi, the newly elected, or re-elected, I guess I should say, Democrat from New York, because this is an issue that he actually managed to harness pretty effectively in his campaign to retake that seat. And it's something that has been a bit of a roadmap for Democrats here. But look, I have to be honest with you both. We've been talking to progressive Democrats and Republicans all day here in Washington, and they're all angry at Joe Biden. He already lost Republicans on this, who say 0 illegal crossings a day. But hearing from Democrats today, Pramila Jayapal, of course, the chair of the Progressive Caucus, comparing this to Trump policies. We heard that from another Democrats, several, in fact, Hispanic Democrats. Sylvia Garcia from Texas, talking about Trump-era policies, likening this to the Muslim ban. Alex Padilla, Senator, Democrat from California, paralleling what he says what the Trump administration tried to do unsuccessfully. So the president is hoping that there is essentially a silent majority in the middle here who like what he had to say today.
Joe, President Biden also saying the goodwill of the American people is wearing thin. It is an election year. So what does this do in terms of actually helping the problem? What does this do in terms of President Biden's chances at the polls in November? How does it potentially change the narrative for him?
Well, I don't know that it does. He's hoping that this will show fewer border crossings. If they get to 2,500, as we've reported, they would essentially shut down the border between ports of entry and not allow people who have illegally crossed to receive asylum. Does this move independents who have associated the border much more, at least enforcement, with Donald Trump? That has yet to be seen. But again, it really has to do with independent voters who haven't already made up their mind, and it's very difficult to pull that group. Whether it works and whether it plays on the campaign trail are kind of two different things right now, as Joe Biden has been learning.
All right. Well, certainly another important development of the day. Joe Matthew, we so appreciate it. He's co-host of Balance of Power on Bloomberg Radio and Bloomberg Television. Be sure to catch him at 5 p.m. Wall Street time right here on Bloomberg. Having said that, we want to go back to another big global issue, to be fair, and that is climate change, Tim.
We've got with us Bloomberg opinion editor Mark Gongloff. He's a columnist who covers climate change. His most recent column, available on the Bloomberg terminal and at Bloomberg.com, is all about El Nino, saying goodbye to El Nino, and also that La Nina won't be much of a relief. Mark's here in our Bloomberg studio. So Mark, for those of us who might not be totally familiar with El Nino and La Nina, the difference between the two, these are two climate phenomena. Explain what is that exactly is at play here?
It's about cold water in the Pacific Ocean, basically. And so when El Nino is happening, it's this oscillating thing that happens, this weather pattern that happens in the Pacific. When El Nino is happening, it blows hot air to the east, and when La Nina is happening, it brings cool air to the east. And so El Nino tends to, and these things, just because they're happening in the eastern Pacific, they have effects. They move the jet stream up and down, and so they have effects across the globe. They affect monsoons in India, the temperature in winters in Europe, and especially they have a big impact on the U.S. And what El Nino tends to do is drive global temperatures up. And that's exactly what we've seen. One of the big reasons we've had record high heat every month for the past 12 months. The oceans are, I don't want to see boiling is maybe saying a bit much, but they're really, really hot. Mm-hmm. We've seen all these droughts and floods everywhere. El Nino has had a lot to do with that.
Well, you always talk about baselines for different things in our world. And, you know, if your baseline in terms of the ocean air, or the ocean rather, is warmer, right? That impacts El Nino, La Nina.
It affects the effects that they have, and so
exacerbates
them, worsens them, and so especially with El Nino. So we had a bad El Nino in 2015, 2016. Same deal. Coral reefs died off. Oceans got hot. We had record high temperatures. This El Nino wasn't as bad as that El Nino or as strong, but the effects were much worse because just over the past 8 years or so, the Earth has heated up a little bit more. So we've heated up by the background sort of temperature increases about 1.3 degrees Celsius over pre-industrial averages, and so that makes everything more impactful.
I mean, that's kind of a big part of the problem, right? That the base just keeps going up and up. So when things happen, you know, it impacts it very differently on our Earth, or we don't even actually kind of know truly what the outcome is, right?
Right.
Do we? Like, you know what I'm saying? Like, as things are heating up, we just don't know all the different ways it can play out.
Yeah, because it's a complicated system. It's very hard to model, but some things you can model, and we have been able to predict that the temperatures are going to rise as we keep putting greenhouse gases into the atmosphere. And so one thing we could do is stop putting the greenhouse gases into the atmosphere and at least put the brakes on this.
Okay, done.
Yeah,
easy peasy.
Yeah.
No, I'm just kidding.
Should be simple. Once we solve the border crisis, we can get to that one. So that's one thing we can do, we can take a lesson from what El Nino has shown us. The Earth's temperature right now is about 1.6 degrees hotter than it was during pre-industrial times. That's the sort of goal we're trying to get the long-term warming to be at, and we're failing hard at that. But this is what we've seen this year is just sort of a sneak preview of what could come next. La Nina comes in, cools things down, and we could have a couple of years where we're not quite as hot, even though this year could be one of the hottest still. But it's never going to get back to where it was before this decade happened, and it's not going to stop the long-term trend of hotter temperatures.
One thing that we also talk about, Mark, is the link between climate change and extreme weather. And I'm wondering what La Nina could do for extreme weather, like hurricanes, for example.
Yeah, well, unfortunately, it may cool things off, but it makes hurricanes more likely to happen because it affects wind shear, which is like the difference in temperature as you go up and down in altitude. So it does away with that. And so everybody between the hot ocean waters and the La Nina, we're expecting a very busy Atlantic hurricane season. 25 storms, which would just about use up the whole alphabet, and 7 major storms, which are Category 3 or higher. So that's pretty busy, and unfortunately, those forecasts have been kind of underestimating the number of storms we get over the past few years. And with climate change, with hotter water, you get stronger storms, and so more destructive storms. So these are things that we're just going to have to start to adapt for, especially if we're not going to stop burning the fossil fuels.
Well, speaking of adapting, we've got a new position, Chief Heat Officers. Like, we keep seeing cities popping them up. We've got them in Florida, I think Miami-Dade. We've got them in other places. Athens, Melbourne, Dhaka North in Bangladesh, Freetown in Sierra Leone. It's just interesting to see that I feel like we've now got a new position that it sounds like it's going to be a much more important one going forward.
Yeah.
And that cities just need to figure this out.
Yeah, for sure. I mean, this is part of the adaptation we're talking about. The first city to do this, I believe, in the U.S. to use public funds for this was Phoenix, Arizona, where we've talked about this before. You know, the death toll keeps rising there because of the heat. They're struggling to get their arms around the problem. They're at least trying to get their arms around the problem, but this is dealing with the effects. And one of the things, unfortunately, that La Nina is going to do is make it warmer and drier in places like Phoenix and Texas and Southern California. So they're going to be dealing with this a lot more this summer.
Hey, Mark, I wanted to take advantage of you being in the studio with us to touch on a little bit of what we just heard from the president, who was speaking about an executive order on border closures. You made the point to us while he was speaking that the border issue is also an issue when it comes to climate change. Yeah. Can you talk a little bit about climate migration and why this has to be on the radar?
For sure. Climate migration is going to be a huge part of the effects that we see over the coming decades, and it's already happening now. And there's a lot of pressure in Central America. Central America and Mexico, the bottom of North America, have seen some of the highest temperature increases over the past few decades, and they also are suffering through El Nino has subjected them to a lot of drought, a lot of heat. Mexico City, there was a Washington Post report last week that said Mexico City was going to run out of water this month. We were kind of skeptical about that happening, but it is a very serious problem. And when you have a city of 22 million people running out of water, and you have people in Guatemala and El Salvador running out of water, running out of the ability to farm, to support themselves, where are they going to go? They're going to come to us where we have our own problems, but maybe they seem a little less dire. And so this border issue is only going to get more germane as the years go on.
Seeking existential asylum to some extent, right? Their ability to live. Hey, listen, you always, though, when you're in here, only got about 30 seconds left here. You know, you end the story that you've got out on the terminal. The upside is that humans also have the power to change their impact. I mean, you do remind us that we can do something about this.
It's still in our hands. You know, we just have to make that choice and have the political will to do what we need to do.
Well, it's a relevant statement considering the upcoming elections in the United States and really around the world. Mark, thank you so much. And thanks for hanging around as we had to juggle some of the breaking news today. Mark Ongloff, he's editor of Bloomberg Opinion, covers the climate world, if you will, and climate change right here in our studio.
Hey, let's head on over to Charlie Pellet for an update on the markets and the top business stories. Hey, Charlie.
Hi, thank you very much, Tim. Big change in the climate on Wall Street right now. We have gone from losses across the board to gains across the board. S&P right now up 10, gain there of 0.2%. The Dow up 189 now, up 0.5%. NASDAQ up 42, higher by 0.3%. The bond market's climbing as signs of labor market cooling reinforce speculation that the Federal Reserve will be able to cut rates this year. 10-year 4.33%, the 2-year 4.76%. Spot gold down 1%, 23.26 the ounce, and West Texas Intermediate crude down 1.2%, 73.34 for a barrel of WTI. Bitcoin closing in on 71,000, right now trading at 70,916. Bitcoin now up by about 2.6%. Again, recapping, stocks higher, S&P up 9, up 0.2%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, psychedelic stocks in focus today as a panel of FDA advisors are reviewing data for a new drug that's a version of MDMA designed to treat post-traumatic stress disorder, so PTSD, excuse me. The approval of the first PTSD drug in over 20 years will require U.S. regulators to do something that they've never done before, and that is greenlighting the mind-altering and illegal party drug known as ecstasy.
With more, Bloomberg News consumer reporter Tiffany Carey. She's here in the studio. You can read Tiffany's story on the Bloomberg terminal and at bloomberg.com/businessweek. Okay, so Carol said it, the new drug is a version of MDMA. It's also known as ecstasy. What else do we know about who's making it and what it could do for these people with this affliction?
Yeah, I mean, this drug has been researched for quite a while now. It was formerly known as MAPS, and now it's known as Lykos Therapeutics, the company that's bringing it up. And yeah, there's been a lot of excitement over it, and they've just run into a little more controversy as we get closer to the date of people questioning, hey, how do you actually run a clinical trial and have this placebo group, a control group, when you kind of know
It's
when
like
you're
obvious
on
if
the
you've
drug.
taken ecstasy or not, I
Right.
suppose.
Well, I love there's a quote in there about everything about this is unprecedented. This is from the chair of the Council on Research at the American Psychiatric Association, which makes me wonder, so what is going on probably at this panel? What are the main issues? What are the concerns? Who's going to be heard from? What are going to be kind of the voices heard on this?
Well, today the FDA is looking at this and is going to make a vote, which is seen as influential, but it won't be till August that they make a final decision, keep in mind. But the things that have come up so far are everything from, are these people being maybe unduly sort of influenced by the therapists? Because don't forget, this isn't just MDMA. It comes with psychedelic-assisted talk therapy of a kind we've never seen before.
Right.
And there are a lot of questions being raised about, were negative events reported as part of the trials? How do we meet that gold standard of review when people know that they're in the placebo group?
Can you talk a little bit about what's at stake here? Because PTSD is debilitating for so many people, and there aren't a lot of treatments out there that have been proven to work.
That's right. Yeah, they say there are 13 million people suffering from PTSD. Veterans are a huge segment of that, and there is so much momentum to try and find a solution for these people. I mean, the statistics about suicides and things are alarming. I think that this is not just something that will affect this particular version of MDMA from Lykos, but this could be sort of a bellwether for the entire psychedelics industry, because it's really the first time the FDA is reviewing something like this.
Yeah, it's just, it's something, it's not like any other drug, is it? And that's part of the problem. Or is it because of the way you have to administer it and monitor it? And someone who's like, what is?
I think it's the psychedelic-assisted therapy part of it that's really new here. We've seen versions of ketamine and other things come on that, there is some obviously hallucinatory effect, other things that go with it. But here, there's a very rigorous course of therapy, just hours of therapy that goes with it. And so the FDA not only has to parse what is the effect of the drug in the clinical trials, but what was the effect of the therapy. And as you can imagine, those things are quite difficult to separate.
What happens if it doesn't get approved?
That is a really interesting question. I think there are a lot of companies right now that are working on molecules that are similar to the classic psychedelics, but without the hallucinogenic effects. And so my guess would be, there's sort of go back to the drawing board, look at some of these analogs, as they call them, of the psychedelic molecules, and also just try to have more rigorous clinical trials if it's found that, it's not the drug that's the problem per se, but maybe the way the trials were done. I think that's some of the questions that are swirling right now.
But do you lose some of the impact of it and the effectiveness, the efficacy of the drug by taking that component away? I mean, we've had lots of discussions around this table, whether it's different types of addictions, right? And I think people are understanding increasingly our PTSD that, the forms of treatment that exist today just don't do it for a lot of people who then don't get to have kind of a quote-unquote normal life, right? Or a full life, perhaps. So you do wonder, does it have to be something dramatically different?
Yeah, that's the very question they're trying to look at. If you don't have this sort of ecstatic experience and a sort of trip, if you separate the trip from the drug, is the drug still effective? It's really fascinating.
You mentioned ketamine treatments, and this is a area that you've been covering for years at this point, Tiffany, and everyone should subscribe to your newsletter, I should note. But I'm wondering about the idea of what other afflictions people could have when it comes to these types of treatments. Like, where else could they go at? Like, what could these treatments go after?
Oh, what other sorts of indications?
You've talked about ketamine. You've talked about PTSD. I guess indications.
A lot of companies are looking at what's called treatment-resistant depression as a first thrust, because it's depression that hasn't responded to SSRIs or other drugs. We see everything from anorexia to cluster headaches. Psilocybin is also something that's being really heavily researched right now. There are other substances like ayahuasca, ibogaine. There's a lot of research into all these sort of psychedelic type molecules right now.
It's so hot. It is so hot right now. It's like this is an area where you have people working, not just publicly traded companies, but you have people working on startups on this. You have a lot of money from investors going into this. Like, people see a lot of promise here.
But I feel like we've been talking about it for some time.
Well, in fact, it looks like if you look at the inflow of money into the sector, we saw a peak in about 2022, and the VC funds have not been flowing as they used to. I think there's more skepticism now, and I think like all biotech stocks, these companies can really make it big, or they can just fade off without the proper money to get the trials
Is
through.
it cyclical, or is it a question of like low interest rate environment, going after these ideas?
I think it may be something macro, but I think there is also a little more hesitancy about, okay, these things have been in the pipeline for a while and we have yet to see that big breakthrough, which is why there's so much riding on this current trial.
Your story and reporting ends up with, even if Lycosa's MDMA gets the green light from regulators, it will only be the first of many hurdles. DEA will have to move MDMA to a less restrictive category of controlled substances. Administering it will require special training for therapists, and after the many hours of prescribed therapy mean it could cost more than $12,000 per patient. So there's a lot to go.
There is a lot to go. We need to see if insurance companies are going to take this on. We need to see if the traditional therapists are interested in providing this to their patients and whether people want it. Maybe some people don't want to take a long psychedelic trip. They're not comfortable with that.
Yeah.
Good point.
A lot of questions.
Also the veteran angle here.
Well, I think about those folks who serve our country and then come back and, they're not recovered, and they don't recover for a long time. And so you wonder if there's some hope and a new treatment could actually maybe change their course of life. Great stuff. Thank you. Tiffany, glad we could touch on it. We've been wanting to do this story for a while since it hit the Bloomberg. Tiffany Carey, consumer reporter at Bloomberg News, joining us here right in our studio. Coming up, we're going to get to the Wall Street Bank that's increasing time, Tim. It's apparently for new parents.
It's all about that war for talent. You got to compete with your competitors when it comes to offering those benefits from HR. This is Bloomberg Business Week.
You are also an owner, I should have pointed out, of 3 major sports teams.
That's right.
Right? And you're the first woman, as I understand it, first woman to own 3 major, have a stake in 3 major sports teams. Is that right?
Yes, and we'll say African American.
You were approached by the owner then of the Washington Wizards and the Washington Caps about maybe buying the Washington Mystics, which is the women's basketball team. And what did you say?
Well, first of all, it was Abe Pollin. He did come to me and Susan O'Malley, and they said, Abe Pollin says, look, I want you to be the face of the Washington Mystics. And I said, what do you mean be the face of? He says, I want you to buy this team. His health was failing. And I have to tell you, and a lot of women can understand this, we never get these opportunities. So that was the first thing that struck me, and I was flattered. I was really flattered. I said, well, Abe, what are the financials on this? And he handed them to me. He says, well, they're not making money. But I was still intrigued about team ownership.
Company news headlines on Bloomberg Radio.
From Bloomberg World headquarters. I'm Charlie Pellet. 2:53 on Wall Street. Axos Financial, which is lent to properties including former President Trump's flagship New York Tower, is plunging after Hindenburg Research said it was short the stock because of the bank's exposure to problematic commercial real estate loans. Right now, we have got shares of the company down by 7%. Citigroup is increasing the time off allowance for new parents in the U.S. and introducing leave for staff to care for ailing family members, bringing it more in line with Wall Street rivals as they fight to attract and retain talent. Citigroup shares today, right now, they are down by 0.9%. Sources tell Bloomberg CoreWeave, which is a closely held cloud computing software provider, has offered to acquire Core Scientific for about $1 billion. Those sources say CoreWeave's all-cash bid for Core Scientific comes as the company seeks to expand its AI data center capacity. Right now, we've got shares of Core Scientific surging by 42.2%. Airbus is negotiating a major sale of A330neo aircraft to China, with talks gaining momentum since President Xi Jinping visited his French counterpart Emmanuel Macron last month. Those sources say the largest Chinese airlines are considering buying more than 100 of the upgraded A330 models. ADRs of Airbus down now by 1.8%. An American is pushing a federal appeals court to overturn a decision invalidating its partnership with JetBlue, saying the ruling would prevent the airline from entering into future joint ventures. And those are our top company stories at this hour. This is Bloomberg.
You're listening to Bloomberg Business Week with Carol Messer and Tim Stenivek on Bloomberg Radio and Television.
It is Bloomberg Business Week. Let's get a check on the latest world and national news. We got Amy Morris in the Bloomberg 99 News in Washington, D.C. Hey, Amy.
Hi, Tim. Narendra Modi vowed to continue as India's prime minister even after his party lost its majority in parliament, claiming victory for his coalition in a post on X, calling it a historical feat. Raghuram Rajan is a professor of finance at Chicago Booth School of Business and the former head of the Central Bank of India.
It's actually a win for democracy, and that's good for India, because what democracy does is it allows the different parts to essentially express themselves and to negotiate.
Raghuram Rajan is with the Chicago Booth School of Business. President Biden unveiling a series of measures to curb asylum claims, heading off a surge of border crossings this summer. These moves will shutter the southern border to some asylum claims until the level of crossings substantially fall. Progressives call the moves draconian. Republicans say it's too little too late. Hamas has followed Israel in balking at President Biden's efforts to end the war in Gaza. A Hamas spokesman says that Israel must commit to a permanent ceasefire and full withdrawal from Gaza. Israeli Prime Minister Benjamin Netanyahu has already said Hamas must be destroyed before the war is ended. But today, the State Department indicated that Israel may now be ready to move forward on a deal. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Amy Morris. Now back to Bloomberg's Business Week with Carol Messer and Tim Stenivek.
All right, Amy Morris, thank you so much. Amy Morris in our D.C. bureau. All right, having said that, this story is among our most read on the Bloomberg terminal at this hour. Not the most, but among the most read over the past 8 hours. And this has to do with parental leave. It's going on at Citigroup, and they are increasing the time off allowance for new parents in the United States, and also introducing leave for staff to care for ailing family members, bringing it more in line with Wall Street rivals as they fight to attract and retain talent, as you said.
Okay, let's give the numbers here. So there's an extended policy now. All new parents in the U.S. and Puerto Rico will receive 16 weeks of paid leave, including those who adopted or had children through surrogacy. This is according to an internal memo seen by Bloomberg News. Birth parents are going to get an additional paid recovery time as of as much as 8 weeks. So that reaches a potential total of 24 weeks.
Can I just say, first of all, go to the Bloomberg or go to Bloomberg.com. There's a great chart that kind of like ranks everybody. And basically, Citi's getting up to what JP Morgan's been doing, B of A, Wells Fargo, Morgan Stanley. Goldman is 20 weeks paid for the primary caregiver and then 20 weeks for the secondary caregiver.
I think there's an outlier, though, on this, and it's Wells Fargo for the secondary caregiver. So paid leave for primary caregiver at Wells Fargo is 16 weeks.
Yeah.
But it's only 4 weeks for secondary caregiver. You've got Citigroup, Morgan Stanley, Goldman Sachs, JP Morgan, and Bank of America all with either 16 or 20 weeks of paid leave for secondary caregiver. I wouldn't be surprised if I saw Wells Fargo make a change, given that pretty much everyone else is on board.
Yeah, it's kind of stark and harsh when you
if you look at the chart.
You put a chart and you're like, black and white, folks.
One of these things does not belong, right?
Yeah, so
one of these things is not like the other.
Stay tuned to see whether that changes. What
I do think a big part of the story too is the paid caregiver leave for folks who have a family member who's seriously ill and incapable of self-care.
Yeah, been there. I am very grateful for this company that I work for, because I've had to do that several times in my life, and it's great to have that support when you need to do that. So that is something that's just kind of a reality of life, and we are increasingly facing that, especially as we talk about people living longer, and in our family life, we're going to have to think about how we help take care of them. All right, for those who are watching on television, the close is coming up next. Tim, though, and I, we're going to continue on Bloomberg Business Week.
Yeah, we got a great program. Is it the end of short sellers? The business of betting on stock declines is shrinking. Bearish investors are facing threats, Carol, on all sides.
And then we've got the founder and former CEO of Yum Brands stopping by to share his secrets to success, how he started out. You will be probably shocked. And then where he ended up. It's a big story. This is Bloomberg.
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question.
Great question.
That's a question I get all night.
Bloomberg, top experts, great questions.
Global bond market strength, U.S. labor market weakness, and emerging market assets rattled by surprise election results. Live from Studio One here at Bloomberg headquarters in New York, I'm Romaine Bostick.
And I'm Scarlett Fu. We're kicking you off to the closing bell here in the U.S. Let's get you a check on where markets stand with 1 hour to go. You have the S&P 500, which was sitting on modest losses for most of the day, but has staged a bit of an afternoon rally, up almost 8 points at the moment. Now, Treasuries have been gaining all day. That's pushing the yield on the 10-year down to 4.33%. That's a drop of 5 basis points. NYMEX crude extending recent losses. It's now at a 4-month low for WTI, $73.40 a barrel, following OPEC's unexpected decision earlier this week to loosen its production quotas, allow more production in effect. And Bitcoin up 2.3% on the day, but worth noting that it got above $71,000 earlier today. It's up for a 4th straight day. Mike Novogratz telling Bloomberg, Romaine, that if Bitcoin regains the $73,000 level, he sees it going to at least $100,000 by the end of the year.
All right, let's go back to the fourth line of your screen there, and that is the bond rally. A big focus today as it extends into a 4th day, pushing yields back down to levels from early April. We had a recent batch of economic data from last week into today that really has investors looking through signs that inflation is cooling and really focusing more right now on signs that economic activity itself is cooling as well. The so-called JOLTS data this morning showing job openings sliding to the lowest in 3 years. Roughly 8 million jobs available in April, but that's down from 8.4 in March. That's pushing the ratio of job openings versus unemployed people to 1.24, and that is the lowest since 2021. The quits rate unchanged for a 6th straight month, and that suggests it's just not as easy to switch jobs anymore. Adding to the cross-asset anxiety today is the continued sell-off that we're seeing in emerging market assets. India equities posting their worst day going back to March 2020. Prime Minister Narendra Modi, his party, losing its majority in Congress and over in Mexico. The peso weakening the most in 4 years after Claudia Sheinbaum's landslide presidential victory, raising fears of less business-friendly policies. A lot of stories we have to get to today, Scarlett, but let's circle back to the big theme of the day, and that is all the activity in global bond markets.
And when it comes to that activity, Romaine, it's important to look at bonds in the context of other asset classes like stocks. Now, by one measure, equities are still a better bet. The S&P 500 has a forward earnings yield premium of almost 0.3%, 2.691 to be exact. That is over the 10-year yield. So by this measure, stocks could be seen as undervalued versus bonds, and this is all before the Fed even begins to cut rates. According to BlackRock's Wei Li, GDP may be cooling overall, but companies are proving that they're still able to keep growing. And you see that in their recent earnings and specifically in their expanding profit margins.
All right, as we kick things off to the close, let's get it started here with Gene Tenuzzo, Columbia Threadneedle's global head of fixed income, as we kick you off to the close here on this Tuesday afternoon. And Gene, a lot of talk right now now about some of the moves that we've been seeing in the bond market. And I know it's really only been a few days of this here, but what is your general sense here about the direction that investors seem to be pushing yields right now?
It has only been a few days, you're right, Romaine, but I think the bottom line is that bonds are back. And the reason is exactly what you were stating about what we're observing with the labor market. And you can look at the JOLTS data and see that job openings are down by about 1/3 across the United States since the time that the Fed started raising rates. We already knew that the Fed's actions were having a material impact on more directly interest rate sensitive sectors like housing and certainly commercial real estate. Now we're seeing that impact broaden across the labor market. It doesn't mean that we're going to see non-farm payroll losses on Friday, but it does mean we should see continued deceleration, which should continue to take the steam out of inflation. So those are good news for bonds in the Treasury market.
Well, for investors who are looking at their portfolios in a holistic manner, meaning looking at all the assets, and this gets to Scarlett's point in the chart that she showed here about that premium, or rather lack of premium, that you're seeing versus equities. Is there a case to be made right now to not just have a higher allocation of fixed income in your portfolio, but to extend that duration as well?
I think there is. You know, we would prefer sort of short to intermediate maturities, but I think it's time to start moving out of cash and adding that interest rate sensitivity to portfolios really as a diversifier to equities and a diversifier to riskier credit. I think it's important to note that really bonds relative to stocks are about as attractive as they've been in most of the last 20 years. And that's because real interest rates on government bonds are significantly higher. It's not because credit risk premia are that much higher. In fact, credit risk premia is pretty expensive if we start to look at the corporate bond market. So I think it's really one where an allocation to bonds makes sense. Longer bonds do make sense, especially as we think about a Fed that could be cutting rates soon, but it's not the time to be taking a ton of credit risk in high yield.
You say an allocation to bonds makes sense, but that means convincing people to move out of cash. And I think that's a high bar to clear. People are pretty accustomed and they like the income that's generated by putting things in cash-like instruments. How much of a psychological hurdle is that?
It's a huge psychological hurdle. Money markets are the big red easy button right now, and investors are pushing it all day long. But I think reinvestment risk becomes more real when the propensity for the Fed to be lowering interest rates comes front and center. And I think we're only, months away from that at this point in time, that reinvestment risk is real. And when you start to see days like even yesterday, where bonds are acting like that diversifier when stocks are down, I think investors become more comfortable that they want to move out a little longer and lock in that yield for a longer period of time rather than just overnight.
Okay, you mentioned continued deceleration in job growth when we get the non-farm payrolls number on Friday. But right now, we're looking at least initially, the estimates are for an increase of 185,000 versus 175,000 in April. So it still looks like, by some measures, the labor market is very strong. How much do you trust the non-farm payrolls number, given that we know that there are some, tweaks and adjustments that need to be made because of migration patterns?
I think non-farm payrolls are one piece of the labor market mosaic, but I would look at a few other things on Friday, including the unemployment rate, which has been trickling upward. And if it goes above 4%, I think that's a psychological level for investors. I'm also, of course, looking at average hourly earnings because that inflation data is in the mindset of the Fed and is going to drive their decision making. So non-farm payrolls are important, but what's more important is just the total picture of what the labor market is telling you, which is that we're no longer in a robust recovery mode, but we're really in sort of a slowing and decelerating economy that probably doesn't look that much different than the type of economy and potential growth that we saw pre-pandemic.
All right, Gene, great stuff. Gene Chanuzzo over at Columbia Threadneedle, helping us kick us off to the close as the bond rally continues for a fourth day. Coming up here on the big program, a closer look at assets over in India on the back foot after Prime Minister Modi losing his majority in Parliament. We're going to take a closer look at how the election results over there are rippling through emerging markets and around the globe.
Coming up, we'll also get insight on where the biggest risks are in the commercial real estate market. Our guest, Ryan Williams, the CEO of Cadre.
And with an equity market right now driven by technicals, who better to talk to than Ari Wald, head of technical analysis over at Oppenheimer. He'll be stopping by the program a little bit later. Stick around. A lot more coming up right here on The Close. This is Bloomberg.
multi-trillion-dollar industry. There's a lot of ground to cover.
Bitcoin ETFs rubbing elbows with the big dogs.
This frenzy has engulfed the entire world.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg. From the world of politics to the world of business. 2 times a day at 1 p.m. and 5 p.m. Eastern Time, hosts Joe Matthew and Kaylee Lines deliver news, insight, and analysis from and about politics' biggest power players.
The president has been clear that is non-negotiable.
I mean, this is going to be an ugly, ugly year.
Balance of Power, live around the world twice a day at 1 and 5 Eastern. Only on Bloomberg TV and radio. Context changes everything.
This is Bloomberg.
Good morning. This is Bloomberg Surveillance.
This is Bloomberg Daybreak Europe.
You're watching The China Show.
This is Bloomberg Technology.
This is the countdown to the close.
Welcome to Balance of Power.
This is Bloomberg.
What is happening today is really, in the long run, really good for India because it forces India to choose a different course from the one it has been on, a course which has led to much wider unemployment and distress than needed in the country.
Raghuram Rajan, former Bank of India governor and now professor at the University of Chicago, giving us his take on India's election results. Now, the latest tally showing Prime Minister Modi's party losing its majority, but Modi is vowing to stay on as the nation's PM as part of a coalition government. This is the first time that he has been forced to rely on allies since storming to power a decade ago. India's markets plummeting on the news. Stocks erasing $386 billion in market value, and the rupee weakening as well. Joining us now is Brendan McKenna. He is emerging markets economist and FX strategist over at Wells Fargo Securities. We're just saying that a lot of election results out of the emerging markets this week that have surprised investors, whether it's Mexico, whether it's India, and of course, we have the South Africa elections going on as well. Let's start with India, because this is the one that seemed to have caught people by surprise. What's your read on what's happening there?
Yeah, I think it's absolutely a surprise. I think kind of leading into the election, a Modi and a BJP and an NDA landslide was kind of the base case scenario, and markets had priced that in. But now I think you're looking at a scenario where, yes, there's a little bit more political uncertainty, and the policy outlook is a little bit more unpredictable in some ways. So it kind of makes sense that Indian financial markets are kind of experiencing the volatility that they've been experiencing over the course of today.
So you could call this a knee-jerk reaction, but is this kind of a knee-jerk reaction to something that might end up being more balanced in the end, like Professor Raghuram Rajan was hinting at?
I think so. I think the knee-jerk reaction, again, is certainly understandable, but I do think it's going to be something that's going to be somewhat short-term in nature. It may not actually be a long-term, fundamental, structural type of political change that's going to materialize in India. I do think you'll still see Modi in power, and I do think you'll still see the reform agenda continue to make progress. But nevertheless, I do think that some of the underlying, call them vulnerabilities or structural weaknesses within India's economy may actually be on the way towards a little bit more balance if you can get kind of bipartisan types of support for some of these reform type of items.
I am curious here, Brendan. I do want to broaden this out a little bit between sort of what you and your colleagues are talking about heading into the last week. You've basically had 3 really big elections in the emerging market space: South Africa, India, and Mexico. Were you prepared for the outcomes as they ended up being?
I think we were a little bit more prepared for maybe Mexico, but I think South Africa didn't take us as much by surprise, but India certainly took us by surprise. As I mentioned, the base case scenario around India was really Modi, BJP, and a landslide, kind of maintaining the majority. Mexico, Sheinbaum was certainly kind of the leader kind of leading into the election, the supermajority. We were a little bit more prepared for it, but still a little bit of a surprise. We kind of knew that the ANC would lose its majority, and there would have to be a coalition there. I think kind of the bigger question around South Africa at this point is who is the coalition eventually going to be comprised of?
This does raise some broader questions here just about the EM trade overall. I feel like for the last year and a half, there's been all this discussion that this is kind of the moment where we would see EM as a whole shine. Let's take China out of the equation because we know they have their own issues here. Is there still a fundamental case for being an EM broadly?
I think so. I think when you're thinking about where is growth actually going to come from this year, yes, part of it is China, but we can take that out. India is still on pace to grow 7.5% this year. And even though we have some political uncertainty, it doesn't look like the fundamental growth drivers in India are really going to be upended all that much. You're still going to get a pretty nice growth profile in India. And also some of the other countries in Southeast Asia like Indonesia, Thailand, there's a pretty strong growth profiles there too. So I do think there's still some fundamental aspects that you can be optimistic and positive about in EM. I think the other thing is, even though there's some political uncertainty, the strength of institutions across the emerging markets over the last couple of years and decades have really improved. And I think that's something that gives a lot of confidence to investors when you're certainly considering some of these emerging market regions.
When you're looking at the currencies of these EM regions, setting aside whatever the Fed decides to do with interest rate cuts or sitting pretty on what it has right now, what looks most attractive to you?
I think carry looks very attractive. We have a lot of these central banks, especially in Latin America, that they raised interest rates very aggressively and well ahead of the Fed. And now they're actually getting to the point where the easing cycles may be coming to an end. And that's right around the time where the Fed is at least considering cutting interest rates. And we can certainly debate the timing of Fed rate cuts, but at least from an interest rate differential perspective, those may actually start to be swinging back in favor of EM currencies. So over the medium to longer term, we might actually see a scenario where the most interesting carry opportunities are still in emerging markets, and especially if the Fed is going to be cutting interest rates when a lot of these central banks are on hold. Again, interest rate differentials in the carry story are still pretty attractive across the emerging markets.
Is there one region or country that you would favor over another?
I think we still like Latin America.
Latin America, yeah.
Even though we have the political uncertainty in Mexico, there's still a very nice carry opportunity available there. Ultimately, I do think the political noise will die down, and some of the fundamental factors that have made Mexico and the peso a really strong outperformer over the last couple of years will come back into focus, and you'll see a lot more capital flows into Mexico.
Yeah.
But we're also still optimistic on Brazil as well. The fiscal noise is a little bit concerning, but again, I think we're at a point where the Brazilian central bank is probably ending its easing cycle, and again, interest rate differentials and carry opportunities are pretty widely available in Brazil at the moment.
All right, Brendan, great stuff. Great to have you here on set. Brendan McKenna, emerging markets economist and FX strategist at Wells Fargo Security. A closer look here at the market reaction to three elections that we talk about this idea here. The RAN, the peso, and of course what we saw with the rupee. I thought his comment, though, on Mexico was interesting, too, because that really was like the hot trade for a while. And I know it's only been 2 days of weakness here, so maybe that trade is still
borrow in yen and buy the peso.
But I mean, maybe that can come back once the initial knee-jerk reaction sort of settles down.
Things will settle down right around the time the U.S. election heats up, and then it's anything goes.
Yeah. So,
because, I mean, talk about ultimate election risk. That would be the big one.
I was trying to avoid the elephant in the room, Scarlett.
Sorry, I had to bring it up.
We're supposed to look down on all the other countries and ignore our own sort of foibles here.
We can't do that. Come on.
We cannot. We are going to keep it focus here on the market. Some interesting news earlier today, this involving Boston Beer shutting down reports of merger talks with a Canadian marijuana company. We're going to explain in just a second. That's coming up right here on The Close on Bloomberg.
Every single thing I've done, it's almost as if somebody has said it can't be done. I mean, I remember I was in a factory and I said, I want to go in the night shift. And they said, no, we don't put women in the night shift. I said, how will I be a successful production manager or personal manager of a factory if I never went into a night shift and knew how a third of my people worked? So in some ways it has fueled some of my determination. It's fueled some of my, okay, I'm going to show this is possible, a sense of I'm going to go get on and do it. It also gives me courage because I feel sometimes I'm not just doing it for me, I'm doing it for everyone else who comes after me. And I always tell women who ask me for advice saying, put your hand up for the most difficult job. Put your hand up for things that are challenging. Go in there and lean into things that are difficult, that are challenging, because that's what gives you the greatest credibility, respect, reputation.
covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
All right, let's get a view from the sell side. Our top calls, the big movers on the back of analyst recommendations. And we start off today with Elf Beauty. TD Cowen lifting its price target to a street high, $235, up from about $190. The analyst over there, Oliver Chen, says the bullish target reflects significant white space in international markets that could be areas of growth for the beauty products retailer. Chen also praising management's execution and some exciting marketing campaigns. Nevertheless, the shares getting caught up in today's sell-off, down about 2.5%. Next up, First Solar, Morgan Stanley, lifting its price target to the second highest on the street, $331, up from $248, with the analyst seeing upside for the solar equipment maker in rising power demand from AI. He also cites support from higher U.S. tariffs on foreign solar equipment. Nevertheless, those shares also on the back foot today by about 2%. And finally, GitLab. D.A. Davidson taking its $65 price target and cutting it to $50. That matches the current street lows out there, and the move comes after yesterday's earnings, with analyst Gil Luria warning that it's taking GitLab too long to see revenue benefits from the adoption of its new AI features. GitLab shares down more than 4%. And those are some of our top calls. All right, we want to stay in the sell side space and turn to M&A, and specifically rumors that are brewing about Boston Beer, in the limelight once again following a Wall Street Journal report that cannabis company Green Thumb Industries is interested in merging with the company. The story follows another report about deal rumors with the maker of Jim Beam, Suntory, also potentially interested. Now, Green Thumb declined to comment on the story. Suntory told Bloomberg it isn't in talks to buy Boston Beer, and Boston Beer said, just leave us alone. Gerald Pascarelli joining us right now, Senior Vice President of Equity Research over at Wedbush Securities. And Gerald, let's be clear here. All these rumors don't just pop up out of nowhere. Clearly something is going on. I don't know if the question is so much whether Boston Beer is interested in selling itself, but there does appear to be some degree of interest among other companies in combining with it. Do you see that?
Absolutely. Thank you for having me on. Absolutely. But it's important to note that Boston Beer has been a takeout candidate, or, it's been speculated that they are a takeout candidate for years. It's one of the reasons why, if you look at the valuation on the stock, it will trade at a premium relative to all other beer companies, because there is an inherent acquisition multiple or an acquisition premium embedded in the multiple. And so, since I've been covering the space, we've heard, speculation on M&A with this company probably for a decade. Mm-hmm. And I think part of the interest now stems from the fact that shares are trading significantly below their historical 1, 3, 5, and 10-year averages. And Jim Cook, who holds 100% voting rights of the company, is nearing retirement. And so I think that naturally you'll likely see these rumors continue to pop up. Whether or not, one proves to be true is hard to tell at this point.
Yeah, and I'm glad you point out the retirement, because that's certainly been a factor in some of the speculation. I do want to talk about just the underlying business here, Gerald, and the idea that sales growth at this company has been very erratic. I know they got a bit of a bump during the pandemic, but that was clearly a one-off here. Just take M&A out of the equation right now. As a standalone company, what is the growth story right now for Boston Beer and Sam Adams?
Yeah. So to your point, during the height of COVID, you really saw this boom in hard seltzer, and they were the number 2 market player in hard seltzer, where growth was in excess of 300% when everybody was home. That category rolled over. Craft beer as a category has remained stagnant. Cider's not really doing anything. And so when you look at the growth drivers for Boston Beer, Twisted Tea is their predominant growth driver. Twisted Tea has been a phenomenal brand for years. They've been an organic double-digit growth story, for well over a decade. And, that is kind of keeping Boston Beer afloat right now, because it does have very good brand equity and it has very good consumer takeaway. So I think in terms of the outlook on where they go from here, I think everybody is looking to see when hard seltzer is going to trough, and specifically Truly's position within hard seltzer is going to improve. Right now, if you look at the measured channel data, it's declining about 20% per month, and that's on comps of down 50% in the year ago period. So that category is under pressure. So I think it's a combination of an improvement in Truly, and then you get sustained double-digit growth in Twisted Tea, and then I think you have a good top-line algorithm there.
Okay, got it. But I mean, bottom line, the stock has this M&A premium that you mentioned. Out of the different combinations that have been proposed, what makes the most sense to you from where you sit?
Yeah, I mean, it would seem like a merger of two companies just to create combined co would seem reasonable. I mean, it's hard to imagine Boston Beer, if they're a takeout candidate, would want to acquire Green Thumb Industries for many reasons, especially if, considering that Jim Koch is nearing retirement, but also, if they were to acquire Green Thumb Industries, it's unclear what would happen with their New York Stock Exchange listing, because if they were selling cannabis products in the United States, they would be in violation of the Controlled Substances Act.
Right.
Green Thumb Industries is about a $2.5 billion market cap company. That compares to $3.5 billion for Boston Beer. They would have to raise a significant amount of debt to be able to make this acquisition. And not only would that substantially increase their leverage, but cannabis in general is capital constrained. And so, their ability to raise that kind of capital just seems unreasonable. And so I think that what you would be looking at is ultimately, a combination of both companies here.
Okay, got it. In terms of, timing, we talked about Jim Koch's impending retirement. Does that kind of create a natural deadline here for something to happen?
I don't think so. Again, it's unclear what his longer term planning is. And to be fair, he really has not, at least to my knowledge, given any indication that he's ready to retire. I mean, he is on the earnings calls. If you hear him and listen to him on the earnings calls, he's very much still hands-on with this business. He speaks with retailers. He speaks with distributors. He goes to trade shows. So this is a company that he built from scratch, that he cares deeply about. And that's the other thing to consider, is that this is his life's work. And, if it is now the time for him to look to sell when, his top line growth is under pressure and the stock is nearing all-time lows, like, I don't know. I just have my gut instinct would tell me that he would want to see this through, for maybe a longer period of time. But
Gerald,
it's difficult to tell.
Appreciate your joining us and giving us your take here. Gerald Pasquarelli over at Wedbush. Coming up, we'll take a look at risks in the commercial real estate market with Ryan Williams of Cadre. This is The Close.
The linear business is not going anywhere. The sports business is moving is going to figure itself out between digital and linear. It's an unbelievably healthy market. They all have to be in it. They all want to be. Every single one of the players want to be in it because of the audience. We have two assets in the sports business that are year-long, don't have a season. I don't believe prices are going down. You're going to figure out the bifurcation of the rights and give things up, not give things up.
How long do you think it is before Netflix actually jumps into sports?
You know, they're in sports right now, but they just do the shoulder programming.
Yeah.
I think their point of view, and you'll ask Ted tomorrow, is we build up we don't want to be in the bidding of rights and then not have any long tail. So I'm not sure. They did bid on Formula One, but ESPN got it. So I think that was a smaller package, meaning smaller economics. So we'll see.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything.
Just about 3:30 p.m. here in New York. This is the countdown to the close. I'm Romaine Bostic.
And I'm Scarlett Fu. It looked like we were just kind of going to have this day where bad economic news was actually bad for equities. It didn't turn out that way.
Yeah, well, unless you're like a cyclical stock. I mean, the Russell's down like more than 1%. It's kind of that weird thing, right, where we're getting relatively decent news on the inflation front, but that also is showing that what's driving down inflation is sort of a tamp down in economic activity. And I think everyone's worried is how much of a tamp down in that economic activity are we going to get?
Right. We wanted the slowdown in inflation check, but we weren't anticipating an overall broader slowdown in the economy that was keeping profits growing at these incredible speeds.
Yeah.
And of course, that's something that investors now need to factor in.
But you know what? I was going through all of the sectors today. You know what the number one sector is today in the S&P 500 in terms of gaining? Real estate.
It's not tech. Real estate.
Yeah. I don't know.
Those dividend yields,
Scratch your
I
head.
guess.
We should both scratch our heads.
All right. Well,
I don't want to scratch mine. You know, I'm worried about going bald, Scarlett.
Let's check with someone who can maybe provide some answers on that and turn to the commercial real estate space. Because earlier today, we spoke with the Citizens Financial CEO, Bruce Van Saun, and he says there is one specific area that he's watching.
Office is really the space that everybody's focused on. The rest of commercial real estate, you shouldn't just generalize that all commercial real estate is an issue, because multifamily's in reasonably good shape and industrial and warehouses in good shape, retail's in pretty good shape. It's really just that office segment that folks are most focused on.
It's always the office segment. For more insight, let's bring in Ryan Williams. He is founder and CEO of the commercial real estate investment management firm Cadre. Ryan, so good to speak with you. You heard from Bruce Van Saun. I wonder if you could just give us your point of view. How would you characterize the state of the commercial real estate market right now? There's a lot of negative sentiment around it, and sometimes unjustly for certain parts of it, but would you say it's depressed?
Yeah, great to speak with you. Good afternoon. And I do generally agree with Bruce. You can't overgeneralize real estate. It's unique in that there are almost micro strategies within the broader macro real estate investment ecosystem. Multifamily is a sector and a space that we love. You're always going to need somewhere to live. We have a chronic housing shortage across the country, and housing prices aren't going down. Life sciences office is another sector that's impacted by the funding, the venture world, and that's had its ups and downs. Big city office obviously is one of the most challenged sectors, but I've been encouraged to see really a proliferation of private-public partnerships. You read about what's going on now in downtown Chicago, the city really helping with conversions. And so I think overall what I would say is you have to be hyper-local and hyper-targeted when characterizing the real estate space. And we are in unique times. We're in times where, despite real estate values generally depreciating. The equities market's going up. The broader market seems to be performing well. And so what I think that points to more than anything else is that you've got to stay sector focused, and you can't be a broad thematic investor.
Okay, so if you say sector focused within commercial real estate, with the Federal Reserve perhaps moving to cut interest rates later this year, which sector within commercial real estate will that benefit first?
Well, I think the first sector it benefits is the sector that's most challenged right now, which is office. Right now there's just not a lot of transactions happening in the office space because you can't get financing, new financing, refinancing. Banks in many ways have been almost paralyzed. Some of it's out of uncertainty, some of it's out of trying to manage through their own portfolios. And so I expect to see more office transactions happening at somewhat elevated pricing levels. And I expect there to be a lot of, frankly, compelling deals that arise as well. So I think office will be the first sector and probably the most significantly impacted sector because it has the furthest to grow in terms of the baseline values today. But the key ultimately to there being transaction activity is price discovery. The key to price discovery is financing clarity and financing opportunity. And I think that's what you'll see cascade once the Fed does make a decision on rates.
If the Fed does make that decision on rates, or at least communicates it, Ryan, and we talk about this idea of clarity, does that actually provide enough transparency? Does that clear enough smoke out of the way? Because at the same time, you're still talking about other structural issues in this market, such as work from home and other things that are impacting this that go beyond just interest rates.
I think it's step one. It's a great question. I do think that it will provide enough clarity for those who are really kicking the can on looking at refinancing or selling to dip their toes in the market. It gives enough clarity for many of the distressed owners of real estate to say, you know what, I now have an option beyond giving back the keys to this office building. And that could be, selling at a massive discount to the intrinsic value. Or that could be refinancing. One of the themes that you hear, or you used to hear, I should say, was survive through 25. Now we're hearing persist until 26.
Okay.
And
wow.
I think that in many ways is the theme of office owners in this environment that, interest rate cuts will bring to top of mind for everyone.
Well, I hope we get to 2026 because I'm not sure much rhymes with 2027, Ryan. I am curious, though, specifically about the folks on the Cadre platform, the folks that are using your products here. Have you noticed any sort of change in what specifically they're looking at, what specifically they're putting their money into? Has that changed materially over the last, year?
Yes, great question. We have noticed, and we do our best to be responsive to our clients' portfolio needs. We have noticed a couple of interesting themes and trends. I'd say the first theme is that there are a lot of investors on our platform that are looking for a way to diversify outside of equities and crypto. And so many of those investors are looking for a way to diversify, but also to get a deal because they read about, the discounts that are likely to happen when the Fed reduces rates. And so we've seen on our secondary marketplace, a proprietary exchange platform that we've developed, an increase in appetite and an increase in activity amongst secondary buyers. So those investors that are willing to bid on other interests or stakes on our platform and existing assets. So we see secondary market activity increasing, which is a theme that I believe you'll see more broadly in the near term, given the number of funds that have redemption requests, whether it's the non-traded REITs or otherwise. And then the other theme we've seen is a focus on yield. This environment is one in which you can get a risk-free yield in the mid-single digits. And so investors have kind of increased the bar for what they're looking for as it relates to cash flow and yield. So, where it used to be a 5, 6, 7% cash flow yield opportunity would sell out in minutes or hours. Now, that bar has been increased to 8, 9, 10% in terms of the appetite. And so I think that's one theme in addition to the increase in liquidity, activity, and interest that we're seeing on a daily basis.
All right, got to leave it there, Ryan. Really appreciate you taking time for us. Brian Williams there. He is the founder and CEO of the commercial real estate platform, Cadre. And I didn't get a chance to ask him this, but there was a great report that came out by this economist over at New York University right at the end of last month that talked about the exposure that banks have to commercial real estate and saying that when you factor in REITs, it's a lot higher than what we think it is because we can only kind of measure it based on their direct investments. And we kind of forget there's all these indirect investments out there that's creating a lot of exposure. And I think that gets to his first point that banks still don't have a lot of clarity right now as to what's going on.
Yeah, absolutely. And of course, if you don't have to mark anything, you're not necessarily going to either. You had mentioned that REITs are the best performing sector of the day. Also for the past 5 days, up 3.3%. But over the past 3 months, REIts are the worst performing, down 4.3%.
All right. Well, we're going to get back in just a second here, talk about some of the big movers on the day. GameStop, I thought it was going to be up again, but apparently the bloom coming off the rose here. The share is doing a reverse Uno.
That's like barely a move for GameStop.
I just want to say, whoever wrote reverse Uno into the prompter, chef's kiss there. A 21% rally on Monday. It's our stock of the hour. It's coming up next. This is The Close on Bloomberg.
Fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything.
Morning from our world headquarters in New York. I'm Manus Krennic.
And I'm Danny Berger. Let's set your agenda.
Bloomberg Brief delivers the market news, data, and analysis you need live every weekday at 5 a.m. Eastern. Bloomberg. Context changes everything.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television. The top names in business are on Bloomberg.
They're kind of predicting a soft landing, and you see that in both stock price, which are kind of high, credit spreads, which are kind of low, markets, which are kind of wide open. That's all good. Doesn't tell you what the future is going to be. But I think there are a lot of inflationary forces in front of us that, may keep it a little bit higher than people expect. My view is whatever the world is pricing in for a soft landing, I think it's probably half that. I think the chance of something going wrong is higher than people think.
Bloomberg. Context changes everything.
All right, it's time now for our stock of the hour. A closer look at shares of GameStop. At one point, they jumped about 47% over the last few days after trader Keith Gill posted what appeared to be a $116 million position in the stock. The rally, though, fizzling just a little bit today. The share's down about 3%. Abigail Doolittle joining us right now. Talk a little bit more about our stock of the hour. And I was just kind of going through the whole ructions in this stock. I mean, this was basically like $17 stock at the end of April. then sort of picked up momentum in May. Roaring Kitty had the post on X. That sent the stock up to like $50. It sold off. Then he posted this cryptic thing on Reddit the other day. He had the big rally there, and now it's pulling back again. What's going on?
It's pretty amazing, this volatility. I mean, it's hard to know where to start. Now, net within there is a 550% rally, you know, basically over the time period of a few days because of his memes, you know, indicating that he's going to get involved. So, you know, that stands out, obviously. The $116 million unverified retail position stands out. I mean, one could assume that all the money that he made back in 2021, he's poured into this. But, you know, the other thought that crosses your mind, is this him alone? But then, you know, there's something else that's going...
That's a $116 million position.
What's that?
And he still had the calls on top of it.
And the calls on top of it.
Which
yeah,
is
I mean,
that's a lot of money.
It's a lot of money for some guy, some dude in Massachusetts out of his basement to be
And I assume
trading.
he's not in the basement anymore.
Yeah, he's probably now up in the penthouse somewhere.
Right.
But then there's also this moral sense that something is not quite right here. Back in 2021, it was us versus them, retail versus institutional. Whereas now, you know, the fact that he has the long position in the stocks and the options, it's like, what's going on? Because if he's trading listed, everybody sees it. If he's trading OTC, you don't see it. So he's saying that he still has these positions, but if he's going OTC on one side, then, you know, we're not seeing
that's the other thing. Sorry to co-op this, but like, it's not showing up in the numbers. I mean, it's possible he could amass this position very slowly, and that's why we're not seeing it. But everybody's going through the trade records, and you're just not seeing those big sort of entry points.
Well, so he could be OTC, which is very, you know, sophisticated. Nobody would know. It takes a lot more time. Something that stands out to me, yesterday you actually broke the news. E-Trade, Morgan Stanley reporting that E-Trade is, or that Morgan Stanley and E-Trade are thinking about reviewing his account. They would know, because if his positions are listed, they would see at least one side or both sides. I'm not saying that they're not seeing both sides, but they actually know what's going on there. The fact that they wanted to have a conversation. So yeah, there's a lot going on here. And I think that that's, back in 2021, it was fun. It was like, go Roaring Kitty, go meme stocks, AMC, plus there was the nostalgia around it. Whereas this time it's like, all right, so this guy posts these memes, one of them being an Uno card, and all of a sudden his position is up so much, the SEC is probing too.
Yeah, like you said, back then it was sticking it to the man. Now he's the man.
He is
So
the man.
who's he sticking it to? All right. Abigail Doolittle, thanks so much. Focusing on GameStop, our stock of the hour, stock of the day, stock of the past week. Really?
When do I get to be the man?
Well, I'm sorry?
When do I get to be the man?
You are the man.
No, I'm not.
Coming up, we've got Ari Wald of Oppenheimer joining us for the close.
People ask me all the time, what is the key to being a really good investor? And I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
Go figure out how to get exposure to hyperscalers, which we think will be the biggest winner in what AI and data storage will do for the world.
Operating in a very volatile environment. So JetBlue has a very large presence here in New York, and there are air traffic control challenges. And so we've had to overinvest in hiring excess crew members and building flexibility into our planning process. And so over time, we hope to wean some of those investments back as the operating environment around us stabilizes.
We made the decision early on
that we were only going to invest internally on key differentiating technologies, and clearly the powertrain is the key differentiating technology. So our investment is a recurring investment with respect to the powertrain team, the battery team, which is part of it, the engine team, electric engine team, which is part of it. And we also have a lot of non-recurring costs with the other components because we're not developing those internally. We're using the existing aerospace defense supplier base for most of the other components.
We invest a lot in the offices, that you feel home, that you can actually be at your best yourself, and people work very differently. We take a lot of input from the sports world, actually, the athlete spirit, right? Building a sports team that can perform at the best, but also talking a lot about the explorer spirit. How can we really tap into new things, continue being disruptive? We have 80 different nationalities at On. It's very important to have a diverse team because we have a very diverse landscape of customers.
We'll have to build a portfolio of interventions. Lifestyle will also play into for some of them, and I think we can help many patients get down to a weight that they can maintain and live the life they want to live and avoid many comorbidities for the healthcare systems.
This is the countdown to the close. Romaine Bostic alongside Scarlett Fu. 10 minutes until we get to those closing bells, Scarlett. The S&P, Dow, NASDAQ oscillating between gains and losses. The Russell still deep in the red.
Yeah, we're trying to figure out a direction right now, and the economic data that we got didn't really clarify anything. I feel like this is what it's going to be like until Friday when we get the big jobs report.
Yeah, well, we hope it provides some clarity. What if it doesn't, Scarlett? Then what?
Then it's the Fed, right? They come out with their updated economic projections next week. In the meantime, you have bonds rallying. You have stocks holding on to some modest gains, although they were negative for most of the morning, and oil extending its declines. That's been interesting to me because of OPEC Plus's unexpected decision, and Bitcoin continues to zoom higher.
All right. Well, speaking of the Fed here, we had a chance to catch up with Gene Tenuza over at Columbia Threadneedle. Talk a little bit more here about the rally in the bond market. Take a listen.
The bottom line is that bonds are back, and the reason is exactly what you were stating about what we're observing with the labor market. And you can look at the JOLTS data and see that job openings are down by about 1/3 across the United States since the time that the Fed started raising rates. We already knew that the Fed's actions were having a material impact on more directly interest rate sensitive sectors like housing and certainly commercial real estate. Now we're seeing that impact broaden across the labor market.
All right, well, Gene Tenuza says that bonds are back. Unfortunately, stocks aren't. It was 2 weeks ago today that the S&P 500 hit that record high, and since then, it's done nothing. Squadoosh. Ari Wald, head of technical analysis over at Oppenheimer, joining us right now to talk a little bit more about the market moves as we get closer to those closing bells. And Ari, I am curious here about, I don't know if there's a pullback to call it right now in the equity market, consolidation or what here, but when you look at the price action over the past 2 weeks, coming off that record high on the S&P, coming off Dow 40,000 just a couple days prior to that, what do you make of the move since?
It feels heavy. I think over the last 2 weeks, the period you asked about, there are surely some signs of buying fatigue in the market. It started on that new high just before Memorial Day weekend. S&P shot out to a new all-time high, couldn't hold it, and had a bearish reversal day. And I think that's telling in this market tape, but I think it's also important to remember that bull markets don't go in a straight line. And so it's here what we're trying to do is differentiate between time horizons. We're trying to differentiate between whether this is just a short-lived trading top or something more ominous.
Yeah.
And our work indicates that the longer-term bull cycle is still intact, and the market should move higher over the coming months, meaning to buy the pullback.
Well, that gets to the question then. When you sort of look at technical levels, I think we're still holding above most of the major new moving averages. Some of those overbought or near overbought conditions that we saw a couple of weeks ago seem to have sided just a little bit here. So based on that backdrop here. Is there enough there, at least from the technical side, for traders to chase after some of these, what we're seeing in the market right now?
As far as the tactical opportunity, I don't think we're there just yet. You know, it's more than just the level. It's how you get to the level and the behavior around the level. So first off, where are we coming from and where are we going? First off, and let's think in terms of, and talk about it through the VIX. The VIX is coming off a level of 11.5. It's the lowest level since November 2019. To us, that is a type of condition you'll see in a bull market. The VIX provides these asymmetric signals. You can't necessarily sell stocks because the VIX is low, because a low VIX is a function of a bull market. But as far as the tactical opportunity, you want to buy it when the VIX spikes, and we're not quite there. I think in this environment, a 50% spike from its recent low would be that opportunity. That could get you, that would be equivalent to a VIX around 18. And I think that would be the type of opportunity traders should be looking for over the coming weeks, especially as we enter this strong seasonal backdrop in an election year. June to August, actually the three strongest months of the year with an incumbent candidate. So the setup is there. You want to buy weakness, but I think probably we're not quite there as far as forming that near-term low.
Okay, so we need to see a decline and then a spike in the VIX before it's kind of the systems indicate it's time to go in. You also say that momentum as a factor should continue to be rewarded. We were just talking with Abigail Doolittle, who I know you know well, about GameStop. What do you mean by the momentum factor? Is that meme stocks or is that something else?
That is something else. The meme stocks are more of a casino trade for us. We are momentum investors that overlay technical analysis on top of our process. Momentum investing being the phenomenon and the market anomaly where stocks that have outperformed over a prior 12-month period are often stocks that typically outperform looking ahead. So it's not just stocks that rise a lot in a short 2-week period. It's kind of your established leadership over the prior year. And what we found is, in thinking in terms of this bull market cycle, we've looked at how the factor has performed around those cycles, is that once the leadership of the bull cycle is established, the momentum factor typically really starts to accelerate in the second year of a bull market. And that the leader, which is to say that the leadership stays and continues to drive gains looking ahead. So rating high in our work is going to be sectors like industrials, financials, and technology, specifically infrastructure, capital markets, and semiconductors. Those would be some of our favorite areas. That would be momentum, how we define it.
Got it, got it. I also want to ask about perhaps stocks with momentum to the downside, at least in the short term. We look at oil prices, they're now down for a fifth day, and energy stocks are becoming a regular drag here. From a technical point of view, how important is oil's price action to the trend lines that you see in equities?
Sure. Well, speaking for the equity market as a whole, we've seen the correlations change. In 2023, falling oil was a support for equity prices and coincided with some pretty strong rallies. We're seeing opposite action as it stands today, with falling oil prices coinciding with this kind of heavy market action. I think looking ahead, oil prices should remain range bound. I think generally speaking, the dollar is going to be range bound, and that's going to support more stable commodity prices looking ahead. For that reason, energy is a market weight sector. I think you could be selective within there. Oil refiners look best. Select E&P names, less so the service names. What really rates in terms of low momentum for us is actually more low volatility, high dividend paying counter-cyclical defensive sectors like consumer staples, utilities, and REITs. Those would be the sectors we're most worried about, just simply because we think they could underperform in a rising market tape.
All right, Ari, going to have to leave it there. Great stuff. Ari Waldo there, head of technical analysis over at Oppenheimer, helping us count you down to those closing bells. Those bells just about 3 minutes away here, with stocks remaining here on the back foot here on the day. Though we should point out the S&P holding on to modest gains of about 0.1% here. Carnival, Norwegian, and Royal Caribbean, those are your three biggest percent gainers right now in that
And they've
index.
done very well because of this insatiable demand for cruise lines, or cruise trips overall. Remarkable.
I don't know who these people are. Like every now and then.
My grandparents?
Okay, I guess so. Well, I got an aunt who pretty much lives on a cruise ship. She just,
there you go.
She gets off one, and 2 weeks later, she's on another. She doesn't even need a house.
I think that's their favorite customer, who they're going after. It's so interesting that the S&P 500, not near any trend lines, but the 10-year yield is. All
right, we are moving closer to those closing bells. Sit tight. Full market coverage coming up right here as we take you to the bell and beyond.
Beyond the Comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic alongside Scarlett Fu. We're counting you down to the closing bell, and here to help take us beyond the bell. It's a global simulcast. We're joined right now by Tim Stanovic, Emily Grafeo in today for vacationing. Carol Masser. Welcome to our audiences across all of our Bloomberg platforms, television, radio, and our partnership with YouTube, Tim. Stocks still kind of a mixed bag as they have been since hitting those record highs just about 2 weeks ago.
Yeah, the S&P 500 kind of searching for direction today. We did see some kind of clear moves early in the session, but it moved between gains and losses about a dozen times so far today, Emily Grafeo. So up about 0.1% right now, but no clear movement.
Yeah, and Tim, we were just talking about earlier how stocks didn't really move that much on that jobs report or the JOLTS report, but the bond market really seemed to like it, but stocks really shrugging it off, Scarlett.
Yeah, I think it's really interesting that bad economic news was seen as bad news for the stock market. And this is definitely a change from, say, 2 weeks ago when the S&P 500 is at its record high and everyone was saying, oh, the bad news is great. It means the Fed's going to move soon.
Yeah, absolutely here. And it gets to the question is when do we get that clarity? We were speaking with Ryan Williams, the founder of Cadre, about commercial real estate. And he really talked about this idea, at least from a real estate perspective. That's really what the investors there are looking for, is for the Fed to finally provide some clarity. And maybe that's also what investors in other asset classes are looking for as well.
Do you think we'll see that clarity next Wednesday?
No, not at all.
No? You don't? No. The countdown is on.
No, and here's the thing. It's not the Fed's fault because the Fed, I think Jay Powell will be as clear as he can be, but the market will, of course, interpret it in some janky way, and then we'll just sort of rinse and repeat for the next few months.
Is that a technical term?
I'm trademarked. Okay. We get the closing bells here in New York. This is where people clap and cheer for a job well done. A mixed bag, though, in the markets here on the day. You do have some green across the screen with the Dow Jones Industrial Average going to finish the day higher by roughly 140 points, or about 0.4%. The S&P 500 up about 8 points, or 0.1%. The NASDAQ Composite is higher by 28 points, or 0.2%. But here are your decliners on the day. You can find that in the cyclical and small cap space. Dow Transport's down 0.9%. S&P 400 mid caps down 1.3%, and the Russell 2000 guys down 1.3% on the day.
That Russell 2000 really taking out on the chin today. Much bigger movement than we saw in the S&P, the NASDAQ, and the Dow. Speaking of the S&P, kind of an even split between gainers and decliners in the S&P 500, Scarlett. 230 did move higher, 273 stocks moved lower.
And that's pretty much reflected in the sector performances as well. Let's take a look at the IMAP, which shows you how the different sectors performed. And the reason why there's so much more green on that screen is because tech finished up 0.4% for the third best performance. Real estate investment trusts and staples were the best performers. And
yeah, give us some love, Scarlett.
Right. Well, as you mentioned, Romaine, REITs were the best performers over the past 5 days as well. Your weaknesses, your weak spots are materials, energy, and financials, with materials down about 1.2%.
Okay, I got the gainers today because Carol's out, so I get to do the stocks that moved higher.
Wow.
I do want to start with Tellurian.
Do you sit in her chair too when she's gone?
No. Emily gets that today. Tellurian shares finishing the day higher by 17%. This after Bloomberg reported earlier that the company is in discussion with Saudi Aramco and Woodside Energy Group to invest in its liquefied natural gas export project in Louisiana. Tellurian has reviewed various equity investment offerings from the energy companies related to its plant, said the people who asked not to be named, as they are not authorized to speak to the media. Shares higher today by 17.1%. And shares of cruise operators surged today. I want to pick one out specifically. Carnival Corporation shares moved higher today by more than 5%. We did get some news late yesterday that the company is going to sunset P&O Cruises Australia and fold Australia operations into its Carnival Cruise Line operations. So Melius Research came out with a note today that said that Carnival's decision to consolidate its P&O Cruises Australia brand is, quote, hugely symbolic of the change underway. From CEO Josh Weinstein. Cunningham over at Melius Research also says that this could be the catalyst to start a rally. You also had Peel Hunt upgrade its recommendation to buy, noting that the company will appeal to more investors as it accelerates its debt for equity swap. And then a little M&A news coming at you for my final gainer today. Core Scientific, ticker CORZ, just surging today, finishing higher by more than 40%. 40%. This after the company, well, I should say Bloomberg reported that CoreWeave has offered to acquire Core Scientific, the Bitcoin mining company, for about $1 billion, just according to a person with knowledge of the matter. CoreWeave's all-cash bid of $5.75 was made on Monday and comes as the company seeks to expand its AI data center capacity. This according to
CoreWeave and Core Scientific. What's the name going to be when they combine?
The cores. Oh. Yeah, they got to go.
Double core.
Yeah, that one I had to read very closely to make sure I got the cores correctly.
Yeah, and I'm still not sure you did, but we'll go with it.
All right.
Wasn't there a band called the Core?
Potentially buying Core.
All right, let's take a look at the decliners in for Carol today. I'm looking at Freeport-McMoRan. That was down as much as 6%, falling alongside the broader materials and energy stocks amid a drop in global commodity prices today. We saw copper falling below 10,000 as inventories are rising. Earlier, Bloomberg had reported that stockpiles on the Shanghai Futures Exchange climbed to the highest level since 2020. But of course, we also saw copper top a record high just a few weeks ago at around 11,000. So 10,000 here, not too bad for copper, but dragging down Freeport-McMoRan today, a mining company. I'm also looking at two retailers. DBI, this is the owner of Designer Brands, Designer Shoe Warehouse. Romaine, I know you love that store.
I went in there once, and it scared me.
Yeah, there's a lot of shoes in there.
A lot. And they're just like spread out on the floor. What's that about?
They're all over the place. You have to hunt.
Access.
You have to hunt and peck. Anyway, this stock was down as much as 22%, biggest drop since March. And the earnings were all around bad. It was a miss on adjusted EPS and comp sales, the latter being down 2.5% versus analysts estimating a gain of about 0.6%. The CEO, Doug Ho, did say, "We believe that we're on solid footing as we enter the summer months and are pleased to reaffirm our guidance for 2024, but that was not enough to lift the stock again, down as much as 22%, down about 20% at the close. And lastly, one more retailer, Bath & Body Works, saw its biggest drop since April 2020 after another earnings miss. Net sales were down 2%, and it sees net sales down 2% to flat in the second quarter. Yeah. Analysts saying that this is going to likely lead to a worsening in sales growth and earnings growth.
All right, well, we still have earnings, believe it or not, here. CrowdStrike crossing the wire. So too is HP Enterprise here. Their 2Q numbers, this is the fiscal quarter here. Revenue coming in, looks like a big beat, $7.2 million. The street was looking for $6.8. Adjusted EPS beat as well, 42 cents versus what the street was looking for at about 39 cents a share here. The company's guidance for the fiscal third quarter, it sees net revenue at $7.4 to $7.8 billion. The low end of that range is right around the average of analyst estimates. EPS, their guidance for the third quarter, 43 cents to 48 cents. The street on average was looking for 46 cents a share. And the company guys saying that they still see their full year free cash flow at least $1.9 billion. The street looking for roughly about $2 billion.
Okay, so shares of Hewlett-Packard Enterprise up about 8%. We're seeing a different move, the complete opposite, coming from CrowdStrike. The company did report first quarter revenue that beat estimates, but shares down 7.4% right now. For fiscal year revenue coming in between $3.98 billion to $4.01 billion. That's above estimates. Second quarter revenue coming in, or estimate coming in at $958.3 million to $961.2 million. Estimates were for $954.6 million. Again, first quarter revenue beating estimates, but the company is down by about 6% in the after hours.
Yeah, I'm looking at CrowdStrike. Part of it is because people were expecting the company to have a beat and raise quarter, and the big question here is its annual recurring revenue and how that plays out. Going back to Hewlett-Packard Enterprise for a moment here, I just looked at the company statement from Antonio Neri, the president and CEO. He has 2 paragraphs, and he mentions the words, or the acronym AI, 1, 2, 3, 4, 5, 6, 7, 8 times.
That's it?
Yeah, that's quite a bit. But the headline here for them is that AI systems revenue more than doubled from the prior quarter. Yeah. And, obviously this is where they see the growth coming from.
Well, this is curious, too, because, we talk a lot here about how some of the companies that are supposed to be benefiting from AI haven't necessarily shown that in earnings. We saw that, of course, with Dell. We saw that with some of the software companies last week here. So at least in this one particular earnings report out of HP, I guess you could maybe take some encouragement here, at least if you believe this is coming from AI, that at least there's a benefit flowing immediately to investors.
Yeah, they get about 100 basis points of a gain in the post-market for each time they mention AI, Romain.
Okay, you should use that in your story, Emily.
It's my drafts.
I do want to just go back to CrowdStrike because it is lower right now. The company's president, CEO, and co-founder George Kurtz coming out and saying that the differentiated architecture has a wide competitive moat and uniquely enables CrowdStrike to solve the industry's biggest cybersecurity, IT, and data problems. Still, not a beat and raise, though, as Scarlett mentioned, investors were expecting. Guys, that is going to do it for our cross-platform coverage. We call it Beyond the Bell here on Bloomberg TV, Bloomberg Radio, Bloomberg Originals, and pretty much everywhere you can get us, including YouTube as well. We'll be back, though, tomorrow, same time, same place. We'll see you then.
All right, stick with us. Our coverage continues here on Bloomberg Television. Coming up, a conversation on cybersecurity with Jeff Shiner, the CEO of 1Password. That's coming up in a bit, right here on The Close on Bloomberg.
You actually offer a payout at 7 years to encourage people to explore if they don't find themselves in management position. I mean, what's the thinking?
Yeah.
I mean, like, what's that about?
We're not forcing everybody to be kicked out, right?
But you encourage people to explore.
Exactly. We encourage people to think about their, because sometimes it's easier, even for me, if I don't need to change everything, it's easier, right? Change is really tough thing for everybody. Should I do this job for next 5 years, 10 years, or should I try a new thing? If I had to think, that is a great opportunity to think about it. We need to think about what kind of talents I can have for the next 5 years, 10 years. What's the best way to contribute to the world?
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Welcome back to The Close. I'm Scarlett Fu.
And I'm Romain Bostic. As we take a look at where the markets closed out the day here on this Tuesday afternoon, you did have some green on the screen, but that was primarily confined to some of the big cap names. The S&P 500 eking out a gain of about 0.1%, though that was really on the back of a rally that we saw in consumer staples and in real estate. Meanwhile, the bond market continued to show it is still important. A 4-day rally now, pushing yields down once again on the benchmark by about 5 to 6 basis points here as we move closer to what could be an inflection in some of the macro data. Of course, a big jobs report this Friday and a big Fed meeting, Scarlett, next Wednesday.
All right, let's look at some of the day's big movers here. We'll start with Bath & Body Works, losing almost 13% on the day. Its first quarter results did beat, but its second quarter guidance left something to be desired, with sales being flat or down and its EPS missing the consensus. Coinbase, one of many crypto names that did rally today, up 5.5%. Bitcoin's climb above $71,000, lifting the sector overall, but also Bitcoin mining company Core Scientific being acquired by a cloud computer company for about $1 billion as well. And Spotify, I just wanted to mention very quickly here, at a fresh 3-year high, extending yesterday's gains on its plan to hike prices for a second time in 12 months. And Spotify is not the only one exercising pricing power. Warner Brothers Discovery is hiking monthly rates for its Max streaming service.
No.
Just in time. Yeah, that's right, for the second season premiere of House of the Dragon. second. Now, the cost for ad-free Max subscriptions goes up by $1, which sounds more palatable than the percentage increase, up 6.25% for the basic package and up 5% for the premium package. And of course, this is all part of the media industry's effort to now focus on profitability rather than subscriber growth.
Not sure I like the sound of that, Scarlett. All right, let's get back, of course, to some of the breaking news that we just got, including earnings out of CrowdStrike here. The company forecasting revenue for the second quarter that, at least on the surface, seems to beat the average of analyst estimates, but the stock remains on the back foot here in after-hours trading. Mandeep Singh of Bloomberg Intelligence joining us right now to break down, I guess, what we learned here. The numbers on the surface were pretty good, both in the existing quarter and their guidance here. But once again, and it seems to be the narrative this earnings season, it appears that investors wanted to see more.
I mean, in this case, you know, this is a company that's trading at 20 times EV to sales, so clearly a lot higher expectations going into the print, and the buy-side numbers were higher. But like you said, there isn't anything that stands out in terms of a negative. It's more the new ARR growth was 22%. Last quarter, it was 27%, so a sequential decline. But when you look at the endpoint security space, it's consolidating. Yeah. And right now you've got Microsoft, Palo Alto Networks, CrowdStrike, and SentinelOne, which is a small player. So, I mean, last year was 15 companies. Now we are talking about 4, and CrowdStrike really stands out in terms of the consolidator. They have done a lot of acquisitions, and to my mind, you know, if they are light in terms of their guide for next quarter, it doesn't hurt them much. I mean, these sort of valuations go up and down in terms of multiples, so not anything to complain about here.
And you're actually talking the stock up now. That valuation actually went back into the green as you were speaking, sort of oscillating there.
So you mentioned how CrowdStrike is right in the middle of this consolidation story. At what point do regulators get involved because there's a little too much consolidation and not enough competition?
I mean, the good thing with cybersecurity is you don't have large companies like you have, you know, on the software side with Microsoft and SAP and all those guys. CrowdStrike's annual revenue is a $4 billion run rate. The largest cybersecurity company, Palo Alto, is close to a $10 billion run rate. So even if there is consolidation, they could compare themselves to a Microsoft, you know, with $300 billion in revenue. So clearly, from that perspective, there isn't a lot to complain about from a regulator standpoint.
But Microsoft can't go out and buy anyone, can they? Or they could?
I think it'll be very hard if Microsoft were to buy SentinelOne or one of the smaller players. They probably could make a case because the rest of their business is diversified. But I think it'll come under scrutiny because it could affect the other guys like CrowdStrike.
Are you saying, Scarlett, that Microsoft's under a little scrutiny right now?
I'm not saying anything.
It gets to a broader question, too, just about, because we talk so much now about cybersecurity, even more so than we used to, primarily because of the advent of AI and all the things that get baked into that here. And I know there's a lot of, you know, a lot of hype baked into this, but are we going to see a more robust cybersecurity industry as a result of this push into AI, and more importantly, the consumer side of AI?
Absolutely. I mean, when you think about, you know, how the cybersecurity software works, it is a lot of analytics. It is a lot of finding that needle in the haystack to figure out whether it's a breach or not. And that's where, you know, if you have a powerful summary feature or a co-pilot that can really help you summarize all the alerts that, you know, you're looking at as potential vulnerabilities, it could be huge. But we haven't seen these companies call out co-pilot revenue yet. Microsoft is the only one that keeps touting co-pilots. But you want to see a pure play name like CrowdStrike, you know, talk about their co-pilots.
Yeah, absolutely. And I got some thoughts on co-pilot, but we'll talk about that once we get off air. Mandeep Singh over at Bloomberg Intelligence. A closer look there at CrowdStrike. Those shares, Scarlett, kind of oscillating between gains and losses here in after-hour trading. But it gets to a broader question, too, about the refocus on cybersecurity. I mean, the whole nature of AI is that it kind of has to be open, right? The idea is you're pulling in data from all these different places, and that creates a certain security risk, right?
Absolutely. I mean, I just think about any time I have to go online to do anything and how difficult it is to first come up with a username and then a password that I can actually remember, aside from using the same password for every single account.
So it's not foo and then your birthday? Is that? Oh, sorry. Okay, axe that. All right, we do want to continue the conversation. This is an important matter and one that investors really focus in on. Now, 1Password, it's a private company, but it's valued at about $6.8 billion. Its last Series C fundraising included big names, Scarlett Johansson, Justin Timberlake, even Pharrell. And they're potentially seeking to go public this year. Our next guest knows a lot about what's going on in the world of security. He's the CEO of 1Password, Jeff Shiner, joining us here in Studio One. Jeff, great to see you.
Great to see you, and thank you for having me here.
I want to talk about kind of specifically how your product folds into the AI space, particularly on the corporate side. Because when we talk to so many folks about AI, and I'm talking about the CEOs and the other executives, they say that one of their biggest concerns is in order to make these AI programs work in the way they need it to work, they need to keep that door open. They need to allow people into that ecosystem. But they're concerned about who those people are and making sure they can be verified. How does 1Password, if at all, fit into that ecosystem?
Yeah, absolutely. If we look at what AI does, is AI does content very well with context. And if you look at what a big challenge is for humans, for employees at a business, it is everything from phishing to, you know, as you were joking about passwords and are you using Fluffy Cat? And AI is going to make that so much more challenging because whereas today, if we look at what we give to the employee, we'll say, here's your quarterly security training. Don't click on a suspicious link. AI is going to make that link not look suspicious. Yeah. You will need tools like 1Password to sit there and help that human so that they can be productive, use the tools that they need to, but be secure.
In layman's terms, though, how do you do that? How does your technology do that? Because I've seen these phishing, and they've gotten way better. I've got, you know, I used to be able to identify them a mile away, and now it's kind of like you're like, it looks legit.
Yeah, exactly. Yeah. I think to a human, looks very close, looks legit. But to a tool, to a technology, zeros and ones, they match or they don't identically. And so it's very easy for a tool to say, that's not a legitimate link, even though it looks very, very close.
So the future of security, and your company's name is 1Password, are we still going to be using passwords and two-step verification, or are we going to kind of move on to something a little bit more technologically savvy and more advanced than me refreshing my password for the fourth time in a month?
Passkeys. Passkeys will be the answer.
And how's that different from password?
So a passkey is, at the end of the day, it's a public-private key pair, but it's a password chosen by a computer instead of a human. And what makes this so important is that it's the Apples, the Microsofts, the Googles, as well as companies like 1Password that have agreed to adopt passkeys. So it will be something that's convenient for a user, a human to use, but much more secure than the passwords of today.
So it's randomly generated, or?
It's a key. So yes, it will be not only randomly generated, but from an encryption point of view, it's something that even if you gave away accidentally, couldn't be used.
How easy is this? I went down. I mean, I'll admit, I went down the key password with one of your competitors a while ago, and I used it for a few years, and it worked fine. But at some point, it got a little unwieldy, particularly when I'm not at home or I'm on the fly and I need to access something. I mean, how do you sort of address the usability of it? Because at the end of the day, one reason why we all use such simple passwords is because it's simple and it's easy to remember.
I can remember Fluffy Cat.
Yeah, me too. I'm going to remember. I'm going to use that tonight.
You're going to remember Fluffy Cat. Exactly. I think usability is absolutely key. And from a 1Password point of view, we actually started our life as a consumer company. And when you're a consumer company, there's nobody forcing you to use it, right? So you have to be usable. So we sit there and we say, in order for you to use it from a security point of view, we have to make it so that being good by being lazy is the way. If I can look at it and say, I'm going to use this, like day 1, day 2, you know it's keeping you secure. Yeah. But day 3, you're like, man, I just want to tap this thing and get in. Then you'll start to use it.
That's a good point. Take us through what you think security will look like in 5 years' time. Is it going to be frictionless, or is it going to be full of friction? Because sometimes that's the only way you know that it's working.
Exactly. So today, as you say, like, you think of if it's difficult, it must be secure. And a big part of what we've been focusing on is how do we make the easy way the secure way? So from that perspective, whether it's passkeys or now when we look at things like extended access management, how do we allow you to use personal devices or the new SaaS software that's come in from the edges? If we can secure every log into every app on every device, we can allow you to be productive, allow you to use the tools that you want to use, and yet at the same time keep the businesses secure doing so.
All right, good stuff. Jeff Shiner, CEO of 1Password, and that's a regular capital P-A-S-S-W-O-R-D. There's no zeros or fours in there. Kind of mess up the name. Anyone who has to come up with a new password knows what I'm talking about. Coming up, we've got the top 3, where we focus in on some top 3 movers and shakers at the center of the day's big stories. This is The Close.
It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, The China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, The China Show. Weekdays at 9 a.m. Hong Kong time, right here on Bloomberg. Context changes everything. Politics to the world of business. 2 times a day at 1 p.m. and 5 p.m. Eastern Time, hosts Joe Matthew and Keely Lines deliver news, insight, and analysis from and about politics' biggest power players.
The president has been clear that is non-negotiable.
I mean, this is going to be an ugly, ugly year.
Balance of Power, live around the world twice a day at 1 and 5 Eastern. Only on Bloomberg TV and radio. Context changes everything.
Time now for the top 3. Every day at this time, we take a deep dive into the people at the center of some of the day's top stories. And first up is Dave Calhoun, the Boeing CEO. Now, we spoke with the Boeing CEO earlier today about their safety plan.
Any company, especially large-scale companies who are willing to be transparent about everything, they'll suffer less. We presented this comprehensive plan to our regulator. Here's one thing I want to make sure everybody understands. This is our plan. It's not our regulator's plan. If we slow it down and stick to the disciplines that will synchronize this supply chain with the insatiable demand for airplanes and stay disciplined on that, we will put all this in a rearview mirror.
Kind of important to note, of course, that he's the outgoing CEO, so he only has to do this for a little bit longer before it becomes someone else's responsibility.
Absolutely here. And they, of course, Guy also asked them about the succession process, where they are along in that. They still got a ways to go.
Yeah.
Meanwhile, the CEO, at least for right now, is sticking around as Pat Gelsinger. He's the CEO over at Intel. He was on this stage at this big conference out there in Taiwan, and he really took aim at some of his chip competitors, including NVIDIA, saying that Jensen Huang's claim that Intel is sort of behind the times and that its traditional processors really can't pick up steam. He said, that's a fallacy here. He said, look, man, Moore's Law is still alive and well.
Yeah, but I don't see him wearing a leather jacket and signing people's shirts, T-shirts, you know.
Yeah, well, we should point out, too, there was some breaking news just a little while ago on Intel, this involving a fab that they're building over there in Ireland, and that Apollo is going to be taking a 49% equity stake in the joint venture, basically about an $11 billion deal here. So he's trying to make some moves. I'm not sure a wafer factory in Ireland is sort of the AI narrative that investors want to hear, but maybe it provides some financial stability.
Yeah, in the meantime, it's a bit of catch-up for Intel and all the other companies out there, really, to NVIDIA. All right, the last person we're watching is Brian Niccol. He is the CEO of Chipotle, and addressing claims of smaller portions of Chipotle meals on a video on TikTok. And of course, this is something that comes up all the time. People are always talking about shrinkflation and this idea that, you know, the burrito that you want is now getting smaller and smaller each time.
Yeah, and they seem to be addressing this fact that when people are going into these stores, they're filming the servers who are putting their burritos and their bowls together to see if they're putting enough of the ingredients or whatever. He's basically saying, cut that out, you know, don't film our employees. But, you know, who knows whether this is true, but if you look at the internet, and I tend to believe everything on the internet, Scarlet Fu, is that everyone's saying that if you buy a burrito from Chipotle today, it's smaller than the one that maybe you would have gotten, I don't know, 6 months ago or a year ago.
I think that would be fair to say, and it's not just Chipotle. To be fair to Chipotle, it's everyone, right? I mean, when I go and get a pizza, it's a lot smaller than the pizza pan that it would went into.
He could clear all this up. You know how when you go to the airport and you want to bring your carry-on, they have that little thing you have to stick your bag in to make sure that it gets fit through? They need that for the burritos. They have it right on the counter, and if it fits in there and there's still space, you like, dude, unroll that thing, throw some adobo on that thing, and let's go,
or you weigh it, right? When I worked at 31 Flavors, I had to like weigh my scoop each time.
You worked at Baskin Robbins?
Yeah, a long time ago.
Did you? Oh, okay. Got to hear about your high school job.
There we go.
Scarlett, you're like salt of the earth here. All right, when we return, we're going to take a look back, Scarlet Fu. You're old enough to remember this, the advent of the VHS videotape and its 30-year reign in U.S. living rooms. And here's a question before we go to break, Scarlett. What was the last Hollywood film to officially be released on VHS?
Titanic?
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question. Great question.
Best question I get all night.
Bloomberg, top experts, great questions. In a multi-trillion-dollar industry, there's a lot of ground to cover.
Bitcoin ETFs rubbing elbows with the big dogs.
This frenzy has engulfed the entire world.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
Good morning. This is Bloomberg Surveillance.
This is Bloomberg Daybreak Europe.
You're watching The China Show.
This is Bloomberg Technology.
This is the countdown to the close.
Welcome to Balance of Power.
This is Bloomberg.
All right, on this day back in 1977, executives from the Victor Company of Japan, better known as JVC, held a press conference ahead of that year's Consumer Electronics Show in Chicago to introduce to America the VHS videotape and player. Now, VHS had been floating around for a few years, but was only available in Asia, primarily Japan and South Korea. But JVC knew that expanding the technology meant getting U.S. households on board. The video home system, as it was called, was officially introduced under the brand name VidStar in the U.S. and was designed to compete with the Sony Betamax, a proprietary technology that entered the market a couple years prior. While Betamax had better picture quality, VHS offered more features, the tapes could hold twice the content, about 2 hours worth, and the players retailed for around half of the $2,000 price tag found on most Betamax models. But the real key to success for VHS was its open technology standard, which, unlike Betamax, meant film studios and VCR makers could license the technology for free, allowing for wider adoptions. Now, a few months after the press conference, VHS tapes began to show up on U.S. store shelves. The first batch of movies, there were roughly 50 films that a company called Magnetic Video licensed from 20th Century Fox. It included MASH, Patton, and The Sound of Music, and it sparked one of the great consumer product wars of the modern era, a battle that saw Betamax's U.S. market share slip from virtually 100% in 1976 to 25% by 1981 and to barely 5% by 1988. And that was the year Sony finally acknowledged reality and started making VHS recorders itself alongside the Betamax. Eventually, both technologies would succumb to newer and more efficient formats such as the Laserdisc, the DVD, and, of course, internet streaming. By 2003, DVD rentals had already overtaken videotape, and by 2006, movie studios decided to refocus completely on the newer format, and that brings us to our question of the day. What was the last Hollywood film officially released on VHS? The answer? David Cronenberg's action movie, A History of Violence, starring Viggo Mortensen as the owner of a small-town diner whose criminal past comes back to haunt him, a lively romp. And if you're short on cash, maybe check to see, Scarlett, if you still have that videotape in the back of your closet. A used copy sold at auction last year for more than $2,000.
Of that movie in particular, or any, because we have a lot, and I mean, that could be a potential gold mine. I have to tell my dad about that, but that was great. And by the way, we're part of the shrinking group of people who own Betamax because my parents bet on the wrong technology. But anyway, we move from VHS to streaming. It turns out the cost to watch your favorite HBO programs is going up. Warner Brothers Discovery is raising the price of the basic ad-free subscription to its Max streaming service by $1 to $16.99 a month. Joining us for more is Geetha Ranganathan, Bloomberg Intelligence U.S. media analyst. Geetha, good to speak with you. I hope that you guys bet on VHS and not Betamax. But when it comes to Warner Brothers Discovery's price hikes, it turns out it's only on the premium versions or the ad-free versions. The ad-supported versions, those prices do not change, do they?
Yeah, they don't. And this is really timed to perfection, Scarlett. So they do have a major release coming out in the next 10 days or so with House of the Dragon Season 2. That comes out on June 16th. And so they are obviously timing it really well. You have a lot more content also coming on Max later this year. But you're absolutely right. The idea here is to really push those price-sensitive, cost-conscious consumers, who will resist this price change to that ad-supported option, which only costs about $10 a month right now for the Max product.
Is this? Do we have to just get used to this, Geeta? I mean, I know everyone sort of said, okay, these prices were never going to hold. We were going to see increases here. But is this the start of something new?
It absolutely is, Romain. So, Max, of course, just raised prices. We know Peacock is going to be raising its prices by about $2 just before the Olympics. We have Disney that is kind of cracking down on password sharing. Just yesterday, we know Spotify just increased prices for its audio streaming product. So, yes, price increases are now kind of the name of the game. And we know why all of these companies are doing it. I mean, the subscriber growth story is over. They have to somehow show profits, and this is one way to do that.
They have to show profits. So is this $1 increase to $16.99, for instance, going to show profits? Is it going to turn Warner Brothers Discovery into something that can generate profits consistently?
Yeah, it is going to definitely add to the top line and eventually to the bottom line as well. Now, remember, Warner Brothers Discovery, their Max and their Discovery Plus streaming product, it is one of the first streaming products out there, apart from Netflix, to actually be profitable. Last year, so they generated about, again, it was just a modest profit. It was about 100 million, but they were profitable. You compare that to Paramount or Paramount Plus or Peacock, which lost literally billions of dollars on their streaming services. So Warner has kind of made this commitment to profitability. They've made this commitment to cost discipline, and they're executing on it. They've committed, or they've promised about $1 billion in EBITDA for their streaming product in 2025. And this is, this helps them get there.
All right, Geeta Raghunathan over there at Bloomberg Intelligence, the price increases that we're seeing over at Warner Brothers, as well as some of the other streaming giants out there. She didn't mention, though, was Paramount here. Do they have that pricing power? A manual meeting going on right now, ostensibly here about the future of the company's ownership here. But we're also learning, based on Bloomberg reporting, that the company is now considering joint venture options for its streaming services. Of course, Paramount, the parent of CBS and MTV. Richard Greenfield joining us right now. He's a partner and media and technology analyst over at Lightshed Partners here. And Rich, let's start off here with the value proposition of Paramount. We've kind of got two big things happening right now. Of course, how sort of these outside investors find a way to mollify Sherry Redstone and get a sale of this company, but really just about where Paramount lands in the streaming space right now, a very crowded streaming space.
Well, look, I think a lot depends on who buys Paramount. I mean, I think if Paramount is not acquired by Skydance, where there's clearly friction has developed over the course of the last few days, and it's not clear that a transaction actually gets over the goal line. I think if Paramount doesn't get a transaction done, Paramount Plus, which you have up on the screen, is dead man walking. Like, I don't think it survives the end of this calendar year. It gets joint ventured, scaled back. Like, it will not look like it looks today. This thing is bleeding cash, and Paramount needs to stem the bleeding and improve its profitability yesterday. So I think the only way Paramount Plus survives in its current form is if Skydance buys Paramount. And I think their plan is actually to invest very aggressively. I think Skydance wants to build another Netflix-like competitor. They want to gun Paramount Plus with substantial capital that I'm not sure investors are fully aware of, but I do think that's the plan.
I am curious, though. There was a lot of discussion as to why they even launched this. The idea that, this isn't just specific to Paramount, but with a lot of these streaming services, the idea that some of them were probably in a better financial position by just licensing their content to Netflix and, maybe Hulu or something else like that.
Paramount Plus was a terrible decision. It's why we wrote Bob Bakish, the former CEO of Paramount, should have been fired. He was fired. I think the honest answer is everybody who thought they could be Netflix, they can't. Technology, scale, this was a bad idea from the start.
Do you think this is fixable?
It is not fixable without a massive investment in both, because this is not just about adding more programming. This is about retooling it, really building on the engineering side of this, bringing in best-in-class talent so that the interface, UI, and the data and analytics and how it serves content, this is a lightly used service. Nobody who is watching Bloomberg right now is rushing to go stream Paramount Plus tonight. This is something where every once in a while there's a show you want to watch and you watch it for 40 minutes and then you go turn on Netflix or you go turn on YouTube. Like, people are not binging hours and hours a day of Paramount Plus content. And so in order to build that type of juggernaut is going to take massive investment in technology, programming, and marketing. That's what I think the plan would be under Skydance.
What happened to the Apollo and Sony offer? Is that completely dead on arrival? Is there a way to resuscitate that, or should that not be part of the conversation anymore?
They're still, I mean, look, the special committee at Paramount would still like Sony to submit an offer. I think the problem is you've got, you know, foreign ownership issues to deal with, broadcast rights transfers that would, you know, be involved there. You've seen how sort of Tegna and Standard General got into trouble with all of that earlier this year with the or last year with the FCC. Like, if you're National Amusements and Redstone and you want cash, the last thing you want to do is get involved in a 12 or 18 month, because remember, we don't even know who's going to be president, right? So the whole administration of who's reviewing these deals could change in 5 months. So who knows how long it takes to approve a deal. Imagine you strike a deal, you spend the next 15, 18 months, and then you get told no.
Yeah, no.
Where will Paramount be then? Like, I just think it's too risky. No breakup fee can make up for waiting 15 to 18 months to only be told no.
Especially if this is a business that, as you said, needs to improve profitability yesterday. They really can't afford to wait at all. So given all of that, what do Paramount shareholders want? Because none of these options are particularly great. But they bought into the stock knowing that Shari Redstone controls the voting shares. So what is their best case scenario here?
It's a great question, and I don't mean to be stunned by it, but because it is the right question to ask. I mean, look, in the Skydance story, you're getting 40% of your current investment in cash at 15, but you don't get it for a year. And then the rest of your investment is diluted down. And I guess you hope that over multiple years, they can build a better company, certainly better than what the current team has done. You know, I think the alternatives could be, you know, Redstone may just sell this to somebody else, sell her stake, the National Amusement stake, to somebody else. And then you have no idea what the strategic plan is. Maybe it's to cut costs, close Paramount Plus, sell off a lot of the assets. Like, I think, you know, it's not clear. I think it's very hard to make an investment case in Paramount right now because you literally have no idea which way is up. Like, I'm surprised the stock is where it's at. Given the time to close and the risk factors that are being discussed, it's surprising the stock is held in where it is. It doesn't make a lot of sense to us currently.
Well, you know, one day it's going to be turned into a streaming series that, you know, we'll all be watching because the drama is just, you can't make it up, right?
What would the title be? What would the title be? We need a title. Let's do it right here.
Tumbling from the top, maybe something like that. I don't know. We'll work on that. Richard, thank you so much. Rich Greenfield over at Lightshed Partners with the latest on Paramount. What would the good title be on the Paramount drama?
Just get it done. I don't know. I mean, look, we all know what the holdup is right now. I mean, this is really Shari Redstone's decision, and she's got to make one. Or maybe she doesn't. Maybe she doesn't care. But I mean, at some point, if investors are going to get what they want,
she wants to cash out.
No, she's going to give them her money one way or the other. I guarantee you that.
Yeah,
she is a Redstone after all.
Just depends on how long it takes and what's survived, what's going to survive at the end of all that. All right, let's take a look at how markets close at the end of this trading day. The S&P 500 closing up 0.2%, the 10-year yield moving down. So you had a bit of a rally in stocks, if you can call it that, a turnaround in the afternoon at least. And the gains in bonds continues. The declines in oil deepen, now down 1.5% to 73.11 for WTI, a fresh 4-month low, and Bitcoin continues to gain. This is the close.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks 24 hours a day. Bloomberg, context changes everything.
Arch has laid plenty of groundwork for future revenue, but for now, Mark Messler's most pressing challenge as CFO is conserving capital.
You have to have the short-term discipline to sort of circle the wagons around cash. I mean, cash is oxygen. I know where every ounce of cash is going, and but we also have to be nimble around that as well because things change by the day.
Archer went public in 2021 in a reverse merger with a SPAC, Ken Moelis's Atlas Crest Investments. Through August 2023, the company raised over $1 billion from investors including Stellantis, Boeing, United Airlines, and Cathie Wood's ARK Investment Management.
Does that ARK investment open doors for you to bring in different kinds of institutional money going forward?
It does. I mean, I think there's a lot of credibility that comes in with an investor like ARK. As I think about, my top targeted list of investors over the next 2 to 3 years, an investment like that gives us some credibility and gives us a little bit of staying power as I go in and talk to other investors.
With the SPAC pipe now closed, Archer's facing a new phase of raising capital.
I know the folks who aren't willing to invest right now may have large pockets of investment in the future. So I want to be in front of them. I'm wanting to show them progress. I want to create credibility with them that we are marching towards our goals of commercialization.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything.
This is Bloomberg.
I'm moving past Republican obstruction and using the executive authorities available to me as president to do what I can on my own to address the border. Frankly, I would have preferred to address this issue through bipartisan legislation because that's the only way to actually get the kind of system we have now that's broken, fixed, to hire more Border Patrol agents, more asylum officers, more judges. But Republicans have left me no choice.
That was President Biden speaking earlier after unveiling a series of measures to curb asylum claims and head off a surge of border crossings this summer. Joining us now is Joe Matthew, co-host of Bloomberg's Balance of Power. And of course, this comes before the November election. Can you walk us through very quickly what the new measures entail and how long they'll be in place?
Yeah, well, there are a couple of steps here, and they're going to sound pretty familiar because, as the president just referred, these concepts, these ideas that he's now moving through executive action were born from that whole debate that led us to the border compromise in the Senate that went nowhere. Remember, it was DOA in the House, never even got a vote in the Senate, and here we are today. This essentially would give the president the authority to shut down the border when illegal crossings top 2,500 in a day. It also tightens the definition of asylum and would prevent those who cross illegally from receiving asylum. This is something that's been very controversial in the past, and it's frankly making both sides of the aisle upset here. We already know that Republicans were upset with Joe Biden when it came to the border. Brian Stile, a Republican from Wisconsin, was on with us earlier today. He described it as woefully insufficient. But Pramila Jayapal, who is the leader of the Progressive Democratic Caucus in the House, called it very disappointing. So the president has once again found an issue that upsets both sides of the political spectrum.
Yeah, quite a feat here for a politician, Joe, that's running for re-election. I am curious here as to, he tried to sort of make this connection to, I guess, the failed effort in Congress earlier this year, I believe, to actually pass that bipartisan legislation here. Does the executive order that he put out today, does it have any real elements from what was originally in that legislation?
In terms of that authority to shut down the border and the cap on the number of illegal crossings per day, that is what sounds familiar. But the president says it himself in a statement. This came before his address today. To be clear, he writes, this cannot achieve the same results as congressional action. It does not provide the critical personnel or funding needed to further secure our border. Congress still must act. You're hearing people refer to this as a Band-Aid, and you can figure out why.
But this gets to the point, too, Joe, right? I mean, this is kind of a campaign issue, right? And he basically can now at least go out on the campaign trail and say, I did something. Now, people may hate it, but he can at least say that, even if it's not really true.
Well, that's right, Romaine, and it's not lost on us that that's why Tom Suozzi was standing there, the Democratic congressman from New York, newly re-elected, on the issue of the border. The way he handled that was seen as a bit of a roadmap. Kathy Hochul, the governor, was in the East Room today as well, as Democrats try to make the point that they're doing what they can here. And as the president says, Donald Trump and the Republican conference on Capitol Hill kept them from doing it. Whether this makes a difference in the numbers, it probably will lower border crossings, and they have been coming down a bit over the past couple of months. But, speaking of politics and elections, Romaine, the timing here is not a mistake for the election here, but it also comes a day after we saw results in the elections in Mexico, and the White House was waiting for that to transpire, too.
No, that's a really good point. Thank you for bringing that up. Of course, there's going to be challenges to these executive orders. Do we expect anything from the president's team, his own team, the Democratic Party?
In terms of challenges legally, that's what I would expect. And we've seen this movie before. This is the same element that Donald Trump used, Section 212F, that brings us to the immigration code here in the United States. That's the authority that the president is pointing to. It didn't work for Donald Trump a couple of times in court, and it may not for this president either. Getting back to what Romaine said, this is Joe Biden's chance to say, at least I tried.
All right, Joe Matthew, you can catch him in full along with his co-host Kelly Lyons on Balance of Power. That comes up at the top of the hour every day right here at Bloomberg. Meanwhile, we still got a lot more to cover here on The Close, setting you up for some of the big market-moving events over the next 24 hours. It's our What to Watch segment, and it's up next. This is Bloomberg.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television. The top names in tech are on Bloomberg.
I don't like anthropomorphizing AI. I sort of believe it's a tool. It is got intelligence, if you want to give it that as, moniker, but it's not the same intelligence that I have.
This industry of producing intelligence is one of the greatest opportunities I've ever seen. The world has very few experts in C++ and C. But the world has many people who knows how to converse and ask somebody for help. Instead of instruction-driven computing, it's now intention-driven computing.
This AI opportunity is really tremendous. You have an ecosystem of companies coming together along with all these incredible innovations. It's causing a new industrial revolution.
This is a tsunami, Ed. This is a tsunami of change. And only the smart ones are going to recognize I have to plant the flag now.
Nobody covers technology like Bloomberg. Context changes everything. The top names in business are on Bloomberg.
They're kind of predicting a soft landing, and you see that in both stock prices, which are kind of high, credit spreads, which are kind of low, markets, which are kind of wide open. That's all good. Doesn't tell you what the future is going to be. But I think there are a lot of inflationary forces in front of us that, may keep it a little bit higher than people expect. My view is whatever the world is pricing in for a soft landing, I think it's probably half that. I think the chance of something going wrong is higher than people think.
Bloomberg. Context changes everything.
Good morning from our world headquarters in New York. I'm Manus Krennic.
And I'm Danny Berger. Let's set your agenda.
Bloomberg Brief delivers the market news, data, and analysis you need live every weekday at 5 a.m. Eastern. Bloomberg. Context changes everything.
People ask me all the time, what is the key to being a really good investor? And I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
Go figure out how to get exposure to hyperscalers, which we think will be the biggest winner in what AI and data storage will do for the world.
All right, let's set you up for what to watch. Investors keep an eye on earnings out of Lululemon before the bell tomorrow. Poonam Goyal, Bloomberg Intelligence Senior U.S. Retail Analyst, joining us right now to talk about what is, at least for right now, one of the worst performing stocks this year in the S&P 500. Are the earnings tomorrow going to turn around sentiment at all, Poonam?
I think, the focus is on the slowing growth, right? So after the fourth quarter, when they were able to post double-digit gains after very strong increases the year prior, we thought that momentum would continue into the first quarter, but it hasn't. It's slowing. Growth is expected to be in the high single digits, maybe at best 10%, and that's a material deceleration from what we saw in 2023. So what could turn the sentiment around is if 1Q, they report it's better than expected, of course, which we think it'll be in line, or if the 2Q guidance is better. So we do think that Lululemon has added innovation into their stores with spring colors. And if that has the ability to drive up demand and they issue more positive guidance, that could possibly get investors more excited.
I go into Lululemon all the time and I'm ready to spend money, but I don't actually ever spend any money because it's all versions of the same thing that they always sell. One thing I've noticed though is they have sneakers. They have sneakers on display, and this is kind of a new area for them. Is that a growth driver for Lululemon?
It's a growth driver, but it's not as big as a growth driver as men's and digital is. So if you think about the growth story from Lululemon from this point onward, it's really about scaling the men's business as well as the digital business. We do think that shoes is an incremental opportunity, but we think it'll take some years, if that, for Lululemon to really master the trade, because it's not an area where they have core competency in.
Yeah, I'm on the website right now, Poon. I'm looking at these shoes and woof. I guess they might appeal to somebody. Poonam Goyal over at Bloomberg Intelligence, a nice preview of Lululemon, third worst performer in the S&P 500. Expectations high heading into that earnings report tomorrow. A lot of other things out there, Scarlett, that could potentially move the market, including a central bank decision.
Yeah, well, let's focus on the one in North America because there's one in Poland too. The Bank of Canada is ready to pivot. The question is when? Does it do it tomorrow or does it wait until late July? And one thing is that it perhaps was a little late to the party when it decided to raise rates. So it depends on how cautious or how bold they're willing to be right now.
One of the more important things that I'm keeping an eye on tomorrow comes at about 10 a.m. here in New York time, and that's the ISM services data here in the U.S. Now, we had that manufacturing data earlier this week. We kind of knew that was going to be soft. I don't know what their expectations are right now for services.
Yeah, and especially within the prices paid component will be critical because we know that the cost for services has been fairly sticky, and that's something the Fed is looking at very carefully. Right now, it is projected to ease a bit to 59, still above that 50 expansion line from 59.2. But this will be really critical and one of the last data points before the Fed meets next week.
We're sending another rocket ship up into space. This time it's the Boeing Starliner here. This is, I believe, going to be a crewed test mission here. Remember, this had been delayed for some weather and some other issues, but now set to take off 10:52 a.m. Eastern time tomorrow.
Yeah, the first mission carrying astronauts to the International Space Station since NASA awarded contracts in 2014 to Boeing and SpaceX to do the job. But we know there have been a lot of delays, a lot of missteps, and cross your fingers it's going to happen.
And we get more earnings. They continue to roll in. Of course, we talked about those Lululemon earnings coming before the bell, but we get Dollar Tree Campbell's Soup as well.
Campbell's Soup. When was the last time you actually opened a can of soup?
I never.
Elementary school, I think.
Yeah, I can't remember there. Five Below and Victoria's Secret. Talk about a comeback story that hasn't happened.
Yeah.
Of course, we will have full coverage of all those earnings right here on Bloomberg. Join us tomorrow on The Close and stick around. All your politics coverage coming up right now on Balance of Power. This is Bloomberg.
You are also an owner, I should have pointed out, of three major sports teams.
That's right.
Right? And you're the first woman, as I understand it, first woman to own three major, have a stake in three major sports teams. Is that right?
Yes, and we'll say African American.
You were approached by the owner then of the Washington Wizards and the Washington Caps about maybe buying the Washington Mystics, which is the women's basketball team. And what did you say?
Well, first of all, it was Abe Pollin. He did come to me and Susan O'Malley, and they said, Abe Pollin says, look, I want you to be the face of the Washington Mystics. And I said, what do you mean be the face of? He says, I want you to buy this team. His health was failing. And I have to tell you, and a lot of women can understand this, we never get these opportunities. So that was the first thing that struck me, and I was flattered. I was really flattered. I said, well, Abe, what are the financials on this? And he handed them to me. He says, well, they're not making money. But I was still intrigued about team ownership.
We'll have to build a portfolio of interventions. Lifestyle will also play into for some of them, and I think we can help many patients get down to a weight that they can maintain and live the life they want to live and avoid many comorbidities for the healthcare systems.
Fixed Income Fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
From the world of politics to the world of business, this is Balance of Power. Live from Washington, D.C.
From Bloomberg's Washington, D.C. studios to our TV and radio audiences worldwide, welcome to Balance of Power. Alongside Joe Matthew, I'm Kaylee Lyons.
President Biden issues an executive order to shut down the southern border to some asylum seekers, a move immediately criticized on both sides of the aisle. We'll get reaction from Capitol Hill with Republican Congresswoman Nicole Malliotakis.
Biden today also denying Israeli Prime Minister Netanyahu is playing politics with the war in Gaza as Hamas joins Israel in balking over a ceasefire agreement.
And India's election delivers shock results as Prime Minister Modi's party loses its majority in parliament, even as he vows to remain in power. We'll have details and potential implications for U.S.-India relations. Kaylee, here we are again. Elections at issue on both sides of the globe. And a lot of folks are pointing to our own elections here as a motivator for Joe Biden to make some big news today.
Well, of course, he is seeking a second term in office, and he is doing so knowing that he has a few weaknesses, one being the economy, the other being the issue of the border. And he took aim at that issue with an executive order earlier today.
Today, I'm announcing actions to bar migrants who cross our southern border unlawfully from receiving asylum. Migrants will be restricted from receiving asylum at our southern border unless they seek it after entering through an established lawful process. And those who seek to come to the United States legally, for example, by making an appointment and coming to a port of entry, asylum will still be available to them.
Let's bring in Bloomberg's Akela Gardner, who covers the White House for us. Akela, it's great to have you back at the table. This is big news. Anything involving the border, we know one of the most important issues for voters in this campaign. But this president pointed to the last president, Donald Trump, as a big reason why he was here today.
Yeah, this has been fascinating to watch because this is really the result of an evolution for President Biden over many months. We saw him run for office really criticizing some of the language that we saw Donald Trump using, and now slowly start to see him to echo some of that language and rhetoric we saw from Donald Trump. Biden started talking about shutting down the border, and that's exactly what we saw him do today here. He's basically lowering that threshold for the amount of people who can enter every day to 2,500, and that's pretty significant because just last month we saw more than 4,000 people encountering the border open every day. So that is going to be a huge reduction here. And it will only begin to open again once thresholds are back down to 1,500 for at least a week. So we could see the border closed for potentially days or weeks under this new order.
And of course, not everyone is thrilled with this new order, but it depends on who you ask. House Republicans, leadership, in fact, in a statement, calls it nothing more than a desperate political stunt to try and stabilize his plummeting poll numbers. Well, you can find some Democrats, progressives specifically, who suggest that Biden is defying American values with this action. Who actually is happy with this?
That's a great question, Kayla. You do have some moderates, people in swing states, who are applauding this decision today. And that is, of course, because this is a political vulnerability for Democrats, as it is for Republicans as well. But what you're seeing here now is with progressives specifically, is they are not happy specifically that Biden has not pursued legal pathways for people, for dreamers, for DACA recipients. That is something that they want, quote unquote, positive actions or affirmative actions for migrants. And that is something they have criticized him over and over again when it comes to regulations that he's pursued in the executive branch. And of course, that is not in the executive order today.
Yeah. Well, he's also pointing at the Capitol, at Congress, knowing there was a deal struck in the Senate that we've talked for hours collectively about here on this program. He blamed Donald Trump for that never seeing the light of day. But we also have to acknowledge that Joe Biden today said this is not enough, that Congress still needs to act. The funding for the border isn't in place, and this will eventually need to be a legislative solution.
And I think especially because this could be struck down in court. We saw something similar happen under Donald Trump. We have ACLU saying that they're reviewing this action and they have serious concerns. So we could be in a position where back at square one, where we have no major reforms here. So I think some of those criticisms have some weight here because, again, we might be back to square one.
Well, and considering the back to square one nature of it, of course, as you were drawing the comparison with Donald Trump, Trump tried to do a lot when it came to the border during his administration as well and had some challenges in court. How quickly do we expect the lawsuits could come, Michaela?
They could come any day now, especially because this is going into effect at midnight.
All right.
Yeah.
Bloomberg's Akayla Gardner, who covers the White House for us. Thank you so much. Now, after President Biden's remarks on the executive order earlier today, he also was asked about the Middle East, specifically about how Israeli Prime Minister Benjamin Netanyahu is handling the war. And he answered that question as he walked out of the room.
Is Prime Minister Netanyahu playing politics with the war? I don't think so. He's trying to work out a serious problem.
Those comments arguably running counter to an interview he gave to Time magazine, where he said that there's every reason for people to assume Netanyahu is prolonging the war for political reasons. Let's go now to Bloomberg's Dan Flatley, who covers national security for us. So, Dan, you could arguably see how one point counters the other, but it also just speaks to the very fraught nature of not just the Biden-Netanyahu relationship, but U.S.-Israel relationship right now.
Yeah, certainly this is not an easy time for U.S.-Israel relations in the macro sense, but also as this deal sort of comes together and seems to fall apart a bit. If we go back to Friday afternoon, it seemed like there was a ceasefire deal potentially imminent. That, of course, did not come to fruition, and so now here we are, Tuesday of the following week, where all sides are still trying to work something out, but the U.S. and Israeli positions seem to be getting farther apart, at least in terms of rhetoric, although you did see President Biden give Netanyahu some cover with his comment today. So.
We also saw headlines today that Israel was preparing to accept a deal. Hamas said that it would not accept a deal without a permanent ceasefire. Does that remain the sticking point, something shorter term versus permanently laying down their arms?
Well, I don't think that Israel wants to take anything off the table in terms of eradicating Hamas, is the term that they've used, or continuing to pursue their military operations in Gaza. They don't want to go necessarily as far as a permanent ceasefire yet, because that would kind of take that option off the table. And obviously from Hamas's perspective and from the perspective of the folks in Gaza, they would like to see a permanent ceasefire because it would mean on top of some other things, a easing of the humanitarian situation there potentially. But it's a very difficult political position, including here in the U.S., for Biden to thread that needle, because he's getting criticism not just from the right, but also from the left on this, just like with immigration, as Akayla said.
Yeah, very hard to win on these issues. We did hear from the State Department earlier today, specifically the spokesman, Matthew Miller, who spoke about Israel and whether or not it was going to accept the deal that Biden laid out last week. This is what he said.
We are convinced it is the case that Israel is ready to implement this deal. As I said, it's their proposal put forward by the government, and they have maintained to us they are ready to implement it. Doesn't mean there aren't voices inside Israel, and voices even inside the Israeli government are opposed to it. But the government, speaking on behalf of the government, has said they support this proposal and are ready to stand behind that, and we take them at their word.
It begs the question, Dan, as to whether maybe that Israel is prepared to implement phase 1, but it's phase 2 where things get really sticky. If there isn't agreement on what phase 2 actually looks like on the part of Israel and Hamas, will phase 1 ever happen in the form of a temporary agreement?
Well, certainly the devil is always in the details. And I think here, again, you sort of see Netanyahu trying to preserve some maneuvering room for himself with his suggestion that this deal is not yet ripe. And the U.S. still trying to preserve the pressure that it has exerted on Israel to bring this deal to fruition, to have a ceasefire here with the comments that the State Department spokesperson made. So essentially all sides are trying to get to yes here, but the incentives are very different. Biden has his domestic political incentives, certainly international incentive as well. Israel has theirs, Netanyahu has his, and Hamas has theirs. And so we just don't have a meeting of the minds yet. But we're closer now than we were several weeks ago, so that is something.
There's been an argument over the timing of Benjamin Netanyahu speaking to Congress as he was invited by the Speaker of the House. This lands on a date in which the president's out of the country. A Jewish holiday conflicts with the date. Do we have an update on whether this may or may not happen?
No update as of yet, but certainly in the coming days. I mean, just today the House recently voted for sanctions on the International Criminal Court in reaction to some action that court took against Netanyahu. So that is obviously laying the groundwork for him to come here, speak to both chambers of Congress, and make his case. So that's something that we'll be looking forward to.
It'll be a big deal if he makes it happen. Bloomberg's Dan Flatley, thank you so much for the great reporting. Coming up, we'll have reaction to President Biden's border executive action that we've been talking about with New York Congresswoman Nicole Malliotakis. It's next on Balance of Power on Bloomberg TV and radio.
In tech are on Bloomberg.
I don't like anthropomorphizing AI. I sort of believe it's a tool. It is got intelligence, if you want to give it that as moniker, but it's not the same intelligence that I have.
This industry of producing intelligence is one of the greatest opportunities I've ever seen. The world has very few experts in C++ and C. But the world has many people who knows how to converse and ask somebody for help. Instead of instruction-driven computing, it's now intention-driven computing.
You know, this AI opportunity is really tremendous. You have an ecosystem of companies coming together along with all these incredible innovations. It's causing a new industrial revolution.
This is a tsunami, Ed. This is a tsunami of change. And only the smart ones are going to recognize I have to plant the flag now.
Nobody covers technology like Bloomberg. Context changes everything. The top names at the Fed are on Bloomberg.
The way I look at it is, we have a restrictive monetary policy in place. It has shown up in terms of moderating the labor markets. They're becoming better balanced.
I do think that our new steady state is likely to be higher than what people have known over the last decade. I think that it will take quite a while for us to get all the way to 2%, but I do think we'll get there.
Nobody covers the Fed like Bloomberg. Context changes everything.
There's
there's nothing wrong with the president taking this executive action, but I think it's important for the American people to realize that this is woefully insufficient to address the crisis that he has created at the U.S.-Mexico border. The crisis is being felt not just in communities along the border, but being felt in my home state of Wisconsin and across the country.
That was Republican Congressman Brian Stile of Wisconsin talking with us earlier today on Bloomberg TV and radio, sharing his thoughts on President Biden's executive order on border security that we've been talking about. He introduced the EO today, and joining us now is Congresswoman Nicole Malliotakis, the Republican from New York, spoke passionately about the border last time she was with us, and back with us today. Congresswoman, welcome back to Bloomberg. I saw your colleague, Congressman Tom Suozzi, in the East Room with the president today. Your governor, Kathy Hochul, was there. Can Joe Biden take the border off the table politically in New York?
No, I mean, this executive order doesn't really address the root of the problem. I mean, he passed 60 executive orders when he first came into office that completely dismantled our border, and that is what really created this crisis that we're seeing across America, and particularly in New York City, that we didn't see under any other Republican or Democrat president in our nation's history. And so this is really, it is something, but it's certainly not what we need. We passed a measure in the House, as you know, over a year ago. The Senate won't take up our bill, and even ones that we passed on a bipartisan basis, the Senate won't take up any of those bills for some reason, at least allow for a vote to take place. What I would say is this is certainly political. It is certainly the president's attempt, because he sees the poll numbers. He sees that this is the top issue on voters' minds right now, because they're seeing things happening like what happened yesterday in New York City, where 2 NYPD officers were shot by someone who was here illegally, and he came under the president's program. And to make matters worse, when you dig more into this individual's case, he went to a Chicago immigration judge, and his case was basically dismissed. It was closed. So he's in the country, no status. He's here now illegally, right? He's committing crimes. He was a suspect in a string of robberies across New York City, and then he shoots 2 of our police officers. So as long as we're going to continue to allow individuals who are criminals to enter our country, which he's going to do because there's no real method of vetting them. You need to completely secure our borders, and the section that he's referring to in this executive order, which is Section 212F of the Immigration Naturalization Act, in that it gives him the authority to shut down the border completely. Not to mention, he can undo the 60 executive orders that he put in place that created this crisis. So this is, unfortunately, window dressing, but we're going to continue to fight to ensure that, we actually get our border secure. Whether that means we have to elect a new president, that's fine, or whether we got to win the Senate back, but we have to get it done.
Okay.
And one last thing, I just want to say to the American people, when you get a poll, when somebody calls you to take a poll, make sure you continue to tell them that the border is the #1 issue, because clearly it's having an impact, and that is exactly what today is about, just responding to those polls.
Well, Congresswoman, the president today in his remarks noted that while he is willing in this case to take executive action, that the kind of securing of the border you speak of can only really be accomplished with congressional action. And I know you just alluded to their H.R. 2, the House-passed bill, yet that passed with not a single Democratic vote. It was not bipartisan. Is it time to start from scratch and actually work on a new bipartisan solution?
Again, the president took 60 executive actions that destroyed our border.
But I'm asking what you and your colleagues can do.
No, I understand, but for the president to say that is a lie, because he's the one who took 60 executive actions to undo the border, and he can undo it today if he wants to. He can fix it today if he wants to via executive order, the same way he broke it. Now, with our legislation, we did have another bipartisan bill that had tied the foreign aid that was passed. And then, unfortunately, leadership decided to just do the foreign aid without the border security provisions. I had a real problem with that, which is why I didn't support the entire foreign aid package, just bits of it. But what I'll say is, the other thing is, we have other bills that we passed that at least would address the issues of people who are here committing crimes. Those passed with bipartisan support. Why can't we get Chuck Schumer to at least take those up if that's what we can agree on at the moment? And the other thing is, in New York City, why is this still a problem? Because New York City won't cooperate with Immigration and Customs Enforcement. They passed a bill in the City Council under Bill de Blasio that kicked ICE out of Rikers Island, that prohibited NYPD from cooperating with ICE to deport individuals. So what you have right now in New York City is a situation where people are being arrested for crimes and they're being released back onto the street instead of being turned over for deportation. So you don't have cooperation to get the existing individuals who are here committing crimes out of the country. So I think it's a real combination of things. I'm happy to work in a bipartisan manner. I've showed that as a member of the Problem Solvers Caucus, and we did come up with a solution that addressed our support for our allies who are in war right now, coupled with real border security measures. Some of the provisions that were in H.R. 2, we had Democratic sponsors of that bill. But unfortunately, again, leadership did not decide to go with that on both sides, the Senate and the House, unfortunately, and we are where we are.
Well, there's a lot to talk about, Congresswoman, while you're with us here, and based on your view from the Select Subcommittee on the coronavirus pandemic. You spent some time asking tough questions of Anthony Fauci yesterday, getting into some of his professional actions during the COVID pandemic. I'd love for our viewers and listeners to get a sense of that, and we'll ask you about that. Here's how this went with Dr. Fauci yesterday.
Dr. Fauci, did you delete any emails or records related to the Wuhan lab or the origins of the virus?
No, I did not.
Okay. Dr. Morins said in a May 2021 email, he indicated that he was connecting people to you in a, quote, secret back channel. Do you know what he was referring to?
I don't have any idea what he's talking about. There is no back channel at NIAID.
Congresswoman, I wonder what the end game is here with more than one crisis burning. We just spent 5 minutes talking about one at the border. Will this hearing lead to legislation? Is there a bill that you're working on that will come from relitigating COVID?
Well, yeah, I think that, first of all, in order for us to prevent the next pandemic, we need to know the origins of this pandemic. And unfortunately, leadership at NIH and Dr. Fauci have spent so much time suppressing the lab leak theory, number one. Now he's saying it is potentially from the lab leak. That is actually what the FBI and the Department of Energy has indicated as well from their investigations. We passed legislation to declassify all the documents. The president refuses to do it. He refuses to comply with federal law despite it passing unanimously out of the House and the Senate. So we're trying to get to the bottom of where what the origins and the role that NIH may have played or support of taxpayer money. We know that Department of State money, Department of Defense money, USAID, NIH money all made its way to this Wuhan lab via EcoHealth. EcoHealth, we've gotten a result there. They are now debarred. They are prohibited from receiving any more federal grants. That is a result of the work of our subcommittee. And the issue that the clip that you just played was interesting because you have the senior advisor to Dr. Fauci saying that he had this secret back channel that Dr. Fauci was using his personal Gmail to communicate on NIH business to avoid freedom of information laws. And then you have Dr. Fauci saying that that's not true, that he doesn't even know what his senior advisor is talking about. So someone is lying to the committee, which is perjury. And destruction of government records is an offense as well. It's a criminal offense as well. So we got to get to the bottom of it. The biggest issue with this committee is that the stonewalling, the difficulty in getting this information. But I'm working on a number of pieces of legislation as it relates to royalties that NIH scientists receive. As you know, $710 million in royalties they received, when that money should be going back to the taxpayers if it's a taxpayer that's investing in these experiments.
All right, Republican Congresswoman Nicole Malliotakis, thank you so much for joining us live from Capitol Hill this evening. Coming up, India's Prime Minister declares victory for his alliance despite his party losing 60 parliamentary seats compared to the 2019 election. We'll look into what this means for U.S.-India relations next on Balance of Power on Bloomberg TV and radio.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
We'll have to build a portfolio of interventions. Lifestyle will also play into for some of them, and I think we can help many patients get down to a weight that they can maintain and live the life they want to live and avoid many comorbidities for the healthcare systems.
This is Balance of Power on Bloomberg TV and radio. Indian Prime Minister Narendra Modi vowing today to stay in office despite his party's shock loss of the majority in the country's parliament. India's stocks had their worst day in 4 years as a result of the surprising figures from this election. With more now, Bloomberg News senior editor Bobby Ghosh is joining us from New York. So, Bobby, can you help diagnose why exactly this happened and how much this weakens Modi?
Well, it certainly weakens Modi because he set the bar for himself and his party too high. He's expected to win 400 seats, and it looks like they and the alliance are barely going to scrape to the 272 seat margin that they need to form a government. So that's a big delta between the expectation they set and the actual achievement. They're also down substantially from the last two elections that they won. I think what we're seeing here is that for a lot of Indians, the great sort of shining Indian economy that the Modi government has been promoting at home and abroad, we're learning that for a lot of Indians, that shining economy doesn't really touch them. India may have produced more billionaires in the last 20 years, and you know, there's a sense that India's moment in the global economic scene has come. But for 800 million Indians, they still depend on the dole. They still depend on handouts, and they are not. They don't feel like they're participating. There's not enough jobs. Youth unemployment figures are staggering for a country that is very young. So there's a lot of dissatisfaction that's been bubbling beneath the surface. The very high octane campaigning strategy of the Modi government tended to sort of cover up some of these sort of beneath the surface dissatisfactions, but when it came to actual election day or several election days, because this was conducted over several weeks, when people actually went to the polls, they were voting with their pocketbook rather than their emotions, and that's why we've seen the outcome we have.
All right, Bobby, it's great to have you back with us. Bloomberg's Bobby Ghosh, we thank you. Kaylee, it's really fascinating to think about this and knowing that the Prime Minister was here quite recently at the White House, and there was a great story the administration helped him tell about foreign investment as an alternative to China. And you wonder if the results would do anything to change that. I think maybe not.
Yeah, of course, the Prime Minister would likely argue that it's status quo. He's still going to pursue the same things because he can form this alliance, but certainly it will be more difficult than it would have been had he been able to maintain that parliamentary majority.
You said it. Thanks to Bobby Ghosh. Coming up, we'll look at primary day in New Jersey and Montana and the lingering Nikki Haley effect. It's next on Bloomberg TV and radio.
The shape of the On athletic shoe is unique. It can't be mistaken for any other brand. The structure of On's C-suite is just as distinctive, starting at the top with a pair of CEOs.
What we realized very early on is if you're adding different capabilities to each other and you do that as equals, then this leads to better outcomes.
Mark Maurer joined On as Chief Operating Officer in March 2013. Martin Hoffmann arrived as CFO that July. In 2021, they jointly assumed the CEO role.
We are a brand that needs to be excellent in designing product, in innovating product, but also in shipping millions of parcels from A to B in the most efficient way. So we need to have very different mindsets and very diverse people. Mark has different strengths, I have different strengths, and if you take us together, you just get more.
Companies with co-CEOs are rare, but On's configuration is even more unusual. Martin Hoffmann also holds the CFO position. He says his two jobs complement each other.
I actually feel the CFO makes you a better CEO and the CEO makes you a better CFO. Understanding what you build as a CEO helps you to understand your numbers. Understanding the numbers helps you what are the rights to build.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
This is Bloomberg.
New Jersey is one of the last vestiges of machine politics still in the country.
Is it anymore?
And there is this way in which party leaders can manipulate a ballot to be able to give their endorsed candidates preferential placement. I am trying to change that because I think it's more fair to make sure that the people decide, and we don't have these behind closed doors.
Are you waiting for an? That was Congressman Andy Kim on Balance of Power about a month ago, talking about the practice known as the line, a system that organized candidates on ballots by endorsement from local party leaders, giving them what some called an unfair advantage. Kim challenged that system in court and won. He's also now the frontrunner for the Democratic nomination for Senate there. As New Jersey residents vote today in their state primary, along with a few other states that we're tracking, and joining us for more on today's primaries, Aaron Covey from the Cook Political Report. Aaron, it's great to see you. I wonder if you feel strongly one way or the other about the way ending the line might impact results in primaries in New Jersey. The idea here is that it might help the little guy, but when you look across the races that are at hand this evening, what's the impact?
Yeah, well, thank you for having me on. I think this will be a really interesting test of kind of the impact of machine politics in New Jersey post the death of the county line. For Andy Kim's race, obviously the First Lady Tammy Murphy was running against him for the Democratic nomination initially. Since she dropped out, he doesn't really have a race at this point. But there are some interesting congressional races happening further down ballot that could be a test of the strength of machine politics in New Jersey. So you have Bob Menendez's son, Rob Menendez, who is running for election in New Jersey's 8th district. He's facing a challenge from the Hoboken mayor there. You also have an open seat in the 3rd district, which is the one that Andy Kim currently represents. And I think both those primaries will be tests of the impact of the machine politics in the state.
Well, Aaron, I'm glad you brought up Rob Menendez because, of course, the father, Bob Menendez, is currently on trial for bribery charges. He announced yesterday that he'll be running for his Senate seat again as an independent. How could the sins of the father affect the son in this primary?
Yeah, that's what everyone is asking. So I think that if this were the situation, his son would be in a much safer position. He easily won the race for this open seat. last cycle after his father basically cleared the field for him. And so he's never had to run a tough election before. So this is going to be a really interesting test of this. He is trying to kind of separate himself from his father as much as possible. You'll see in campaign signs, he has his name Rob in bold, all caps, where Menendez is in tiny font underneath. And he is attempting to attack Bala, the mayor, and accuse him of having his own ethics issues. So this is clearly that his father's situation is clearly going to be the main storyline of the race. But I think the folks I've talked to in the state still think that Rob Menendez is favored to win, even though it could be pretty close.
That's the Rob campaign, not the Menendez campaign. How about his father's independent run, Aaron? I know that there won't be anything determinative in this primary tonight, but he's apparently running this campaign as an independent without a staff. Is this real?
Apparently so. He's apparently secured enough signatures to get on the ballot as an independent in New Jersey, which has a pretty low threshold for that. You know, I think a lot of folks expect that this is just kind of a way for him to be able to still raise campaign funds as he is currently on trial right now. I don't think this is going to have an impact. I think Andy Kim is poised to win the Democratic nomination and will be in a strong position to win the general election in November.
All right, so Menendez is still on trial. That's ongoing. Meanwhile, another trial we've all been paying a lot of attention to has wrapped up, although the appeals process and sentencing has yet to come. That, of course, being the trial of Donald Trump in the hush money case, where he was convicted on all 34 counts of falsifying business records. Aaron, how do you expect that to trickle down the ballot when we consider even vulnerable Republicans who represent states Biden won, or districts Biden won in 2020, are embracing Trump and his messaging around the verdict and the idea that this was all rigged and unfair and a weaponized justice system against him? How do you see that impacting, say, the odds of Republicans being able to retain control of the House?
Yeah, so it's hard to say. We're still 5 months out from the election. Early national polls have shown, I think, like on average, a 1-point shift towards Biden at the presidential level. But, you know, that could fade, that could increase. We don't know what's going to happen. But I do think it's telling the way you've seen vulnerable Republican incumbents in the House respond to this verdict. The majority of Republicans who are in competitive elections, according to our ratings, have come in to defend Trump and dispute the results of the verdict. Meanwhile, there are a couple of members who are staying quiet, and I think that's because a lot of these Republicans are running for re-election in districts that Biden won in 2020 and that he is likely to win again in 2024. So they're in a difficult position. They have to be able to retain crossover support from Biden voters, but they're also going to have to not anger their base so much because they also need the base to vote for them in the general.
We're going to be watching for the protest vote. It's been kind of an ongoing thread here through primary season since Donald Trump became the presumptive nominee. Same for Joe Biden, for that matter. Aaron, if we start seeing higher numbers for Nikki Haley tonight, do we read into that as a post-verdict effect, or is that just part of this campaign?
Yeah, that's a good question. So Nikki Haley is actually only on the ballot in New Mexico tonight. There are a couple of other states that have primaries, including New Jersey, but she is the only one who is on the ballot in the states that have presidential primaries in New Mexico. And so that's really going to be the only test. I don't think we can read too much into those tea leaves, just because in general it is difficult to draw strong inferences from primary protest votes and how that will play out in the general election. A lot of times that doesn't mean that voters are abandoning their support for one candidate. It may just mean that they're registering their frustration in the moment. So we'll see what happens in New Mexico tonight.
Yeah, we'll all be watching for what the margins ultimately look like. We know, to Joe's point, that there's also been a great deal of protest voting against President Biden. We've seen that showing up specifically in protest of his policies around Israel and the ongoing war in Gaza. But we know his problems don't end there, Aaron. He also has had a very big issue with the border, something he tried to address today with this executive action. Do you think that actually will translate into more voters for Biden come November, or is he actually potentially just losing more progressives or Latino voters who aren't going to be thrilled with this action?
Yeah, it's a good question. And, I think with Latino voters, I want to mention that there is definitely a wide range of opinions in terms of how they view immigration as an issue. They're not a monolith. But yeah, Biden is at risk at certainly of further kind of endangering his support from progressives. But I do think that this is something that a lot of vulnerable Democrats in Senate races and in House races were calling on Biden to do. Just because they have seen border security be a number one issue in their races coming up, and being able to point to the Biden administration responding to it will be helpful for them. So I think this is certainly helpful for Democrats in down ballot competitive districts. But whether that will be offset by loss of support from progressive voters, too soon to tell, I think. But I think this was definitely something that will be helpful in terms of Democrats' ability to take control of the House and their ability to retain control of the Senate.
Erin, it's great to see you. Come back and join us again soon. Erin Covey with us on Balance of Power. Coming up, we'll look at President Biden's executive order we're talking about here on border security and how it could impact the campaign as we add our political panel coming up next on Balance of Power on Bloomberg TV and radio.
I'm Alex Rodriguez. I'm a former New York Yankee and played professional baseball for over 20 years. Almost that entire time, I was thinking about business.
And I'm Jason Kelly. I've been a business journalist at Bloomberg for more than 2 decades. And across my career, I've covered everything from the Olympics to Wall Street.
From Bloomberg, this is The Deal. Each week, you'll hear us in conversation with business icons.
This show will explore deal-making across sports, media, and entertainment.
This is very fancy for a podcast.
If I knew what it was going to be, I'd have put everything I had into it.
I get asked more about our relationship than I do my wife. You know what I'm saying?
This is a show where we talk with big-time athletes and executives about the wins, the losses, and lessons learned along the way.
This show is called The Deal.
The Deal.
The Deal. The Deal. That deal. The Deal.
Huge deal.
Who dug this up? What are y'all in trouble?